inflation with 10% top line growth. Those things don't happen at the same time.
Adrian, I wonder when companies are trying to mount this turnaround, especially with all these headwinds, be it locally with their innovation or the macro headwinds, how important it is at who's at the top. And I ask this because Nike, new CEO just last year in October 2024. This week, the discussions around Lululemon with an exit of their CEO and Elliott pushing for a new one from Ralph Lauren. Adrian, can these changes happen if you have the old guard at the top, or for apparel and consumer-facing companies struggling? Do they need to have a rethink of their C-suite in order to succeed?
Absolutely. It's one of the things that we're learning through all this tumultuous time, right, for the past 5 years, frankly, for the past 10 years. We've had the digital economy. We've had COVID. We've had, a supply chain, right? The supply chain was stuck for 2022. So you've had inventory issues, supply chain issues, everything. And what I would say is the guiding factor for investors and for us as analyzing companies is you are investing in the management, and you are investing in the confidence that they can navigate each one of these successively, even though they don't know what the next shock event's going to be, that they have the wherewithal to do that over time. So absolutely. And the final thing that I'll say here is what you're looking for in that management. In consumer retail, you are looking for product, brand, customer experience. Those are the three things you want to hear the management's talking about. And you hear that from Elliott Hill at Nike. You hear that from the new Gap CEO, Richard Dixon. And it's no surprise that you're starting to see some of those changes happen at those companies.
Adrian Yee, Barclays, thank you so much for being with us. Tom Kennedy, a final word here ahead of the CPI and jobless claims. What do you think we're going to be most surprised about heading into 2026? The resilience of the consumer, or the consumer falling off?
I think we'll be surprised about the resiliency of the consumer thanks to the big, beautiful bill and the rate cuts coming through. I think consumer will be resilient. I think the things we need to be looking out for are how persistent can this tariff-led inflation be? The Fed's banking it won't be. It's going to be a one-time shock. So we need to look for that, and then really think that the K-shaped economy will close a little bit in a positive way, where the bottom end comes up. I think that's the most likely outlook for 26.
Tom Kennedy, it is a pleasure having you here. Thank you so much for spending the hour with us. Let's do it again sometime soon. Tom Kennedy of JP Morgan Asset Management. Danny Berger, I believe you're doing 45 hours of TV today, so we're going to let you go prepare for the rest of it. Always wonderful to see you, and great interview with Ken Griffin earlier this week. Really interesting. If you haven't seen it, check it out on YouTube or the Bloomberg website. Coming up next hour, as we do await that economic data, Emily Rowland of John Hancock, Seema Shah of Principal Asset Management, Aaron McLaughlin of the Conference Board, and Brent Schutte of Northwestern Mutual. This is Bloomberg Surveillance. Good morning.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets closed to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We have two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
There are a lot of tailwinds supporting the economy for next year.
You do have to see an economy that keeps chugging along. If it doesn't, you're going to have a problem.
One of the key themes that we've noted for this year is people really underpricing kind of the
Yeah, what's up? It's Rock. Listen, I'm packing it up and bringing it out west, so get it together.
Cowboy style?
Yeah, cowboy style.
Need to rewind myself.
Cowboy.
Well, I'm packing up my game and I'ma head out west, where real women come equipped with scripts and fake breasts. Find a nest in the hills, chill like Flint. Buy an old drop top, find a spot to pimp. Then I'm a kid, rock it up and down your block with a bottle of scotch and watch lots of crotch. Buy a yacht with a flag saying chillin' the most. Then rock that jumping down the coast. Give a toast to the sun, drink with the stars. Get thrown in the mix and tossed out of bars. Sip the Tijuana, I wanna roam. Find Motown, telling fools to come back home. Start an escort service for all the right reasons. And set up shop at the top of Four Seasons. Kid Rock and I'm the real McCoy. And I'm headed out west, sucker, because I wanna be a cowboy, baby.
With a top left back and the sunshine shining.
Cowboy, baby.
West Coast chillin' with the boom.
I wanna be a cowboy, baby.
Riding at night 'cause I sleep all day.
Cowboy, baby.
I can smell the beat from a mile away.
I bet you'll hear my whistle blowing when my train rolls in. It goes like dust in the wind. I once was lost, but now I'm just blind. Palm trees and weeds, scab knees and rice. Get a map to the stars, find Heidi flights. And if the price is right, then I'm gonna make my bid, boy, and let California ain't know why they call me a cowboy, baby.
With a top left back and the sunshine shining.
Cowboy, baby.
West Coast chillin' with the boom flying.
Be a cowboy, baby.
Riding at night 'cause I sleep all day.
Cowboy, baby.
I can smell the
Technical. It's been about momentum. If a chart's going up, investors are buying it. And that's pretty tricky for people that are focused on fundamentals and economic cycles like we are.
All right. Good morning, everybody. We need a red candle for uranium. I did get in on that short earlier. I'm actually gonna, if we get another bloop up, I'll get in up here on it because I think this is gonna roll over.
Order submitted.
Seems like something again
So if we get a bloop up, I'll get back in.
Oh,
did I go long?
Last year. Is there a lesson to take away
Order
from that?
Is that green?
Moving into something like
Yeah, I mean, it's a reminder that AI is real. It's
Order
producing
submitted.
productivity enhancing technology, which is really accretive.
Oh
for
man,
corporate earnings
I should have
and
held my
for
runner. Here you go,
the
uranium. Here's your red,
challenge again
red
is that
candle.
Tech is overconcentrated, it's overloved, it's overbought at these levels. Tech kind of reminds us of like, it's been such a big driver for portfolios.
Yeah, I knew that.
You know, the
Order
S&P
canceled.
500's
It looked just like it did
compounded 20%
yesterday.
Annualized over the past 3 years. So goes the S&P, so goes tech. It's kind of like, do you ever have one of those like go-to outfits in your
Volume's picking
closet?
up. All right,
We all
guys.
have that
How you
inside
doing
our
this
closet.
morning?
Lisa, yeah, I think that tie.
Let's get this day going. All right, you getting paid uranium already? What's up, brother? Hey, Hyde, how you doing, man? Good morning, forecasters in trading. Vietnam. Please do this for me. It's $67.95. We're trying, man. It's running, dude. It's running. I got in on it earlier. My trade copier wasn't working, so I reset it. I should have just put another trade back on. You got your trail on? Because we could bounce off the 20 EMA or the 200 here. We could get a bounce off the 200. Man.
You'll forgive me. You sounded a lot like the president last night, talking about what's to come in 2026.
Yeah.
Just so you know.
The one big beautiful bill, the tax incentives that are coming into effect, maybe more certainty when it comes to the economy based on the trade policy. How much of that is being communicated?
All right, so we got news in 7 minutes, guys. We got ECB rate statement. Was that England bank or Canadian? What bank is this?
Well, sentiment data just
Who is
again,
this?
hasn't
European?
been helpful. People are saying that things are terrible.
Euro
yet
rate
consumers
statement.
Continue to buy. You know,
Rates
we
are
saw
low
that
over there.
retail
Holy
sales
shit.
Being pretty decent. We're seeing this incredible wealth effect. That's the
And then we
thing
got
that's driving
jobless
this
claims at
market.
8:30. So we got good news this morning, guys. We got good news this
returns.
morning.
In 23 and 24, we're on track for 15+% returns this year. That is feeding into portfolios and helping that higher end consumer who has a record amount of stock holdings right now.
Okay, we got the bounce
feeding
off the
back into
200. I
economy.
was
So
afraid
it's
of that.
almost like the stock market is like the tail that's wagging the dog of the economy right now, which is a twist on the way
Probably
that
get
we
in
used to
on the
think about
NQ
things.
for the
So
short
I
if
think
we
that's
touch
really
the
helping
200
overall
EMA.
picture, even though people
Probably
are
get
saying
in.
that things aren't great.
Which is the reason why people are so focused right now on the
Set a
CPI
limit there.
and the
I'm gonna
idea
watch
of
the
what the
ES.
Fed's going to do with this. How much leeway do they have?
Well, we got news
to
coming
actually
out.
Engage in some sort of rate cutting cycle, and really the proof is going to be in how much inflationary pressure there is. You have been overweight.
I don't know how much of an
for a lot
impact this
year.
ECB
You
rate
have
statement's going to
believed
be.
in this bond rally. Are you pulling back from that?
Hey, how's the volume mix uranium? Is it good? Can you hear
To the financial
the Bloomberg
conditions
okay when I'm
aspect
not
of
talking?
This entire story, as you were just laying out.
We're actually leaning into bonds more as rates back up. It feels right now like bonds are sort of like dazed and confused. They're not acting right. You know, you have them being kind of jerked around by what's going on in Japan right now. You've got this sort of Fed chair bingo, like which Kevin is it going to be? That's impacting bond yields. You've got all sorts of dynamics. The lack of government data. Yes, we're going to get CPI, but a lot of people are just going to discount it.
I get a mic check. Mic check 1 2 1 2 1 2.
October data. So bonds are sort of backing up, and the bond vigilantes are coming in with concerns about the deficit and the one big beautiful bill. The bond vigilantes kind of feel like that uncle.
Did you scale? Did you scale down? Adam Ski, how you doing? Ballistics, how you doing, man? DF1, how you doing? Fairy King, how you doing? Hyde, Lottie off over in France, how you doing, my friend? Scotty.
Reclaiming their haven.
Where's Scotty? Scotty. Stocky Gambit and uranium. That's everybody in the chat. Good morning, everybody.
The top 10% of earners.
Yeah,
are
good
doing
news.
well, and they're controlling, 50%
We're about to
of
see.
spending, but we've got some real.
Did you scale out of that? Juju. What's up, Juju? How you doing?
Completely brushing past this, these negative months that
We're
we've
waiting
seen
for
in
this
terms of
news here in
non-farm
5 minutes.
payrolls, I think that's
Hey, what's the
important. Layoff
ECB?
tallies are picking up significantly. But the thing that I don't think
I guess
people
I
are
could
talking about
Google it
enough
real quick.
is the housing market right now. Shelter's 35% of headline CPI. It is weakening notably. Not according to the BLS data. That's probably really
It's Bank of England, isn't it?
But if you look at Zillow, for example, home prices are flattening. They're up about 0%. Apartment List is telling us that rental prices last month just dropped the most
European
on
Bank,
a
that's what I thought.
month-over-month basis in 15 years.
All right, that's the euro
Negative
rates
1%
coming
on
out here.
Listings. So
See what our
we're seeing
Lilu
is that
specials are.
Shelter disinflation, we think that starts to show up into next year.
Yeah,
Those
that
layoff
I was
tallies
gonna mention that the other day, and you didn't show up. The weed stocks are coming back.
So I think the labor market's
That whole industry, it's being talked about more on different news
and that
feeds.
shelter disinflation is also going to
So it's becoming a thing now.
more than the bond market expects next year.
Weed is coming back.
Thank you so much for being here, Emily Rowland.
So get ready, Juju.
Investment Management, and I will not be wearing this blazer. Next time I talk to her, I love it. You know, I've got to say.
Are you looking to just to break even, or are you looking to make the retirement? The retirement check on this one.
Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa.
I'll tell you what, you want to keep my dad alive as long as humanly possible, because that man can smoke some weed. Oh shit! All right, I'm short. I'm short at the top of that zone on the NQ.
The president also planning, quote, the most aggressive.
All right, so if you guys want some prop firm accounts, 119 each for paid, straight to paid, 150K.
New hate speech laws in the aftermath of the terror attack that saw 15
And I think if you get,
celebration in Sydney.
what was the
The
deal?
laws include a new offense.
Oh, if you get 3, it's 100. So you could get 3 straight to paid accounts for 100 each. If you're interested in that. So we got 2 minutes till ECB rate statement.
Pressure on Caracas, President Trump ordering a blockade this week of sanctioned oil tankers going in and out of Venezuela. And according to data compiled by Bloomberg, the move is helping to push inflation in the country over 500%.
And then we're gonna run into the CPI numbers.
It opposes, quote, unilateral bullying. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, the ECB set to make its final interest rate decision of the year. Seema Shah of Principal Asset Management with us to break down the results. After what we got from the Bank of England, a rate cut. Don't expect.
All right, minute 26, we're on the countdown. Let's see how the European rate statement's going to affect the U.S. markets. We'll know here in just a minute. I got in at the top of that range. Trade copier's working this time. "41 seconds till the news drop. We're gonna keep this under control. If we make a new high, I'll get out. See if we continue our downward grind that we've had going all week.
From the world of politics.
All right, 10 seconds till the news. Market's getting froggy on this news here.
Analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, news is out.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely
Interest rates 2 points stayed the same, stayed flat.
They said
interest rate stayed flat.
should be investing in the market.
Accelerate progress in all fields of science.
15 minutes, yeah, no change.
More than what you need
No
to
change
know,
on the rates.
what you need to think about.
Key
investors, top executives.
Yeah, they're already at
global
2%. I mean,
innovators.
Jesus, how much,
Join me
you
for
know?
in-depth conversations with the biggest newsmakers on the day's
That's
top
free money,
stories.
really.
Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Bloomberg Surveillance. We are getting an ECB rate decision. They voted.
I'm probably
to
going to get
hold
tapped out of
rates
this
steady,
position.
saying they're not pre-committing to any
I don't
kind
wanna-
of
I don't wanna
rate
hold it
cutting
any further.
path. They're looking at data dependency, meeting by meeting, keeping the deposit facility rate at 2%. That was the estimate. Let's get some details from that decision. Jamie Rush of Bloomberg Economics here with the results. Jamie, when you parse through all of the details, what stands out to you?
Well, I think it's more about what is it that the Guard's going to say at the press conference about the outlook for inflation.
All right, so 15 minutes, we have U.S. initial jobless claim.
Of course, they have
We got
held interest
CPI.
rates steady. That was widely anticipated. The question now is, what is the next move?
We have
Is there any
CPI,
room
we
for them
have-
to cut? Do they see more space to cut, or are they going to endorse Isabel Schnabel's?
And then that's going to be all the news we have. So 8:30, we got news. We're already getting the push up, so must be everybody's anticipating really good news.
About the near-term policy outlook.
So let's see if we get a face ripper on the news.
Talking about economic growth accelerating next year, raising their economic growth forecast to 1.2% for 2026 in the Eurozone from 1%. Granted, it still is 1.2%, not necessarily 2 or 3% that you see.
This was
in
just a
other
liquidation
regions.
candle
Nonetheless,
here.
How much does that indicate?
That was just a
this
liquidation
focus on
candle.
inflation that you did talk about with Isabel Schnabel discussing?
Well, I mean, the key thing here is that growth, as you mentioned, is still slow.
So let's see what we get.
Potentially even below the trend growth rate of the economy, or very close to it. And of course, it's not guaranteed.
15 minutes. All right, I'm going to be back in about 2 or 3. Job claims going to rip some longs. I think so too. That's why I was trying to sneak a short in there. That's what I think, but I'm not going to get in again. I had the strategy came on, and it said it was okay to, so I tried to take a conservative entry to try and feed the bias, but didn't work out. It's okay. But I didn't break my strategy rules. They came
I
on.
would say that it's not a settled matter that the ECB has left rates today at 2%. There could be more to come in the year.
So that's okay. All right. I'll be back in just 2 minutes, guys.
Thank you so much for being with us.
And then we'll get
Right
this
now,
day
we do
going.
see
So
a
just be
market
careful. If you're not in a
doing
position
back
now,
from
you need to
earlier
really be
losses
careful about
flat
what you're
with
thinking
the dollar,
about.
and you are seeing muted moves across the
Because we
board.
could
What
get
stuck
some,
out-
we
stuck
could
out
get
to
a
me is the
candle.
fact that 2026
We
inflation
could
is
get a
actually
candle that'll
projected
wick up to this zone here and then head back down to the 200 or vice
still well
versa.
below
So
that
you don't
10%
know.
goal.
So
David,
if
it
you're not
doesn't
already
seem like this is
positioned with your
screaming
break-even
inflation,
set,
even
then
as they do upgrades
I
their
think
growth
I'd be careful
forecasts.
getting into it.
Absolutely.
That's what I was
think
trying to
that
get
the
in
information
early
you were
on
saying
it.
a moment ago, I think we want to get more insight into what this good place.
But
as
didn't work
Christine
out
Lagarde
for
has called
me.
it, looks like
That's
we should see
okay.
it shaping
All right,
out
I'll be
over
right
the
back,
course of
guys.
these next few months. Then, just going back to those comments from Ms. Bill Schneider, hard to understate how seismic the reaction to those comments was. The prospect that there could be a rate hike here in the near-term horizon. Again, her relative comfortability with that, I think, is something that we're going to want to hear more about from the president of the ECB when she speaks in a few minutes.
Yeah, let's talk to Seema Shah, Principal Asset Management, who joins us now about just that. Seema, thank you for being with us. We are seeing some forecasts here that are interesting. When you take a look at the ECB's projection for 2026, inflation, stripping out food and energy, they now see it 2.2% versus the expected 1.9%. How much is this an ECB prioritizing inflation above potentially allowing growth to truly accelerate in the Euro region?
Hi, Lisa. Yeah, I think this is key. I mean, look, the ECB, unlike the Fed, is going to be solely focused on inflation. That is their mandate. So they're going to put a little bit more emphasis on that. And so to the point that, yes, growth is certainly looking a little bit stronger next year. There's been upgrades throughout the year. In fact, unlike the US, where you've seen consensus forecasts drop since the beginning of the year, European forecasts have actually increased since the beginning of the year. So there has been an improvement. Their sole focus, though, has to be on inflation, which means that they're likely to keep, at least I think Lagarde is likely to maintain a slightly hawkish narrative, but I don't think that she's likely to kind of reinforce Schnabel's comments about the next move being a hike.
Won't reinforce them, but I wonder how she addresses them effectively. So we've seen kind of the moves since those comments were made in that interview with Bloomberg, and I think just the fact that they exist, that specter kind of looms large here over the shadowing itself over the course of this meeting is significant. What does she have to say? How should she address? How do you anticipate she's going to address those comments?
Well, I think she's going to allude to the significant uncertainties that there are about the outlook. You know, as we've heard her say before, they feel like they're in a good space. Good space being that they have managed to navigate this year's various challenges with regard to trade tariffs and managed to get to a spot where they feel like growth can be stronger next year without really suffering a major inflation shock. So that's a good space. What that implies is that they have the time, the patience almost, to sit it out and see how the economy responds, how inflation responds. So if anything, we do think that Lagarde is likely just to keep the door open, not really promising any kind of forward guidance, but just talking about almost the data dependency and seeing how inflation, above anything on the economic growth or labor market side, but how inflation expectations evolve over the coming months.
You'll forgive me for going back to growth, but I heard Jamie Rush characterize it as tepid growth, and talk about all the uncertainty that Europe is facing. Certainly so many economies are facing right now. Yet if you look at all of these forecasts in aggregate, I think of OECD, IMF, World Bank, ECB now, even comments from the Federal Reserve that are rosier than they had been, there is this sense that things are improving and getting better. And I wonder how you square that with this overarching uncertainty that still looms large here. If it has to do with tariffs policy, if it has to do with fiscal spending, there's still so much that we don't know here. Given all of that, Seema, how much credence can you give to the forecast, the likes of which we see today?
Well, so the improvement in the forecast is something to do with the idea that, look, Europe hasn't been as badly hit by trade tariffs in 2025 as expected. And so some of that is expected to follow through to 2026, and some of the concerns that existed just after Liberation Day about Europe potentially being hit by a 30% trade tariff have faded, of course. So that's one thing. But I think the main reason that you've seen these upgrades to forecasts is around the fiscal stimulus, which is going to be coming through. Now, the uncertainty around that still exists in terms of what is the allocation of that fiscal spending going to be, how much does it feed through to the economy, but just the size of that fiscal stimulus is enough, I think, to lift economic growth forecast by a bit. But to your point, these are still quite small upgrades. This is still growth, which is expected to be meaningfully less in the US. So you don't want to get too excited about it. But certainly there does feel like there is a little bit more optimism than there used to be around the European story.
But is there a broader takeaway from central banks globally that see the fiscal impulse and are not shying away from either rate cuts or holding rates steady because they want to allow growth to take off? Does that make you more inclined to buy the equity side of the story than, say, the fixed income side of the story, because there is this focus on growth?
Absolutely. You know, I think the equity market story has become more attractive for a lot of places. Of course, you've got to take it into the valuation side, but the fundamental stories for a lot of these countries have improved. And you can see a significant disparity with the countries which haven't really embraced that fiscal stimulus. And the UK is a perfect example where they have continued to tighten fiscal policy. And you've seen that equity markets and general investor sentiment towards the region has deteriorated, whereas it has improved for Europe. So I think that is a key narrative.
Hey, Adam Ski over on YouTube. How you doing, man?
There could, of course, be the ramifications
How you doing?
for the bond market and how yields are going to be performed.
Oh, I didn't see a European Central Bank, I think.
A lot of these countries
I didn't see you over there.
Because of that fiscal story.
Are you? If you're still over there, I'm here. Good morning.
Narrative is taking hold, certainly in the United States, that you can have growth without inflation. You can have a productivity-led growth that's going to allow.
All right, we got Adam Ski over in the YouTube.
Potentially keep cutting while growth is powered by the AI
The YouTube chat.
How feasible is that?
What are we looking at? We're looking at the ES. We're waiting for the countdown to 8:30 CPI.
Well, I think it's a narrative which is important, but I don't think it's specifically.
All right. Is anybody in a position now waiting for the open?
Europe, the concern isn't really around what the deflation.
See, this is what a bias will do. I have a bias to the downside. That's why I took that position right about where the price action is now, roughly. And then I wasn't going to let it run any further than what it did. But my bias is to the downside. And if I let that bias take over, like my whole mentality, I'd be getting a position right now to the downside. And what does my chart say? I got a green forecast cloud. The control EMAs are in a long setting. I don't have a forecast box on. So I would be breaking like 3 rules, like my main rules to take a short position right now. So that's what a bias can do to you. A bias can make you ignore everything you've built to try and control your entries and your losses. Now, when I took that position, the trade box was on in a short condition because of these 3 candles. So I was like, well, if it bounces back above the 20 up here, that's comfortable for me. I'll sit there if I can and wait through the news. But it didn't happen. So, but that's what a bias can do. A bias can make you say, well, I'm going to, you know what, fuck it, I'm going to build a short position.
Absolutely. It's fun to look at all of these in compliment because, of course, you had this Bank of England meeting on the
and everything says long. So you don't know what's going to happen when that news drops.
The degree to which inflation's weighing on the CCB decision, I don't know. It's fascinating.
But if you can be in well ahead of time and just set your stop to break even, then then worst case you break even. Best case it runs your way and you hit your take profit, or at least you start the day out on the trend. You can make a month's worth of income. You can make a month's worth of income if you were to control your risk, but try and get in at the very beginning of the trend of the day. But you can't do that and let yourself get chopped up. You know what I mean? You catch one of the, if I do that, I took a small loss. If I was on micros, it'd be a $57 loss. So you got to remember that micros, it's only $57. I'm working minis because I got a 300K PA account and I can run that. But if I manage to break, not bust out of that trade break even and then it starts running down, well, I got a position that I can hold through, all the way into the open and see if we grind down like we did yesterday. That could be a $3,000, $4,000, $5,000, $6,000 trade, easy. But you gotta stay in the game to be able to get it. You can't let yourself get chopped up. You can't let bias take over. You can't let all these crazy things happen while you're trying to get yourself in a position to be able to do that. All right. Has anybody got anything set up for the open? What you guys got out there? Uranium's got to. I like your charts that you post in the. I like your charts in the Discord, Uranium. You got a good plan. You got a good plan, and you're staying in the game. You know what I mean? That's what's important. If you're not in the game, you can never figure it out. You got to keep yourself in the game. Just ask Juju with her weed stocks. Hey, Juju, are you in the weed stock game still? She's still in the weed stock game. And weed stocks are coming back.
Retail, entertainment, the business of sports, the supply chains, trade policy, how it all is impacting the U.S. equity market.
Gotta stay in the game, bitches.
Closing bell at 4 p.m.
A holistic approach to covering financial.
All right.
We're covering it. I'm Katie Greifeld.
What we got? All right, 1 minute till news, guys. 1 minute till news. We're on the countdown. We're on the countdown. Here we go.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Here we go, here we go, here we go again.
Under surveillance with crucial data and expert analysis at terminal
35
speed.
seconds.
Nobody covers jobs day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
10 seconds, guys. 10 seconds till the news. Here we go.
Weekdays around the world, right here
Boom.
on Bloomberg.
Got a Shrek. See, my bias would have crushed me. My bias would have blew my account. Holy shit.
points away from that key economic data coming to
Initial jobless claims are down. Initial jobless claims are down. CPI is down. This is all really good news, guys. Shit, this is really good news. CPI is down. Let me take my center off.
Down 4 basis points on the 10-year to 4.12%.
Holy shnikes.
Key inflation data coming out of the United States. Just crossing now. Let's head over to Bloomberg's Michael McKee with the numbers. Mike.
Holy shnikes, Oliver. May I please have another?
Because the news is pretty good on a 2-month basis.
Was anyone long for that? Because if you were long, you got paid.
For the year-over-year move in CPI.
No, it's not enough, but it don't matter because all we need is some action to make our money. It doesn't matter if it goes back all the way or not. That's some action, baby. Action Jackson, baby.
On the jobs front, with initial jobless claims falling to 224,000 from 237,000 revised the week prior. On a continuing basis, claims are at 1,800,000.
I think I'm short here for the correction. Yeah, that was my plan. Look how good that would have worked out for me. I already spent $500 on the.
Coming out now, the business outlook falls to negative 10.2 from negative 1.
CPI rises 0.2 over.
Index falls though.
How did CPI rise?
From 56.1. Employment at 12.9 versus 6.0. So pretty much all of these numbers are better in terms of their trend. We'll break down what
they're better than the trend. That's what I thought.
While you break down what the markets are telling us.
Well, right now, Mike, the markets are cheering. Well, we'll get back to you in just a second. Right now, this is a collective.
Are you in a position already, Hyde?
Wall Street, because what you're looking at are yields substantially lower across the board on 2s, 10s, and 30s, and you're seeing equities with a lift. This is giving the green light to the Federal Reserve to cut interest rates. You can see that rally building at the front end now, down more than 3 basis points. The equity front, take a look at that rally, turbocharged, particularly for the Russell 2000. It had been up about, less than 1/3%. Now we're looking at more than a 1% gain, a similar move on the NASDAQ. S&P futures up by 0.6%. When you bleed this through the currency space, we did just.
It takes forever to get back to you, man. If you got an issue,
could be cutting
it's been
rates,
2 days.
$2 weakness, as you would expect. Michael McKee, you've had a couple of seconds to look through.
All right, so that's our news.
Really,
everything is above the average. I mean, I thought it looked good.
One thing that is important to note about this is that October and November, there's no October data, so we don't have the month.
I'll tell you what, though, Michael McKee, people care about what that dude thinks, or what he reads off the screen. People care about what he reads off the teleprompter. All right, he's short. All right, Hyde's gonna short for the correction. How you doing, uranium? Did you live through that Shrek? Did you live through that? I know you were short.
Up just 0.3 in November, so an improvement there. Most of what we're getting is year-over-year numbers, and we can say that food, 2.6% was the increase on a annual basis there, and food at home, the grocery prices people are unhappy about, up 1.9%. So some improvement in inflation in all of these areas. I'll continue to dig into this as we figure out what really
3:30 to 4:30. I got my team meeting today, and they want us to wear an ugly sweater.
I do think the line items are going to matter more than usual, in particular.
And talk about how great of a year you had with Intuit or my company.
Yeah, and just kind of what the use or utility or veracity of all of this is, I think is going to be an open question.
A lot of people aren't happy.
Maybe this gets colored politically over the course of the day, given the lapse that we've had.
I'll give you a hint. I'm watching Truth Social for cut rates now.
Some reaction there, market reaction on that.
Yeah.
Yeah,
I hope he's okay. I hope he wasn't naked.
Aaron, how should we view this in light of everything that we've been talking about with respect to the company?
Because he did have that short. He did have that liquidation candle down. He did have that candle down to the 200. He caught that. He was in a short here. I got a piece of that little one.
And that's important. I think
for like $100, but
anticipating a possible cut in January, once the employment.
Yeah. Just show up naked. Yeah.
And we have some.
Yeah, I don't think I'll be doing that.
Which we didn't necessarily get with the employment.
They may not get it.
Due to the shutdown, due to the blip over the last couple months. So
they may not get it.
Certainly support that theory a little bit more.
There's not a
when
whole lot of
folks are
sense of
thinking, well,
humor
how many
going on.
cuts are we going to get next year? I think that's the big question, is what does 2026 really look like?
Well, and
Not a
also,
lot of
how
sense
much
of
are you
humor
seeing
happening.
some of this disinflation, or not disinflation, but this idea that we're not seeing
All right,
inflation
so
go
are we
away?
going to
How
correct
much are you
and
seeing that
grind down
reflected in
again
sentiment?
today?
Because this is what David was sort of referring to, this idea politically there is a response to inflation that has been cumulative over 4 or 5 years, not necessarily a disinflation, right? So how much is this actually being felt?
Well, it's not being felt yet. So our latest consumer confidence numbers at the Conference Board, that is one of the main things that we do, has really moved sideways, after a drop in April, after Liberation Day. And then it did proceed to drop further in November. And so, and that was sort of on the heels of the government shutdown. And obviously, even within public policy and elections, the concepts around affordability are still being discussed. For American consumers, food costs more, insurance costs more, housing is still, double what it was 7 years ago. And so in medical costs as well, which I don't think we spend enough time talking about. So those really big costs are still weighing on the consumer.
I think that the president's going to like the collective scream of joy in markets that you mentioned a moment ago. Yes. But I think you're getting at something really crucial here, and we saw it during the last administration. That is, the data can be good or trending better. The White House politicians can tout that fact, but as you well know, sentiment is so crucial here, and it's hard to kind of make that up if people aren't feeling great about where things are and where they're headed.
Right. Your average American consumer is not necessarily paying attention to today's number, and they're paying attention to what their insurance costs are, how much it costs to buy a car. We've noticed that the average price of a new car is now over $50,000, and people used to take out 5 or 6 year loans on a new car. They're taking out 6 or 7 year loans on a new car. So it's just sort of these big decisions that consumers face, and also the small decisions at the
All right, so it looks like we found some resistance in this fair value gap up here, guys. So this may be where we push sideways until the whales decide if we're going to go higher or lower today. All the news is in for the day now. All the news is in for the day.
Data for the last couple months. We also saw that a lot of the data that we saw most recently was due to the government shutdown and due to folks in the government workforce perhaps exiting at the end of that federal year at September 30th. And where we see growth is in healthcare and in some other industries. So I think it'll be really important to sort of look underneath the job numbers to see, if we're peaking at 4.6, what's growing, what's not growing, and then that will be able to tell us more about how next year is going to be.
Erin McLaughlin of the Conference Board, thank you so much for being with us. Really appreciate it. Brent Schutte of Northwestern Mutual Wealth Management joining us now. Brent, what's your first reaction to
I don't know,
the
it's
CPI
looking
print?
strong,
How much does it color how you see
but our volume is
investing next
tailing
year
down,
in the backdrop for the Fed?
I think it certainly helps the parts of the market that you mentioned before, small caps that have been harmed by higher rates. And so if you think about the economy the past few years, it has certainly been bifurcated, as has the market. It's been narrow, both in the economy and the markets, where you've had the heavy lifting done by a few stocks tied to higher income consumers and the AI theme. And I think as you look at 2026, we do see broadening, where you see small caps doing better, where you see the average S&P stock doing better. I think it's a risk management tool, but it's also in 2026 a return enhancement tool. So that's my first thought. My second thought is what's happening underneath in the economy when you see inflation pull back this much. How weak is actually demand? And you mentioned the labor market, which I think people are giving coast all clear because of non-farm payrolls being around 60,000, which I remind you, they were overstated by 70,000 in the data going through to March of this year. And the Federal Reserve Chair Powell mentioned he still thinks they're being overstated by 60K, so they are right around zero. And that's where I think there's some risks still that are out there.
Do you think that the market response, that if this gives the Fed the green light to cut rates, then that's positive for equities, is correct? Or do you think that it's coming more from the labor market weakness that you were just referencing?
I think it's positive for a broader set of equities. And that's where I think I come back to, no one knows exactly what's going to happen in the next 6 months. I think forecasting is always difficult, but there certainly is this odd kind of mix of policy that is out there. And I think you can see that through the Federal Reserve eyes, where if you had all 19 voters voting, it would have been 12-7 and you see those descents, and that's where I just think it's hard to figure out what's going on in the near term. But if I think about the long term, I do want to pay attention to valuation, and that's where I go back to those areas of the market that people have largely ignored. They haven't done as well because of the impact of higher rates. I think pushing forward in 2026, you have valuation with you, and you have potentially the impact of rising earnings in those
All right,
parts
guys.
of the market for the first time in a few years.
Brent, let's have some fun.
We're
here with
still grinding
counterfactuals.
up.
You've opened the door, so I'm going to drive my truck right through it.
So anybody with a short
I'm very
bias
curious if we'd gotten these data before the
that
last
said, I'm
Fed
just
meeting,
going to
how
hold
that
on because I
conversation
just
in the
believe.
Eccles building would have been
I
different,
just believe
if at all. I mean, we talked a lot about this being an insurance cut. There were certainly a lot of questions about whether the Fed should
that
move
I'm
then
going
or
to
wait
be
till
right.
January.
It's probably buying a new prop firm account right now. Probably buying a new
the outcome would have been different last week had Fed officials.
It probably wasn't that long ago
Potentially, but I don't think people's
that I would have. I'd be in that. I would have been in that category. That's how I knew to look out for it. I knew to look out for it is because I spent some money doing exactly that.
Return to 2%. The Fed's dot plot doesn't show it returning till what 2028, which is 7 years since. And this is where I think there's concerns about what happens next year when
is plowing
gets
up.
layered on. What happens next year when we get a new Federal Reserve chairman, and what happens longer term to help pay back some of that debt. And that's just where I think inflation probably still is the longer term outcome. And that's where I think the concern of some of those people on the Federal Reserve would not have gone away. Perhaps you would have swayed one or two more people. But I think there are still legitimate concerns and questions about, do we get back to 2% inflation absent some sort of economic contraction in 2026, which no one is pricing in right now.
Brent, the overlay here, of course, is this AI story. We've been tracking that day in and day out, all the ups and downs. Certainly, Micron, the latest kind of chapter in that narrative. We heard policymakers engaging more with this issue of productivity, what this is going to mean for the economy or could mean for the economy going forward. How are you thinking about that in light of what you're talking about here, the kind of the persistence of inflation into 2026, the challenges facing this U.S. economy going forward?
I mean, we'll see on the productivity aspect of it. I think companies are still trying to figure out how to use it to increase employees' productivity.
Did anybody do anything overnight? It looked like a slow grind up with not a lot of volume.
We're starting to see it move through different parts of the economy. So it started out in the picks and shovels, I guess, and now it's moving along to companies like Micron. I eventually assume it will do much like the internet did, which is increase the productivity and efficiency of all companies who actually use it. And so that's where I think you've seen winners and losers change. I think you will continue to see that in the future. And that's where I think anyone investing solely in AI right now or concentrating their portfolio in it is taking risks they don't need to be taking. Because I think there are opportunities as it continues to shift, as it continues to spread through the economy for those companies and stocks that have previously been left out to start benefiting from it. And that's where you saw this broadening in 2000 through 2007 that occurred post kind of the concentration in 1998, 1999, which is eerily similar to today, where a few stocks did the heavy lifting for a few years. People concentrated in those, unfortunately, and then the game changed going forward, which I think is what's going to happen as you push forward into 2026 and beyond.
We're talking as we do get that broadening out, at least in the initial price action this morning. If you are just joining us, we did get the CPI print from November, the first inflation read in the United States going back to September. It was well below expectations. Coming
all right, guys. I think that
versus the expected 3.1%. Core CPI, stripping out energy and food costs, looking at 2.6%.
I don't know. I have a bias to the downside, so for me, I'm thinking I'm going to be surprised if this continues up. If this is the actual trend for the rest of the day, that would surprise me. So we have the open at 9:30. Then there's no news the rest of the day. So Goldman Sachs expects bank to deliver interest rate cut. Bank of England.
1.4%, a similar gain on the Russell 2000. Brent Schutte, do you think that this is sustainable?
They're going to cut rates again.
Is this enough for what people need to see?
U.S. rate futures pricing 62 basis points of erasing next year after CPI data.
I think the risk is similar today as it was back then, which I think was a very mild recession. What impact does the potential market have on the economy? So usually I think of the opposite. I think of the economy impacting the
Actually,
markets,
this
so
is
it
all
takes
pretty
much heed
bullish
to it.
news.
But this time the markets are
I can see
trading
why
at
we're
a
going.
multiple.
This is all bullish
There
news.
is a lot of speculation that is still occurring with
I'm just a
non-profitable
perma
tech
bear, and I
stocks,
can't help it.
and all the other things that are out there.
But all this
And
news
this
is
is
actually
where
bullish for the market.
economy now is dwarfed by the market, which I believe the market is now 2.3 times the economy. Is the risk there that the AI theme starts fizzling out just a bit?
We're making a nice
That's where I
cup
think
and
today's
handle
news
from
is
the
good,
NQ
because I think it
yesterday.
allows other parts of the economy potentially to have some life. But that's where I think this AI theme is incredibly
What does that
important
mean?
pushing forward. And we'll see what happens as
What's
we
the
move through
cup and
day. If the
handle?
market holds these gains, I think it's a positive. But certainly over the past few weeks, you've had trouble holding it.
Does that mean then we pour it down? We pour it down our throat and it goes
Fred Schutte
it
of
goes
Northwestern
down?
Mutual Wealth Management. Thank you so much for being with us. Let's head
Oh, we
back
go
to
bird
the cues
topside.
that
Yeah, I'm
gave
starting to
to
see that now that I'm kind of
Mike, what
like
do you see?
digesting the news and everything
Well, I
going
think
on
so
here.
the most
It all
important thing
sounds
here is
bullish.
that
You know
we
what I'm
don't
saying?
have the monthly
All of it
numbers
sounds
for
bullish.
Almost all of the categories. This press release has a lot of blank spaces on it. So you have
You
to
listen
have a
to
year-over-year
too much
changes,
news, you can get
and
like
we'll have to
black
do some
pilled.
math to figure out maybe what it
Can't
is on a
understand how the world is
month-to-month basis.
even
But when you look at the changes
still spinning.
in some categories, they are good news. Food at home, for example, was up 2.7% on a year-over-year basis in September, but only up 1.9% in November. In the 2 months that we had
Rivian,
no data,
automotive.
they came back down again.
Are they a
goods
viable
prices,
company,
commodities,
Rivian?
Food and energy,
I see a
up
few of them around
1.4%.
here, but
That's down from 1.5%. And services up 3% over the 2 months on a year-over-year basis. That's down from up 3.5%. And finally,
hey, what's up, Sugar Rush? Yeah, CPI. It was all good news.
Prices, owner's equivalent rent.
Everything looks bullish.
3.8%. So all of the categories, all
Oh,
of
you
the
do?
categories that people watch are down.
You
on
believe
a
in them then?
year-over-year basis. So it looks like in October. And
What are they
November,
trading
we had
at
some
now?
month-to-month declines, so some better stuff.
Yeah,
and that's about
you
all
don't.
we can say at this point. And, you asked the
You don't
question
believe
earlier,
them?
Does it change what the Fed might have done?
Yeah, I
don't
can't.
think so.
Yeah,
There's not
I can
enough
believe that.
detail in here for them to.
Car
really
business
make
is a
any
tough business,
kind
man.
of decision
Car
on
business is a
what it
tough
means
business.
for the future. But for right now, it is good news, and it does show.
Hey,
unexpected
Spiznik,
progress
what's
in
up?
inflation.
Yeah, let's get that.
Thank
I'm
you
with
so
you,
much.
man.
As
Where's
always,
this
for breaking it
Christmas
down,
pump?
It does seem like markets are
Let's pump
enjoying this.
everything,
You aren't
including
seeing
the
those huge
stocks.
pops
Even the
in
stocks need
expectation
some
of
action,
for a Fed
man.
rate cut come
We need a
January,
stock
David.
pump.
It seems like people are looking into the jobs picture as potentially the greater impetus to cut, given the fact that inflation still is well above that 2%
All right.
target.
Yeah, still lingering there. I think that was telegraphed.
All right, we're looking bullish.
Last week, that's
We're
likely
looking
to
bullish for
persist,
now,
and I
anyway.
think those concerns about cracks in the labor market persist here as well. Again, just looking, as Mike said, at this press report, seeing all of those empty spaces is certainly glaring. And again, I think over the course of
All right, guys, I got to do some stuff to set up real work. I'll be back in about 15, 20 minutes or so, and then we'll get ready for the open. Who's all in for the sell-off at 9:30? Hey, Sugar Rush. Sugar Rush and Adam Ski are over in the YouTube. Those are the YouTubers today. If you guys are getting crushed by ads, you can go over to YouTube. There's no ads on YouTube yet, so I don't care. I can use the action over on YouTube.
Just highlights how different the picture really is for everybody.
Yeah, I don't. I'd rather see the
pump
pump right now, to be honest with you. I think when the market pumps, it kind of rises all tides.
From ECB President Christine Lagarde, who is currently speaking at the news conference over in Europe. This is
It's like high tide, rises everything. All right, guys, I'll be back in a little bit.
1.9% in 26, 1.8% in 28, sorry, 1.8% in 27, and 2% in 28. For inflation excluding energy and food, staff project an average of 2.4% in 25, 2.2% in 26, 1.9% in 27, and 2% in 28. Inflation has been revised up for 2026, mainly because staff now expect services inflation to decline more slowly. Economic growth is expected to be stronger than in the September projections, driven especially by domestic demand. Growth has been revised up to 1.4% in 25, 1.2% in 2026, and 1.4% in 2027, and is expected to remain at 1.4% in 2028. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release that is available on our website. I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial monetary conditions. Looking at the economic activity, the economy has been resilient. It grew by 0.3% in the third quarter, mainly reflecting stronger consumption and investment. Exports also increased, with a significant contribution from chemicals. The sectoral composition of growth was dominated by services, especially in the information and communication sector, while activity in industry and construction remained flat. The pattern of services-led growth is likely to continue in the near term. The economy is benefiting from a robust labor market. Unemployment at 6.4% in October is close to its historical low, and employment grew by 0.2% in the third quarter. At the same time, labor demand cooled further, with the job vacancy rate at its lowest level since the pandemic. The staff projections see domestic demand as the main engine of growth in the years ahead. Real incomes are set to rise further, and the saving rate should gradually come down from its still high level, supporting consumption. Business investment and substantial government spending on infrastructure and defense should increasingly underpin the economy. However, the challenging environment for global trade is likely to remain a drag on growth in the euro area this year and next. The Governing Council stresses the urgent need to strengthen the euro area and its economy in the present geopolitical context. We welcome the European Commission's call for governments to prioritize sustainable public finance, strategic investment, and growth-enhancing structural reforms. Unlocking the full potential of the single market is crucial. It is also vital to foster further capital market integration by completing the Savings and Investments Union and the Banking Union to an ambitious timetable, and to rapidly adopt the regulation on the establishment of the digital euro. Looking now at inflation. Annual inflation has been in a narrow range since the spring and remained at 2.1% in November. Energy prices were 0.5% lower than a year ago, after a larger decline in October. Food price inflation was 2.4% after 2.5% in October and 3% in September. Inflation excluding energy and food was steady at 2.4%, as goods and services inflation moved in opposite directions. Goods inflation declined to 0.5 in November from 0.6 in October and 0.8 in September. Services inflation rose to 3.4% in October and 3.5% in November from a 3.2% in September. Indicators of underlying inflation have changed little over the recent months and remain consistent with our 2% medium-term target. While growth in unit profits was unchanged in the third quarter, unit labor costs grew at a slightly higher rate than in the second quarter. Compensation per employee rose at an annual rate of 4%. This was more than expected in the September staff projections and was due to payments over and above negotiated wages. Forward-looking indicators such as the ECB wage tracker and surveys on wage expectations suggest that wage growth will ease in the coming quarters before stabilizing somewhat below 3% towards the end of 2026. Inflation should decline in the near term, mostly because past energy price rises will drop out of the annual rates. Staff expects it to stay below 2% on average in 26 and 27, with energy inflation negative over most of this period and inflation excluding energy gradually declining. Inflation should then return to target in 28 amid a strong rise in energy inflation. This, in part, reflects the upward effect on inflation of the EU Emissions Trading System 2, which is now expected to start in 2028, a year later than assumed in the September staff projections. Inflation excluding energy is projected to stabilize at around 2% in the final years of the projection horizon. Most measures of longer-term inflation expectations continue to stand at around 2%, supporting the stabilization of inflation around our target. Let's look at the risk assessment. While trade tensions have eased, the still volatile international environment could disrupt supply chains, dampen exports, and weigh on consumption and investment. A deterioration in global financial market sentiment could lead to tighter financing conditions, greater risk aversion, and weaker growth. Geopolitical tensions, in particular Russia's unjustified war against Ukraine, remain a major source of uncertainty. By contrast, planned defense and infrastructure spending, together with productivity-enhancing reforms, may drive up growth by more than expected. An improvement in confidence could stimulate private spending. The outlook for inflation continues to be more uncertain than usual on account of the still volatile international environment. Inflation could turn out to be lower if the rise in US tariffs reduces demand for euro area exports, and if countries with overcapacity increase their exports to the euro area. Moreover, a stronger euro could bring inflation down further than expected. An increase in volatility and risk aversion in financial markets could weigh on demand and thereby also lower inflation. By contrast, inflation could turn out to be higher if more fragmented global supply chains pushed up import prices, curtailed the supply of critical raw materials, and added to capacity constraints in the euro area economy. A slower reduction in wage pressures could delay the decline in services inflation. A boost in defense and infrastructure spending could also raise inflation over the medium term. And extreme weather events and the unfolding climate and nature crisis more broadly could drive up food prices by more than expected. Turning now to the financial and monetary conditions. Market rates have increased since our last meeting. Bank lending rates for firms have been broadly stable since the summer, after falling in response to our policy rate cuts over the previous years. In October, they stood at 3.5%, unchanged from September. The cost of issuing market-based debt was 3.4%, also close to its September level. And the average interest rate
All right,
on
guys, I'm back.
mortgages, again, held steady at 3.3% in October. Bank lending to firms grew by 2.9% on a yearly basis in October, unchanged from September. Corporate bond issuance rose by 3.2%, broadly unchanged as well.
Hey, Uranium.
Lending strengthened, growing by
You think you're going to give options a shot? There's a lot of guys who do options here. Hogwarts does options.
In line with our monetary policy strategy, the Governing Council thoroughly assessed the links between monetary policy and financial stability. Euro area banks are resilient, supported by strong capital and liquidity ratios, solid asset quality.
All right, Hyde's in a short at 245 in the middle of that fair value gap.
And the possibility of a sudden repricing in global financial markets
68.34.
financial stability in the euro
Okay,
area.
that's a good short too. All right, those are good. Those are good positions. I think we're gonna start rolling over now. We're at 9 o'clock.
Enhancing resilience and preserving macroprudential space. So
All right, run down the list. So, ballistics, DeFi 1, how you doing? Dolomite Sandwich. Dolomite Sam, Fairy King, GQ 35, Hyde, Kingston, Ladioff, Maldiab, No Plana, Relic, Scotty, Stock It Up 23, Scotty Gambit, Too Lazy, Too Clazy, Tree, Newology, Neutrology, Skolok, Stolok, and Uranium Twitch. All right. Good morning to everybody hanging out right now. I appreciate it. That's everybody in chat. If I didn't call your name, it means that you might just be listening, but you're not in the chat as a user. Just held, let's see, Sugar Rush over on the YouTube is just think if I held end of day long. I know. I still do have my 4 quid puts. Should have bought 10. They quoted 30 cents and filled at 12, so it won't be much money, but probably high percentage. Yep, for sure. How you doing this morning, Sugar Rush? Adam Skis over in the YouTube.
Second question is about economic growth, given your second straight fairly large revision in the growth outlook. You know,
whoever's in Rumble, you can say hi in chat. There's 5 people on Rumble right now. Hey, Rumble people.
Should we be rethinking our entire assessment?
I'm watching the chat if you guys want to get in on the conversation.
Are we catching perhaps a windfall from the AI boom? Are firms more resilient and adapting to the new?
Can't believe there's 5 watching.
Is there some fundamental change about growth, or is it just a one-off improvement?
Well, thank you very much for your 2
chat's
questions.
not working.
I'll try to unpack because there's a lot there. On interest rate, you know, we reconfirmed that we are in a good place, which does not mean that we are static. There was a unanimous decision that was taken today concerning the rates that we decided to hold. But there was also a unanimous view that all optionalities should remain on the table, and that we would stick to the meeting-by-meeting, data-dependent approach with no
oh man, my chat. Why is this not working? There's 6 people over in the YouTube or in the Rumble right now.
And it was a unanimous view around the table.
Chat's not working over there.
So I think that addresses your first question.
Oh yeah, it's working. Here
Your second question
pop
is,
it out from here, maybe.
always an interesting question from you, but it's an interesting question because it raises issues that we will probably review in deeper details at our February projection next exercise, because we will also be looking at the surveillance report that we produce. We will be looking at the fiscal monitor. We might look also at the supply
All right.
side,
Hey, 6 people over in Rumble. If anyone hears me, if you can, go ahead and just say hi. I'd appreciate it. How you doing?
Facts that would answer your question.
I'm watching the chat over there, just trying to make sure everybody is gets a chance to chat in on the show. We need that chat. I know I'm gonna work this weekend, Sugar Rush. I promise this weekend. Tired, didn't sleep well, and had hard to play gap opens at times. Yeah, I'm gonna work on it's. I'm moving it to the top of my list because now that I'm starting to get enough people in different places, I got to consolidate it. I'm going to try and scroll it on the screen too somehow, so I'm going to play with it. That's going to be my my one project for the weekend.
Based on the surveys that we conduct, is largely attributable to the development.
I'm going to get it done. I got a whole list of things. Over Christmas break, I'm probably going to be able to clean up all the things on my list I've been saving up. I got like 10 things here I got to do. So I'll probably have time to just sit down and not be distracted with regular work and everything else and just bust it all out. Yeah, I totally get it. Yeah, that's what I'm going to do so everybody can see it. Yeah. And then I can react to what everybody's saying, no matter where they want to watch. I'm just kind of getting to that point now, you know. I haven't really needed it until now, you know what I'm saying? AO. AYO, what did he say? AYO?
The second one,
is AO here?
Which came as a bit of a surprise to us, is the contribution of exports. We had anticipated.
I don't know. What did AO say?
Out of the chemical industry.
I don't know what you're. No, you said you're gonna bust all out.
Notably, but not only, would really correspond to a buildup of.
I'm gonna bust all out. What do you mean?
In the early months
oh no, I'm gonna put a text, like a chat box on the screen. I'm gonna on somewhere on the show. So if you're watching in YouTube or Rumble or X or whatever, you can see what everybody's writing in chat, no matter where they're watching. Do you know what I'm saying, Hyde?
That are largely exported or to other phenomena?
No. I gotta do it. I gotta create that. There's a program that'll let you do that. Sugar Rush gave me the link. I'm gonna work on it this weekend. I'm gonna try. I said I'm gonna try and bust it out. So that's what I meant. I was gonna do that. I'm gonna get that done this weekend, and then I'm gonna create the Shrek emote for everyone. Hey, Thai. Thai is on Discord. Lord, I have mercy. I'm about to bust. He put a meme on there.
How the market is pricing in the current rate.
Oh.
Second question is on the fiscal stimulus.
No.
We were waiting for that.
No, it's like if people want to watch on YouTube, I want to make sure they can participate in the show and write in their chats about their positions and stuff also. But it's hard to see if you can't see. If you can't see what Twitch is writing, it's hard. It's hard if you're in YouTube. So you'll be able to see it right on the broadcast. I just got to figure out how to do it and set it up so it's okay.
And others have not changed. So when we look at activity.
Yeah, try not to crowd the screen too much. I can do it.
They've moved to the upside across the projection period. When we look at inflation, we've also increased our inflation projection for 26, and we have taken into account the movement from 27 to 28. So there are lots of things that have moved in that respect. One thing that has not changed much at all.
I need to hype buyers to stop buying. I know.
Is uncertainty. And uncertainty is not
because we always short in the mornings. Yeah.
So
I think maybe we'll get the pullback. We got 22 minutes till the open, but we're in a full-on long right now. I'm hoping this doesn't continue all day. I really want to pull back so I can get in on it if we're going to move up for the day. I don't want to be stuck here for 3/4 of the day waiting for a spot.
The movement of trade from countries with overcapacity in particular. What happens at the borders of Europe. So there are lots of factors that are in play and that will evolve over the course of 26 that are generating uncertainty. And as far as the future is concerned, as I told your colleague just earlier on, there was unanimous agreement around the table about the fact that all optionalities should be on the table and that we should stick to the meeting-by-meeting approach, to the data dependency, and we will be looking at all sorts of
See, because we always short the mornings, definitely going to be a correction for that 8 a.m. move, 8:30. Yeah.
We will be particularly attentive because it plays a significant role.
Yeah, I think so too. We got to fill the gaps.
We do not have a set path for our rates going forward. I know this is, everybody would like some forward guidance, but we simply, in the current situation, with the degree of uncertainty that we are facing, we simply cannot offer forward guidance. Now, your second question related to government spending.
All right, we're still on the grind up. You got stopped. That's what happened to me early.
Documents that are filed by the various member states with the Commission to review the path of investments going forward. And we have an impact on growth for certain countries.
Kind of double topping on the ES right now.
In 26, in 27, and still a bit in 28. And so much can change in the meantime. But it does have an impact, and it is a driver of growth in the investment section that I was describing earlier.
And the next question goes to Mark Schroers of Bloomberg. Mark, please.
Yes, thanks a lot. The first one, unfortunately, also on rates. The discussion today, was there
any... That's what we decided today, so you're right.
Okay, perfect. Was there any discussion about a cut today or about hikes today?
Fucking London, bro.
I don't have to wait for your second question.
Yeah.
The answer is no.
The second question is on the revamp of the executive board.
Yeah, no. Let's see what happens. Let's see what happens. We got about 19 minutes.
That also includes your role in 2027. I know it's a long time off, to be honest, but there's already a discussion in Germany whether it's time for a German to become the ECB president. And just wanted to know if you think that would be good after 25 years of the institution, if a national from the largest euro area member states would become the ECB president. And as you already publicly said that Klaas Knot would be a good candidate. What do you think about Isabel Schnabel and Joachim Nagel, who both recently...
Okay, well, let me clarify one thing. I don't have any favorite candidate, and I did not say that Klaas Knot was the good candidate. There are plenty of very good candidates.
Did anybody watch the Trump speech last night?
Is one of them, but there are plenty of them, and I'm sure that there will be more in the future. Why not? I find it terribly... satisfactory in a way that so many people want to have my job.
I'm listening to a little bit of it now.
It's a great job.
I mean, he's listing off all the stuff that's wrong, but I don't see him doing anything right now to really go after fixing it permanently.
And affect the life of people and try to deliver for the European Union and for our currency.
I want to see overwhelming, crushing action is what I want to see. I want to see a complete correction. And I almost don't even care what laws. He can make up his own fucking laws and keep signing papers to make it happen. But he won't, you know. Republicans just won't do it. They sit there and do nothing.
Time to ask all those questions, huh?
Next question goes to Aude Kersulik of BFM Business.
Thank you. Good afternoon.
Kind of tired of listening to people talk about it, but whatever. Whatever. Hey, here you go. Here's some hope, Hyde. There's some hope, man. Oh, you got stopped out.
Discussed by the Governing Council. And second question, still regarding to currency. How do you balance the benefits of a strong euro for import prices, good for your mandate, with the risk of a greater exposure to China, which is an important issue for Europe at the moment? Thank you.
Well, thank you very much for your question. I might give you the answer that you expect, which is that we do not target exchange rate. And we do refer to exchange rate in the...
Does anyone know anything about X, or is anyone a big X user?
When we refer to
I'm trying to get a hold of their customer support.
an appreciation of the euro.
It's been 2 days.
I'll refer you to that section in the risk.
They seem
segment
pretty
of the
busy.
monetary policy statement. And obviously
I'm
it
trying
is
to
something
promote the
that
stream
we
over on
look
X,
at
but they won't let
carefully.
me until a human looks at it so they
As
see I'm
the
not
way in
scamming
which
people. You know,
currencies
we're just
are
watching
positioned
charts all day,
around the
shooting
world. And obviously
the BS,
current situation of the renminbi
shooting the
is one that
proverbial
we
BS
pay
all day,
attention to. Yes.
watching news, watching the charts go by, paper trading. Well, prop firms are paper trading until you get to the live account.
Thanks for taking my questions. I have one question.
How you doing, Uranium? You okay out there, man?
The higher inflation in
What's up, brother?
26 was justified or explained with higher services inflation. It's gone up to 3.5 in whatever it was, November, up for and it was on an upwards trajectory in the past few months. How concerned are you about service inflation overall? Could this be kind of...
I know what you're going through, Uranium. It took me a long time
My question again is on
to put the whole toolbox together. Looks like he's gone. Must be he's done trading for the day.
Sitting members of the executive board has basically showed interest in
I know, man.
becoming
I know.
your successor. What's your reading on the law in terms of, is it possible legally to appoint a sitting member of the executive council as ECB president? Because as far as I understand it, it clearly says terms are non-renewable. And would that be in line with...
All right, guys, got about 15 minutes till the open. We're just kind of flirting around the zone up here. So this here is a historic line of resistance or support. I typically mark these off the high of the day, the low of the days, going back a month. So this line could have been here for, you know, up to a month ago. Or it could be longer if we haven't revisited this time frame in a while, where the lines were adjusted based on current information. So we're kind of watching this. We got a fair value gap right on the 20 EMA. This is the 20 EMA, the yellow dot dash. Got a fair value gap here. 50 EMA is down here. So let's see if we push sideways, and then we got about 14 minutes to the open. See what we do.
Based on the staff study, is related to wages. And wages have surprised us to the upside. If we look at compensation per employee...
Same on the ES. You got a fair value gap of resistance up above and a fair value gap of support down below.
Anticipated, in particular in the September projections. So with wage having increased more than anticipated and being a strong contributor to most activities of services, not all of them, but most activities of services, it's hardly surprising that services inflation is higher than anticipated and contributing to the current inflation number that we have. It's balanced out by goods, as you will have seen in the monetary policy statement, is they go in opposite directions. Goods go down, services increase, and we anticipate two things in relation to that. Number one, that wages will follow a slightly declining trend going forward, and we have wages slightly below 3% at the end of 26. And that is based on measurements instruments that we have, whether it's the wage tracker, which incorporates all the negotiated, the collective bargaining agreement that are negotiated and which roll out into either 1 or 2 or 3 years, depending on the countries, and under which we cover now 8 countries with quite a large number of employees, workers, or whether it is the surveys and the corporate telephone survey that we conduct asking, corporate, where do you see salaries, where do you see wages, how are the negotiations going? So on the basis of all that, we believe that this compensation per employee should decline in the course of 26. But we are attentive because while we believe that a lot of the catch-up, for instance, has taken place, a lot of the one-off specific payments have occurred,
All right, so we're just kind of waiting. We're just kind of waiting. If anybody's in a position,
December in our projection, and that is
you know, you want to make sure.
so we are humble.
If you're not in a position, it's the same thing I say every morning. If you're not in a position now,
We look at the vacancy,
and you don't have your break even set, you know, you wanna just make sure you protect your position. I wouldn't be entering anything now. Not a good idea to enter now.
And we have, sorry, because this is one that we really debated quite a bit and that we looked into, and that staff is working really hard to get to the bottom of it. Services is a big package. You have lots of things in there. You have accommodation, transportation, telecom, IT, financial services. There's a lot in there. And some of those sub-sectors of services are labor intensive, are wage intensive, others less so. So we have to, you know, sort of balance out and distribute the wage increases that we expect in between all that. But there is really a solid work done in that respect. So your question is, can a sitting member of the executive board be eligible for another board position or the position of president of the executive board? This matter was looked at in the past. It was looked at when Christian Noyer, the then vice president of the ECB, was possibly considered for presidency. It was looked at for Benoît Cœuré, who was then an executive board member and who was also considered possibly for the replacement of Mario Draghi. I think in both those instances, the determination by the jurists, the lawyers of various corners of Europe was that it was not possible. But I think the matter needs to be looked at again in order to ascertain, you know, what is possible, what is not possible, what are the conditions. And it's, you know, it's not for me to pass a judgment on that. I think it needs to be cleared so that everyone knows where to stand.
The next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Thank you for the opportunity. President Lagarde, I have two questions on financial stability, as it was also mentioned on the statement. So financial stability and the international role of the euro could be threatened by the reparations law for Ukraine using the cash balance of Russia's asset. However, so far, the euro has been quite resilient in spite of Putin's retaliation threats. So what is your assessment of this kind of resilience of the euro so far in this respect? And also on financial stability and the digital euro project, which is making progress.
He's given Trump's given the military members a $1,776 bonus.
More and more as an anchor to strengthen
I never got a bonus.
stability in the euro area. So, in your opinion,
Can send me a bonus
ECB become a role model in the world
from the
to
tariff money,
assess
so that's
the
good.
importance of
It's
central
good.
bank
You're over in a
digital
shithole right
currencies?
now, wondering why you're there. You deserve that money. Because I feel you.
I think I'll start with your second question. I know these are important moments for the digital euro because
All right, guys.
we have
A little bit of paint drying watching and for another 8 minutes until the fireworks happen. We got the open is in 8 minutes.
Later on for the European Parliament to identify whether the Commission proposal is satisfactory, how it can be transformed into a piece of legislation or amended. Our ambition is not to be role models. Our ambition is to make sure that in the digital age, there is a currency that is the anchor of stability for the financial system. For the moment, that anchor is central bank money, which essentially has material form. It's the banknotes that you have in your wallet. But in the digital age, it has to be
Van Jones on
expression
CNN
of
is
sovereignty,
defending Trump.
digital
That's
anchor,
interesting.
For the
On
purpose
economic
of
policies.
the financial system that
I don't know. I just don't
So
see
that's very
things getting any
useful.
cheaper
In
for
addition
me.
to
I go
making
and,
sure
you
that
know,
it is user-friendly, not costly.
I go into the food line, I fill up my basket with maybe a couple things in my hand, and it was $71.
Online, offline. I mean, I could go on and on.
When I was a little kid, I remember going shopping, grocery shopping with my mother. And I remember this one time, she had it all budgeted out with coupons and everything. We literally had the cart completely heaping over to where things were falling out of it. And it was enough food for 2 or 3 weeks, minimum, for there's my sister, myself, mom, and dad. $100.01. Because I remember that was the budget. That's what she had, $100.01. And it came out to exactly $100. She pulled a penny out of her purse and paid the 1 cent in cash. Because everybody paid cash back then. So you got an entire cart. It was probably enough food for a month for us.
Central bank's choice.
I go in with a little basket, the little carrier basket. I fill that up, and not even, with like, lunch meat, cheese, some A1 sauce, some granola, fucking whatever, eggs, 70, all right, I did have a 12-pack of beer in there. $71 fucking dollars. So I carried out 3 little plastic bags and a 12-pack of beer for $71. So
This is the remit of what
there's still some work to do. Hey, Christian, how you doing?
it's something that is outside our remit.
Hey, man, are you a futures trader? I got a couple minutes to introduce you to the channel before the open. What's up, Christian? Are you trying to learn how to trade, or are you already a trader? What's going on, brother? How you doing? If you want to kind of let me know where you're at, I'll introduce you to the channel. Tell you what we do here. Or did you bounce? No, Christian might have been a bouncer, a follow bounce. I don't see him in the users.
The natural interest rate might rise because of that. Do you agree with that assessment? And my second question is on stable coins.
Got 4 people watching on the Rumble.
Significant
One
importance
or two.
globally. But many experts see this as a threat.
All right, we got about 4 minutes to the open, guys.
Sovereignty, and are calling for stronger support for stable coins in Europe as well. What's your position on that? Thank you.
I don't know. All the news seems bullish. I mean, I'm having a hard time finding a case for the bears now.
Sovereignty, you said stable coins, right?
This is why I try not to follow a bias in any way.
Yeah, no.
Got 4 minutes to the open.
So
Everything's bullish except for my real job. I haven't had a lead all morning, and I only got 2 calls today. So, but it is, honestly, last year, it was back to back to back all day long.
Instruments like stable coins can work.
So that's bearish, but that's not going to affect the open, I don't believe.
So our view is that.
All right, is anyone out there gambling on the open? No gambling on the open. That's one of the rules here. We don't gamble on the open. If you weren't in a position already for, if you haven't been in a position for 15, 20 minutes at a minimum, then you don't, we don't enter this close to the open, and we don't play during, you don't take positions during the volume. 2 of the rules.
Because I have a concern. So that's, to the extent
especially because we push prop firm trading for new traders to limit your exposure to your capital. Just use your spare change money.
For the users.
So you can't let a trade run on these huge wicks at the open on a prop firm account. You can't do it. You won't win. You might win a day or 2 in a row, or you might come up for a week, but the one time it goes hard against you, you'll blow the account, and everything you did before that doesn't matter anymore. So 2 minutes to the open. Let's see what we get. Just got a lead. The lead gods heard me.
Into the details of how it is structured. It exposes the reserves, the resolution mechanisms, and the redemption mechanism in Europe, as is organized under MiCAR, to other currencies under which the stablecoin would be issued, and which could be a threat and a drain on the provisions of MiCAR that apply in Europe. So on that particular area, I think that we need to be extremely attentive to what the potential risks are for the system itself.
Hey, Scotty.
For the holders.
Yeah, news is already in for the day, brother. We had CPI. 1 minute to the open, guys. 1 minute to the open. Get ready. We had CPI at 8:30, and that was all the news we had for the day. There's nothing after this.
The R star and the rate which is ideal because it neither stimulates.
We got some treasury bills, you know.
Our economies.
But treasury bills never do anything. Kansas City manufacturing. All right, here we go. About 30 seconds to the open. So news is already in. All we have is the open from here on out, Scotty, for a catalyst. So we'll just wait for the volume to settle in and get a signal, and maybe we can get something going today.
And one of the characteristics of our star is that you can only sort of identify.
All right, here we go. Ding, ding, ding. Let's see if we start to push down or if we grind up. We're about to find out.
That we can call the current circumstances as perfectly
But I want to make sure that wherever the first signal happens, I want to try and get in on it.
Too much risks and too many shocks under the spell of which we still are to actually identify our star and have a view as to whether it's going to increase. So, as I said, it's not observable, so to speak, and I think it's a very good debate to have, but I'm not sure that this is the one that has caught the attention of the Governing Council. It's certainly not one that we debated today, or yesterday for that matter.
And the last question goes to Philippe Lacroix of AFP.
All right. Oh, we're pushing up. Okay, the Bulls are in control right now, guys. Bulls are in control.
On the same issue, if I may. It's related to Ukraine. You know that
Bulls are in control.
27 head of states meet in Brussels with a bold agenda. And one of the points is to try to agree on this reparation plan for Ukraine. So single question is, are you confident that they will succeed to find a solution? And the second one is, earlier this month, yes, ECB said...
All right, ES is flying too. Oh, we're organized right now. ES and NQ took off at the same time. So all the volume's taking it in one direction. So
prohibiting monetary financing is the other
pretty
point.
super fly right now.
In these several times.
Super fly.
Shouldn't the overriding interest of the people of Ukraine to have the right to rebuild their country and given pace not come above all kind of purely factual legal considerations? And as you said before, for the case of...
Hey, Don Stoner. Hey, Stoner, what's up, man? Are you a trader, dude? Are you hey, man, are you a trader? You trade futures? I got a minute to introduce you to the channel while I'm working this lead. Hey, brother. All right, how long you been trading for? Let me know, and I'll kind of introduce you what we do here, okay?
Well, thank you for your question. Your first question?
You do the ESNQ. Are you a prop firm trader? Do you trade? You got a cash account? Kind of. What's your poison, my friend?
And given the importance of the matter.
4 months. All right, so you're new. Okay, cool. All right, let me explain what we do here. So, I kind of set the channel up for just a bunch of guys to hang out all day and to try and trade as a plan B while they're working their regular job, plan A, to try and make some extra money for their family, kind of go through the learning process, on the side, and I really for new people, I absolutely positively say prop firm's the best way to go, because if you're working full time and you got a plan A figured out, your spare change is your entertainment money is enough to buy an eval, so you don't expose your own capital. So as you learn how to trade and as you get better, the idea is to earn a payout with a prop firm. Then you take that money and you put that into a cash margin account, and then you can try and build that up. So you're not really exposing yourself while you're learning, you know what I'm saying? You know, the stream runs 24 hours a day during the trading week. I'm on the mic from 8 o'clock to 4:30. I go back and forth. I do have a full-time job in corporate sales. So I work remote, so I go back and forth while I'm working my leads all day and just try and keep track of the markets. Yeah, I keep track of the markets. High volatility areas, we talk a lot about psychology, responsible risk, and things like that. There's a wide range of people who hang out here. There's really good traders, been doing it a long time, and a bunch of people who are new and they want to learn. And we just kind of try and help each other out through the tough times of the learning curve, you know what I mean? So kind of the manosphere of trading. But hey, if you want to see the beginner's guide I set up,
yes, I would also like to wish
this
Merry
is the
Christmas, Happy holidays, whatever is convenient to everybody out there.
Happy Hanukkah, Kwanzaa, all of the holidays that are in
there you go. That's the beginner's guide in the about page. It has videos on futures, margin, prop firms, and then a list of videos that explain how my strategy works. And then if you want to join our Discord, more than happy to have you there. I got the beginner's guide in there also, and a bunch of people, they'll post their charts, talk about their wins and losses, and talk about things that happened during the day. And we're just trying to build a group of dudes that want to do that, and women, but no Karens. We don't allow any Karens here. We get to say anything we want. We don't nitpick anyone on what they're saying. Everybody gets their opinion, and we don't debate. It's not a political show, but honestly, politics comes up sometimes because we watch the news all day, so it can't be helped. We just don't debate. Everybody, if you got in a position, everybody gets to say what they think, and then we just move on with trying to make money in the market. And that's kind of what we do here, man. It can be boring sometimes. We're not going full port on stuff. We're not trying to make $1 million a day. We're just trying to make good, solid trades that we're in control of. That's the goal.
New all-time highs here. So
that's who we are. All right, guys, so we're heading back down. We're starting to get some resistance on the pullback. Looks like we're getting some resistance on the pullback. ES is pulling back, or the NQ is pulling back hard also. I lost the chart there. Hold on.
Shares are up 16%. 5 minutes into the open. It boosted tech sentiment with a rosy forecast. Revenue blew past estimates on its strong demand and pricing power, saying that there is more demand than they have supply, completely reversing yesterday's narrative, which was, oh no, Oracle's not going to get funding. The AI house of cards is going to fall.
All right, we also had, I think, really a fascinating merger of equals story out this morning. You may not know how much faith I put into mergers of equals.
Spoiler, not a lot.
Very little. But Trump Media agreed to combine with TAE Technologies in an all-stock transaction valued at more than $6 billion. The two companies say it'll create one of the first publicly traded nuclear fusion companies.
You're looking at the ES right now, and so I trade. Do you know what the ES and NQ are? The MES and MNQ. Do you know the difference between micros and minis? Yeah. So right now you're looking at the mini chart for the NQ, which is the NASDAQ futures. That's what you're looking at right now. Does that make sense? If it doesn't, it's okay. A lot of this stuff people don't know until you got to be into it.
Yeah, I think fascinating.
I'm trying to make $1 million a day though, but that would be when I have $1 billion in a bankroll. Yeah, that's right, Fairy King. It's all,
an unexpected improvement following months.
The more you have, the more you can risk, that's for sure. But the more you risk, the more you can lose, So sizing is important.
I say that because rent and housing costs were assumed.
Forex? No, this is futures, not Forex. Forex is money exchange.
Release, it's mostly just blank spaces. So you have to impute a lot. It'd be like saying, well, the stock market's up today, but we can't tell you what stocks have actually moved. And that's the situation here. We do have, they did get some numbers because they were non-government collected numbers, numbers that
All right,
companies sent in. As Danny mentioned,
things are pretty volatile right now, guys. There's a lot of volume coming on, so be careful.
Food at home, 1.9. Now, these are year-over-year numbers.
Okay, so you're doing Forex. So we're doing futures, yeah.
From September to November.
Yeah, so if you can do this, Don, if you can go to the About page, watch what futures are. Okay, if you want to get into futures, that's what we do here. We do futures. And if you want to see if it's for you, I did the beginner's guide because in about an hour you can watch those and decide if this is for you or not. But a lot of Forex traders do move to futures. Oh, this is a big pullback, guys.
We trust this? We don't know. It's also true that with
So you're watching the NASDAQ futures right now. You know what I'm saying? Yeah.
Everything is on sale for Black Friday. Other mostly good.
Yeah, it is. It's kind of the same thing. It's the concept is the same. It's just different instruments. It's a different way of trading your money. Yeah, I've heard Forex is harder. I have heard that, but I've never done Forex.
You look at this and you can see why maybe the market's excited for today.
But I tried to do the beginner's guide to make it as painless as possible so that you could understand the basics of what we're doing. And then, you know, if it's for you, then cool, hang out and we'll try and, you know, get you going the best we can. You know, if not, that's fine. Maybe stop in once in a while and say hi. Everybody's welcome.
Let's bring in Morgan Stanley's Chief Investment Officer, Cross Asset Solutions. Jim Caron joins us. Jim, great to have you here on, I mean, there's so much news, which is weird, you know, just a week ahead of Christmas, but we have rate decisions, we have Micron out with great earnings, which helps obviously the AI sector. We have inflation that's better than expected. What do you make of it?
Yeah, it's a good question. There's a lot to sift through, but I think it's important not to lose track of the bigger picture and the trend. So the information that I'm getting today, let's start with the ECB. The ECB is saying, listen, you know, we expect there to be better growth and inflation is pretty close to target, so we don't necessarily feel as though we have to continue to add accommodation. The Fed is some accommodation, and the and the inflation rates have been coming down. Now,
yeah, we got a really huge pullback. There's a lot of volume, guys, right now, so be careful. There's a lot of movement. It's chopping around pretty good. I'm outside my volume range to be able to trade the NQ and the ES right now.
Decent growth expectations in the future, but we're not getting a lot of inflation that's being associated with that. So
trends change a lot more, while here you can have a bullish bias 80% of the days. Just easier to get a trend and read. Yeah, I would agree. I would agree, Fairy King. Fairy King's royalty around here. Trend changes a lot more in Forex, yeah. There's probably a lot more factors that affect.
We've been discussing and talking about is really positive. It's a really positive backdrop for earnings and earnings growth and earnings potential going forward into next year.
Jim, does that mean that this yield curve steepening, which we've
I took my stop and dug deeper.
or so then, is overdone if that threat of inflation is
It took my stop. Oh, okay. So are you short, Hyde? Are you short? Were you short? It's going to chop around a lot with this volume. When the trade box isn't on during high volatility, that means there's probably going to be a lot of chop that can, it can really mess with your stop loss.
Economic activity, and maybe the Fed doesn't have to cut rates as much. Sure, absolutely that could happen. Maybe 10-year yields go to 425. Maybe they even go up towards 450. But if we're in the backdrop of a relatively stronger economy that can support that movement higher in yields, then that yield curve steepening is actually another component of stimulus going forward. A steeper curve is usually a positive sign for forward earnings and for future growth.
Is this stimulus that we're going to get, I mean, one big beautiful bill is cited a lot, but we've also heard now from President Trump last night about checks going out to members of the military, the warrior dividend, he called it. There's another $2,000 that he wants to give everybody, I'm assuming on the lower end of the income spectrum for health care. Is that going to, combined with the faster growth and lower inflation, help take care of the K-shaped economy concerns that we've heard so much about this year?
So, so this is what the market's trying to figure out, and there's a lot of speculation here. But let me pose this. What if it works? I mean, I know I watched President Trump last night on TV, and I know it's largely about messaging and things like that. But what if he's somewhat correct, and what if it does work? What if you do get this movement towards higher demand, higher consumption, that there is a dividend from some of the tariffs, that it is able to support that bottom part of the K during this soft patch that we're going through in 2025 and is likely to spill over into the first, let's say, half of 2026. So we get that fiscal stimulus from taxes and everything else that can support the lower end of the economy.
All right, guys, I'm working leads too and going back and forth. So if you write something in chat, I'll get to it. I'm just trying to keep up here. But we need the volume to kind of settle in and figure out if we're going to grind lower or if we're going to, or if we're just liquidating and then we're going to grind back higher. So over the next maybe 10, 15 minutes, we'll figure that out. Hogwarts, what's up, brother? What's up, Hogwarts?
We may get one or two more cuts first.
Jim, this just brings me right back around to the confusion of the direction of bond markets from here. JP Morgan did this survey where it basically said that a lot of retail investors are moving away from structured products like 60-40. Instead, what they are doing is they are constructing their own equity portfolios, just equities, so being very over allocated there. And then for a hedge, adding in something like gold or something less traditional, basically anything but bonds. What do you make of that as a sort of portfolio construction, maybe just on its surface, and the risks of that into 2026?
So this is a theme that we've been talking about for several years.
So we might go down. I'm not sure, man. I probably will get assigned on some NVIDIA, but overall good day, 0 trades. Yeah, I tried to get in on a short earlier. Didn't work out for me. I had a bias to the downside, but my trade box came on and gave me the sell signal. So I took a very conservative entry, and I still, it didn't go my way, so that's okay. So now I'm just waiting for another setup to try and get it back.
Investment management, where we're creating baskets of equities to play certain themes in the markets, like policy.
Uranium's having a tough day, so if you see Uranium, man, he needs us to bring him up a little bit. I think he's having a tough time with. I think he's trading in the slow markets and getting chopped up a lot.
Creating a structure in a portfolio that manages the risk, similar to what a 60-40 is supposed to do.
You know what I mean?
And certainly bonds are included in this, but it's not as easy as just saying 60% passive equities, 60% passive bonds, and that's all you need to do. It's really about being a bit more thoughtful within the portfolio construction. Now, whether that's adding a little bit of gold, sure, there's nothing wrong with that. Also adding a little bit of inflation protection. But at the same time, why not start to look at value and quality stocks that are adopting AI technology that is likely to unlock economic value in the future and is being supported by government policy, taxes and things like that. And let's combine that together and construct a portfolio. And my view and our view is that we would have a more durable portfolio with good returns and lower risk.
Jim, it is going to be an interesting 2026. I think that's fair to say. We're looking forward to having more conversations with you in the new year. Morgan Stanley's Jim Caron, thanks so much for joining us this year. Coming up on the show, Micron's strong demand and pricing power for its memory chips is giving it a boost on Wall Street, lifting overall markets. We'll have that story coming up next.
All right, I got a call in 13. I got so chopped up last night too. Yeah, it's tough, man. I got to be, trading in low volume markets is a very, very tough thing to do. It's a very tough thing to do. I try and avoid it as much as humanly possible.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection.
All right, so we got a range we're starting to work here. So we got a range. I like that. We got a range we're starting to work. That means we're starting to get organized. Got the same thing on the ES. Got the same thing on the ES here.
Clean water, and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and
All right,
insights.
the chop is still on. We need the volume to settle in.
Are markets too optimistic? How do you worry about the things that are
This is interesting volume. We haven't had this kind of volume in about 2 weeks, roughly a couple weeks, or at least it feels that way.
on Bloomberg.
Micron's upbeat outlook is convincing Wall Street. The memory boom is stronger than expected. Bank America is raising the company's shares to a buy. Morgan Stanley said Micron's earnings are rising so fast and look so durable that valuation worries aren't even meaningful. Let's dig into Micron's results with Bloomberg Tech co-host Caroline Hyde. And this is, I think, one of those things that's high bandwidth memory. What's the story?
AI is the story, and the ever-needing infrastructure that actually really is focused on high bandwidth memory, which only has a few players involved. Micron has been leading here in the United States, SK Hynix over in Asia, Samsung's desperately trying to play catch-up, but basically already the CEO is saying, I'm sold out for fiscal 2026 already. That gives such pricing power. You're also getting pricing power, though, even in the PC part of the business, the more boring part of the business, the NAND part of the business, because that too is now suffering supply issues because everyone's focused on the high bandwidth memory. So Micron is up 100% this year alone. It's not even at a record high that was touched.
All right, so looks like we're going to start to range sideways here.
Spiral ever higher, and people really feeling resilient. Like analysts, only one says sell. Nearly all of them say continue to buy. And in fact, we've got one analyst, Rosenblatt, saying this could go as high as $500. Currently at
Maybe.
$257.
I wonder if that sell index is getting some increased phone calls
Yeah,
this morning.
it wouldn't be a surprise, but maybe that's what we're going to get.
It's super interesting because with AI, we've been talking a lot about this idea that it's crowding out energy usage, and that means people are paying more when it comes to electricity. So are consumers going to feel this as a secondary bite of AI, that all of a sudden your smartphone, maybe your PC are more expensive because the memory chip input into it are also getting more expensive?
It depends whether a smartphone maker decides to pass that on to the end consumer or sucks it up a bit themselves. But already you've seen Dell saying, I'm going to have to increase my prices. That was put by a different outlet earlier last week. Why? Because of the price of memory is going up so much. This has been a pressure point on the likes of HP as well. But a lot of these companies are also trying to dovetail into the world of AI PCs. Now, I'm trying to work out who the end buyer for that really is. It seems to be a corporate enterprise that's going in first and foremost. But maybe you will be willing to pay that much more for an AI-enabled smartphone or PC, and therefore they can suck up that higher cost rate. But look, this is just a glorious time to be selling
All right, guys.
sorts of chips. But what's interesting,
All right, we got a little momentum to the upside.
Higher
lower, really.
So I'm going to let this volume filter out, kind of get into a range where it's good for my strategy for the entry setup. Until the trade box on the left here comes on. If it's grayed out, that means I've got too much or too little volume to make an entry. So we're just going to give it some time to filter this volume in to get settled in just a little bit more. I've got a phone call I got to make for regular work. I'm going to get ready for that and do that here in just a few minutes. I'll be back like 10, 15 minutes, guys.
If you use ChatGPT, I'm just talking about on a consumer level, right? Or Gemini or any of these models, it remembers everything that you've told it and stores all the photographs that you put in. So,
and depending where they're storing it, are they using cloud? Are you going to go more on your edge computing? Are you wanting it to be done on your phone? That's sort of where many think eventually it will be done. Apple leads the charge there in terms of trying to give security to what you do. But yeah, these little bits of nano chips become ever more important.
Caroline, thank you so much. By the way, we're going to catch up in an hour. Word on the street is there's a fun rocket launch on its way. So we'll talk about that. We'll talk about that in about an hour's time. Caroline Hyde, also catch her on Bloomberg Tech, also in about an hour's time. Elsewhere, activist investor Elliott has built a stake of more than $1 billion in Lululemon. Joining us now is Poonam Goyal, Bloomberg Intelligence Senior Analyst for E-commerce and Athleisure. Poonam, it seems that the concentration of Elliott at this moment finds a new CEO.
Yes, I think, this is just positive reinforcement that a new leader at helm at Lululemon in 2026 will hopefully make the right moves to really put a product-led turnaround in place, because what we saw over the past few years has just been fueled by execution missteps that is actually causing Lululemon sales to turn negative for the first time since the pandemic in the fourth quarter of this year.
So what can they do? I've heard you, Poonam, in previous, over years, talking about ideas to make Lulu more profitable. One of them, I think, was maybe a skincare or some kind of lotion product that I'm not sure if they came out with. They went into or dabbled with shoes, for example. What else could Lululemon do in terms of product offering? Or do they just need to appeal again to like a higher income demographic?
Right now, I would not worry about them branching out into adjacent categories. The focus should be on turning the women's business around. That is where the pitfall has been, and that is where they need to compete more effectively as competition has really encroached on their space. So they need to get product there right, and they need to get the marketing message out right, with women believing that Lululemon is still the best wear for them when it comes to performance and it comes to going out.
Poonam, yeah, but like they still have, just quickly here, can they really overtake Aloe and Vuori too? 30 seconds.
I think they can. I think it's all about product. They have to show a material difference in their product. And if the product stands out, they can drive a turnaround. They do have the brand equity still in the consumer's mind.
All right, Poonam, thanks very much. Poonam Goyal there of Bloomberg Intelligence covers the retailers for us. Coming up in the next hour, retail goods, I should say luxury retail goods. Coming up in the next hour, Raquel Odin joins us from HSBC. She's overweight U.S. stocks as valuations remain below prior cycle peaks. Plus, we talked to about alternative investing in things like Hermes handbags with Luxus CEO Dana Auslander. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on Filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
CBS News on the Hour, sponsored by Eggland's Best.
I'm Deborah Rodriguez. Stocks are rising in early trading on cooler than expected inflation data from the government. Correspondent Michael Wallace has the numbers.
The Labor Department's latest consumer price index grew at an annual rate of 2.7% in November, down from 3% in September.
And that is much lower than was expected.
Bankrate financial analyst Stephen Cates says the tightening labor market is having an impact.
If consumers are not running out to spend as much, then that's going to have less upward pressure on prices.
Cates says if the December CPI also shows inflation cooling, the Fed may cut interest rates again in early 2026. Michael Wallace, CBS News.
The Dow is up 325 right now. NASDAQ's ahead 303. President Trump touted his economic record and blamed the Biden administration for inflation in last night's address to the nation. CBS's chief Washington analyst, Robert Costa.
There is frustration inside the Trump administration about how the economic record's being received by some voters, how it's playing out in the press, and even among Republicans in Congress. A lot of people close to the president told me this was a speech about reassuring not only the American people, but many Republicans to stay in line, to stay with the president as the midterms approach next year.
We've learned about a massive arms sale to Taiwan. CBS's Jennifer Kuiper.
In a move that is likely to not sit well with China, the Trump administration announces a sale of medium-range missiles, howitzers, and drones as part of a package worth more than $10 billion.
Breaking news from Boston. A jury has just sentenced Brian Walsh to life in Massachusetts State Prison for the grisly murder of his wife. She disappeared 3 years ago. Her body never found. So much for your favorite fruitcake or bouche de Noël. Just in time for the holidays, the stomach flu's on the rise. It's spread through food, water, and contaminated surfaces. CBS News medical contributor Dr. Celine Gounder.
Every time you have a new strain, whether it's norovirus or the flu or COVID, people don't have as much immunity to it, and so you're going to see more cases as a result.
Health officials in L.A. say wastewater tests show a 154% increase there over the past 3 weeks. Jeff Bezos' Blue Origin is set to launch 6 people into suborbital flight on the company's New Shepard rocket next hour. CBS News space contributor Christian Davenport.
What we're seeing is a move where accessing space is becoming a little bit more routine, and it's opening up to people like this who are using a wheelchair and actually will make it outside of the atmosphere, which I think is a significant detail.
German aerospace engineer Michaela Benthaus going up. She uses a wheelchair, will become the first to fly in space. This is CBS News. A wedding crasher in the UK looked awfully familiar.
Abby and James Hotchkiss sway to the strains of All My Love for their first dance as man and wife. At the piano, none other than Coldplay's Chris Martin himself. The groom's mother had asked the singer for a video message to be played at the wedding, but he went one better, helicoptering to the venue, serenading the couple. Then, after giving bride and groom a hug, he disappeared back into the English night. Vicky Barker, CBS News, London.
Merry Christmas from the Windsors. Prince William and Princess Kate are ringing in the holidays today by posting their annual greeting card to their Instagram account. It features a photo of the couple and their 3 children taken last April. They're all dressed in earth tones, smiling for the camera in a field of deep green grass dotted with tulips. The simple message, wishing everyone a very happy Christmas. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Lots of news out there today. We had that CPI print much dark, came in lower than expected, so we'll get some commentary on that. Jake Silverman is going to join us here, Bloomberg Intelligence semiconductor analyst, talk about those Micron earnings here. Poonam Goyal is going to join us as well. She's at Bloomberg Intelligence on the retail side. Apparently, Elliott Management, the activist Elliott Management, has built a $1 billion plus stake in Lululemon, so there could be some changes there. Christina Hooper, Chief Market Strategist at the Man Group. She's going to be in our studio. We'll get her thoughts on these markets here. And this is the one I need to spend some time on. Simon Casey, Managing Editor for Energy and Commodities on Trump Media to merge with TAE Technologies in an all-stock deal. So that's a little bit of a head-scratcher, but the stock of DJT, Mr. Trump's company, is up pretty significantly here today. So we'll break that down coming up. Right now, let's go to Lisa Mateo and get a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will the average global temperature in 2025 be greater than 2.45 degrees Fahrenheit above the 20th century average? Well, at IBKR forecast trader, the yes recently at 6%. Start predicting today at ibkr.com/forecast. The last trading day for this contract, January 9th, 2026. Well, it looks like traders welcoming the slowest increase in consumer prices since early 2021. That's after core CPI increased 2.6% in November. Now that compares with a 3% annual advance 2 months earlier. The overall CPI climbed 2.7% in November from a year ago. Now that said, we have stocks advancing. The NASDAQ was already getting a boost from Micron's upbeat forecast. Micron shares are up about 12%. We go to the NASDAQ up more than 1%, 303 points. points. The S&P 500 rising 1%. The Dow up 0.7%. In the yield space, the 2-year 3.45%. That's down 2 basis points. The yield on the 10-year 4.12%, and that's down about 3 basis points. A busy day for global monetary policy decisions. The ECB, they left interest rates unchanged for a 4th straight meeting. Then we go to the Bank of England, cut rates to the lowest in almost 3 years. Let's head over to company news. Paul mentioned it. Trump Media and Technology, their shares are up about 31%. That's after announcing that merger with clean fusion energy company TAE Technologies. And then after surging 41% in its trading debut, shares of Medline, well, they're falling. They're down about 3%. The medical supplier raised $6.26 billion in the year's biggest IPO. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett, Phil, and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move. Today we can do that with Bloomberg's Alexandra Semenova. Alex, what are you looking at?
Good morning, guys. The first name I'm looking at is Instacart. The stock is falling this morning after Reuters reported that the FTC sent the grocery delivery company a civil investigation demand. The FTC is seeking information about one of the company's AI pricing tools. Apparently, a study showed that some shoppers got prices up to 23% higher. The FTC declined to comment on this, but they told Reuters that they are, quote, disturbed. In a blog post dated December 18th, Instacart said that recent reports around that surge in pricing inaccurately blurred together fundamentally different things: A/B price tests, dynamic pricing, and surveillance pricing. So it will be interesting to see what the FTC finds. The stock right now is down about 1.5%, but a lot less than it was in pre-market trading.
All right, good one to watch for. What's next?
Of course, we have Lululemon today. Activist investor Elliott Management has built a stake of more than $1 billion in the company. Elliott apparently has been working for months with retail executive Jane Nielsen. She is a former chief financial officer and chief operating officer for Ralph Lauren. Nielsen is viewed by the activist investor as a potential CEO candidate. Of course, the company had said that CEO Calvin McDonald would be stepping down at the end of January. Just taking a look at shares right now, they're up about 7%. The stock rallied 11% since Friday when they boosted their full-year outlook and also announced the departure of McDonald. However, if you look at Lululemon shares, they're down about 46% this year, so completely understandable that Elliott would want a turnaround in this company.
Micron.
Yeah, a positive sign for the AI trade. Looking at shares of Micron right now, they are surging about 11%. This is, of course, the largest U.S. maker of computer memory chips. The company gave an upbeat forecast for the current quarter. They also signaled a surge in demand, and supply shortages are allowing the company to charge more for their products. Analysts had estimated about $4.4 billion in revenue for the average period, but Micron actually blew out expectations. Their revenue will be $18.3 billion to $19.1 billion. It is benefiting from the voracious appetite for AI computing components. Its executive vice president of operations said that this is the most significant disconnect between demand and supply that he's seen in 25 years.
Wow, that gets your attention there a little bit.
Absolutely, and this is a stock that is up now 200% so far this year, even though it had been on a little bit of a decline before today's big rally. All right, Alex Semenova, thank you so much. Alex Semenova covering our market drivers for us. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Paul, I think we need to take a closer look at Micron, given the roaring comeback it's made this year.
Yeah,
I mean, memory chip maker, that's an old school product, but it's having its day. Let's bring in Jake Silverman, Bloomberg Intelligence semiconductor analyst, to recap these results. Jake, let's start just with the big, massive gain Micron has seen this year, up 200%. What were investors pricing in, and did they get what they wanted with yesterday's earnings report?
Yeah, I think investors were expecting a little bit more of a subdued outlook for the second fiscal quarter, primarily just due to typical little bit of conservatism for management, but also, you know, the February ended quarter tends to be a little bit more seasonally weak. You get the December portion of that, but usually consumer products, PCs and smartphones, tend to see a little bit of a sequential decline just off of strong holiday seasonality. We all kind of knew that pricing was going to be the most important factor going into the quarter, and obviously demand from AI is pretty strong. But there are areas like high bandwidth memory where Micron's actually somewhat constrained in terms of their ability to supply, just simply because they haven't invested in that much additional capacity, and they need to improve yields, and they're transitioning over from HBM3E to 4, which is to support NVIDIA's next architecture and other customers. So there's a few factors going on here that I think had investors a little bit more maybe conservative in terms of what they were expecting.
I don't know a lot about semiconductors, and I want to keep it that way. But what I do know is it's a cyclical business. Has this AI spending thing kind of evened out the cycles, or just throw the cycles out the window?
It's a little unprecedented. I don't think that we're necessarily at that point where we can say that there aren't going to be cycles, or at least not in the next, I don't know, call it 5-10 years, something like that. Typically what we see with memory, I'll just focus on that specifically. We tend to see something like 7 to 10 quarters, about 2 years plus of up cycles. And then what happens from there is that we tend to see some sort of cyclical decline, and that really is because of supply ending up being a little bit more supply growth relative to demand growth. AI is structurally limiting some of that. We're seeing AI inferencing demand being really strong. That's both for DRAM and NAND. At this point, DRAM is more important for Micron. It's a much larger percentage of their sales, and that's where high bandwidth memory is included in their revenue. And so what this does to the cycle, it's definitely extending it. It's elongating what we would expect, and it's making it a lot more difficult for investors, I think, to capture what will be the ultimate peak of the cycle. But on the other hand, we have to look at what's happening with pricing. If customers like PC, smartphone, automotive, run the gamut, if they can't get supply, someone's going to need to meet that, which means that Micron or their peers are going to at some point need to expand capacity. They're kind of working on it. They hinted at it with the additional capex increases for the fiscal 26 going up from 18 to 20 billion. But it's just a question of how fast and to what magnitude can they actually increase capacity.
Right, and I'm glad you bring that up, because we know that the industry is shifting production to the more advanced technology for AI data centers, and therefore there's a shortage now of this less sophisticated memory chips for PCs. Doesn't that mean that Micron has the upper hand when it comes to Dell or HP, and they can call the shots more? I mean, what does a Dell, what does an HP do then if they can't get what they need?
Yeah, it's complicated. So Micron has to decide how they want to allocate that capacity that they have, whether that goes to PC. I think that when you're a larger customer like Dell, HP, you kind of have to just take the product at the price that Micron is offering it. Now, I do think if you could buy in larger volumes, you can, mitigate some of those price increases. But at the end of the day, you're kind of you're being dictated by the market demand, the market forces. But also, when prices have declined in the past, PC makers have also benefited from that. Yeah. So if there is a cyclical decline, which I expect to happen at some point, they'll also benefit from a decline in memory pricing as well.
Where does Micron manufacture its chips?
Yeah, so it's primarily in Taiwan, but also in Japan as well. And they have a fab in Manassas, Virginia, but they're also expanding now to Boise, Idaho, and they're eventually going to bring a fab online in New York. So it's pretty geographically
where in New York?
diverse.
Do we know?
Clay, New York.
Where's Clay, New York?
I'm going to say it's up near Cornell.
Upstate. Okay. Yeah. So not near us.
No, upstate. There's, I didn't know there's upstate, and I think there's mid-state. Some people call it.
Well, everyone in Manhattan thinks upstate is like Westchester. So
right. Yes. But I learned this during the pandemic. There's different regions of the state of New York. I have to go Google that now. I wasn't aware of that.
Well, you're a New Jersey guy, so there's just a city, and then that's it.
That's exactly right. All right, Jake. Thanks so much for joining us. Jake Silverman, semiconductor analyst, Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. And again, Micron up 200% this year. So here's a company we say which companies are getting the tailwind of AI. Boy, that's one of them.
And it's such a contrast to the reaction that the market gave to Broadcom and Oracle's results.
Yep.
So there's already a little bit maybe of concern heading into these results. And, for now, definitely Micron is living up to the hype.
Yep, Micron got a market cap of $280 billion. So some real shareholder wealth being created today with that stock up about 10%. S&P is up 52 points. That's about 0.8%. The NASDAQ doing a little bit better, up 238 points. It's about 1.05%. The Tom Keene Memorial VIX, that comes in. We're now below 17, and the 10-year Treasury yield comes in at about 4 basis points here. We're right around 4.11% on your 10-year. More coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks advancing. This is after a downside surprise from shutdown delayed inflation numbers for November. We'll start with the NASDAQ. It's up more than 1%. The S&P 500 rising 0.8%. The Dow up about 0.4%. In the yield space, we'll start with the 2-year, 3.45%. That's down 2 basis points. The yield on the 10-year, 4.11%, and that's down 3 basis points. That's it. Commodities. COMEX gold, $4,358 an ounce. It's down about 0.3%. Brent crude up about 0.6%. $60 a barrel. WTI crude $56 a barrel. The Bloomberg Dollar Spot Index is little change. Let's go to shares of CarMax. They're down about nearly 1%. That's after the company said it sold fewer used cars than expected last quarter. Then we go to Darden Restaurants. They raised their comparable sales forecast. That was following better than expected growth at Olive Garden and also its Longhorn chains. Their shares up nearly 2.5%. And Lululemon on the rise. Their shares up 6%. Sources saying Elliott Investment Management, well, it's built a stake of more than $1 billion in the company. And I got to add in Birkenstock because their shares are down 7%. Predicted slower pace of sales growth in the coming year. It's sandals and clogs. Well, they're dealing with the impact of a weaker U.S. dollar and also, yes, tariffs. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. And we're streaming live on YouTube as well. As Lisa just reporting, activist investor Elliott Investment Management has built a stake of more than $1 billion in Lululemon Athletica. The stock is up 6.5% today, but I think the problem is it's down 42% year to date. So let's see what's going on over there at Lulu. Poonam Goyal, senior U.S. e-commerce and retail analyst, Bloomberg Intelligence. She's based down there in Princeton. She joins us. Poonam, what's going on with Lululemon? What's the problem here, and what do you think Elliott believes it can do to fix it?
The problem is that they've had plenty of execution missteps over the past few years, led directly to product innovation. And as they search for a new leader at helm, the candidate that he's outlined seems like a strong one. She's led a turnaround or helped lead a turnaround at Ralph Lauren in the past, at Coach, both iconic brands that struggled in that time, and she helped lead that turnaround. So I think Lululemon, while a different turnaround, she has the track record, if she is put at the lead, to really help drive this turnaround.
Poonam, tell us a little bit more about the role of Chip Wilson. He founded Lululemon, and he's been making comments really agitating for change, accusing Calvin McDonald of killing innovation and some serious strategic missteps. But he is not part of management at Lululemon. So why does his voice carry such weight?
I mean, he was the founder, right? He did find this brand. He did grow this brand very quickly into a strong, loved, well-known brand. And I think the brand emerged by having great product. Like if you think about Lululemon in the past, it was all about product. You could not find Lululemon product or something like it anywhere else. Leggings that made you feel good, leggings that performed. That's how they made their mark. And the question is, what's next? Have they been able to innovate fast enough to prevent competition from encroaching that space? And the answer is no. And that's the struggle that they're having right now.
Is it just a question of money, putting more money into, I don't know, research and development of leggings? I don't know how that works.
I think it's execution, right? It's about staying ahead of trends and really innovating faster than competition. Clearly today with AI and other mediums, there is the ability for a competition to come on faster. But that said, Lululemon was ahead of the game and they've kind of fallen behind. So they do need someone who knows the product story and can lead a product-led turnaround.
Before I let you go, Poonam, I just need to ask you about Nike. It's going to be reporting earnings later today, and there's a big question in terms of where it's at with its turnaround effort. I don't think they've given a full year outlook in quite a while. Are they in a position to start doing that now?
I don't think they're in a position to start doing that just yet. Remember, the first thing they need to do is clear inventory. They still have a lot of excess inventory that they're clearing through their direct channel. And we do expect inventories to decline when they report this evening. Though I would say in terms of a turnaround, we're still probably a quarter or two away to really understand what's the strategy to drive a sustained turnaround. And for that, we need to help them help us understand where they're going with running and basketball and just back into performance. performance. They've made a lot of progress this year, and I think they are doing better in the categories where they've innovated. The new shoes that they've launched, whether it's the Kobe's or the Pegasus, they have had great response, but there's still a lot of old stuff that needs to be cleared.
All right, very good. Poonam Goyal, thanks so much. We appreciate that. Poonam Goyal, she is the senior retail analyst at Bloomberg Intelligence. I think the hardest job as an analyst is biotech, because you have to understand all the
science.
The science. The second one is, I think, retail. I mean, not only do you have to, like every other skill set, I have to have my modeling so I can get my earnings forecast and blah, 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 blah. But then I got to figure out, like, what fashion is going to work and have an opinion on that.
There's no science on that either.
No.
That's like a gut call.
That's right. That's right. So
you talk
that's
to
what
Mickey Drexler, he's like, you know it or you don't know it.
Yep.
But
absolutely.
you can't, like, you don't go to business school for that.
That's why, like, I listen to Dana Telsley on the retail stuff. She just has a feel
very
for
sharp.
it. So she's just got a feel for it. All right, let's get back to these markets. We've got a lot of green on the screen here. If you just look at the headline number, the inflation story is getting a lot better out there. Although Cameron Christ said the data is basically worthless. Don't put too much.
Don't pay attention until when? Early January?
Well, December data would be better. I mean, as we go along, they'll get a little bit better. But so I don't know. We'll see how it goes. But the markets certainly like it. The markets certainly like it. Christina Hooper joins us. She's Chief Global Markets Strategist for the Man Group. She joins us here in our studio. Christina, it looks like we got some data this week, and yes, it may be less reliable than ordinary, but we got data on the labor market and on inflation, and it seems like the market's pretty positive on that.
Well, absolutely, because all signs point to more Fed easing being able to occur, regardless of who's in the Fed chair seat. So I think that is positive. But let's face it, bad news can be good news when it comes to markets. And I think we're seeing an increasing amount of decoupling between Main Street and Wall Street. And this is part of the story. For me, I'm quite concerned about the state of the labor market. And I think it was it was almost overlooked when we heard from Jay Powell last week about how the jobs data is overstating payrolls by about 60,000 a month. I think that should have sent more tremors through markets.
Well, you're fairly, I mean, you talk about being concerned. You're looking for potentially a mild recession here. So your concern goes a little bit further than I think most people, because I hear the consensus as, things are looking good. It's been a good 2025. That's going to continue in 2026. Inflation is resolved. Like, no one's really thinking too hard about that. So how are you thinking about positioning because of this potential recession, mild recession?
So what I think can happen is we could see a 2026 where we could see a stock market drawdown earlier in the year, almost a forecasting of a mild recession, then a recovery, and we could actually end the year with U.S. stocks up. But having said that, I think what we're likely to see is stock markets perform better elsewhere. So I think it's important to be well diversified, have that exposure to emerging markets equities, European equities. I think fiscal stimulus is going to matter a lot next year. And it's not just every government spending dollar is equal. It's going to be what kind of fiscal stimulus and what's the multiplier effect. And so I think that's going to favor areas like Europe. I also think it's about being well diversified within fixed income and, of course, having EM bond exposure. Also being in alternatives, having diversified strategies, and in particular, I think precious metals is an attractive play for next year because you have sort of the safe haven status of gold, but also the industrial applications for a lot of precious metals.
Even with gold where it is right now?
Even with gold where it is right now. It has a history. If we go back in time and look at stock market corrections and bear markets, it has a history of producing positive gains on average. Not every single time, but on average, positive gains.
So what's typically an international allocation for you guys? And are we overweight international or non-U.S. right now for you guys?
Well, there's no one size fits all. We have so many different portfolio managers on so many different strategies. But when I think about the average investor in the U.S., they're likely overexposed to U.S. equities, well underexposed to European equities. And that can just be a function of not rebalancing and having let their winners run over time, because we know U.S. stocks have outperformed for so long. I think we could actually be seeing the story change a lot. We've already seen it this year, so I suspect that when investors look at their calendar year returns for 2025, they say, oh, gee, I need more exposure to Europe. I think they need significantly more exposure to European equities, more exposure to EM, bonds and equities. I think this is a time to really examine portfolios and reallocate.
You made headlines, Christina, earlier this month when you said the Fed may need to turn back to quantitative easing to lower long-term borrowing costs if bond investors start questioning the independence of the next Fed chair. And of course, we don't know who that's going to be just yet, but you point to the Liz Truss moment in the UK as perhaps an example. What kind of ramifications would QE by the Fed have globally on those other markets that you say perhaps provide more value?
Well, I certainly think what we could very well see with QE is a tamping down of yields globally. I mean, what we've seen this year is the opposite of that. Yields, for example, in Japan have brought up bond yields globally. And so I suspect that if we were to see some significant quantitative easing, that could be positive for global bond yields in terms of bringing them down. I think there is a real concern around bond vigilantes. That cannot be addressed, or at least hasn't been addressed yet, in terms of reducing fiscal deficits. Doesn't look like that's going to happen in 2026. So it needs to be bond buying, and bond buying of longer dated securities to get us to there. And that could be the case no matter who's in the chair at the Federal Reserve, who's in the seat of the Fed chair.
We've seen the dollar weaken 10% in the beginning of the year on some of the trade uncertainty. It's kind of stabilized, I guess, since there, but it hasn't come back higher. What's the dollar call, do you think, for 2026?
So I think the dollar is modestly weaker in 2026. I don't think we're going to, as I said, I don't think we're going to see the growth we're going to see in other parts of the world. And I would anticipate that what we're going to see is a stronger euro. The ECB doesn't have a reason to cut right now. And I think, of course, we're going to see a stronger yen given where the Bank of Japan is going.
What's your highest conviction call for 2026?
Well, this might be a cop-out, but it's diversification. I think it's absolutely critically important to be well diversified, and that includes alternatives. Having that exposure, because I think what we're likely to see are micro or mini rallies and drawdowns over the course of the year, also rotations. We could easily see significant rotations based on different areas of uncertainty, like, for example, tariffs. If we were to see a Supreme Court decision that ends tariffs, that could cause a very significant shift. I think we're going to see risk-off periods during the year, and we're going to see risk-on periods during the year.
When do we get that U.S. Supreme Court on the tariffs?
I feel like it's kind of any day pending situation, right?
I think so. That could be, that could be very important for the market. I don't know how, if they overturn it, does everybody have to repay the money?
Well, nothing's going to happen quickly because this is the U.S. government.
Yes, okay, good point, good point.
So it'll take months before we know.
All right, Christina Hooper, thank you so much for joining us. Christina Hooper, Chief Global Markets Strategist for the Man Group, joining us live here in our Bloomberg Interactive Broker Studio. And again, we're sitting kind of at the highs of the days here, of the day. S&P is up 80 points, that's 1.2%, and the NASDAQ's up, call it 395 points, that's 1.7%. So some big moves higher today on the back of that in lighter than expected inflation print. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Wall Street getting a relief rally. That's after a CPI downside surprise. We look at the NASDAQ up more than 1.5%, 422 points. The S&P 500 rising more than 1%, 87 points. And the Dow up 0.8%, or 410 points. The two-year yield, 3.45%. That's down 2 basis points. The yield on the 10-year, 4.11%, and that's down 3 basis points. The Bloomberg Dollar Spot Index is little changed, and we have Bitcoin up more than 3.5% at just above 89,000. Over to company news this morning. The Information reporting that OpenAI held early talks with investors to raise as much as $100 billion at a valuation of about $750 billion. And in other news, OpenAI, as well as Anthropic, they're looking to expand their office footprints in Dublin, showing their growing presence over in Europe. And Coinbase Global, the biggest crypto exchange in the U.S., well, it has announced its entry into prediction markets and equities trading. It'll be available to U.S. Customers in the coming weeks. And finally, Big Oil has its first female chief. BP has named industry veteran Meg O'Neill as its new CEO. She'll take over the role in April. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
Lisa Mateo, thank you so much for that Bloomberg Business Flash. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu, and we're just talking about some CEO changes in Big Oil. Let's stay with the energy theme here, because the newest company to get into the energy sphere, admittedly in nuclear energy, is the Trump Media and Technology Group. DJT is the ticker, of course, and it's President Trump's company, basically a social media company because it owns Truth Social, but they are now in nuclear fusion. So we want to understand what's going on here. Simon Casey is Bloomberg News' managing editor for energy and commodities. Simon, Trump Media and Technology is now a nuclear fusion company. How does this work?
Yeah, I don't think anybody had this on their bingo card this morning. We certainly didn't. It appears that they are a fusion company as much as they're a social media company or a crypto company now. They're merging with a company called TAE. It's far as we can see, a credible fusion player. They've been around for over 2 decades. They've raised money from the likes of Goldman Sachs, from Google, and various other big investors. I think Chevron, the oil company's venture capital arm, has put money in as well. This deal gives them, I believe, something in the region of $200 million of a cash infusion to continue their work. For DJT, they are touting this as a pivot to the exciting world of nuclear fusion, which is the future of cheap, affordable, abundant energy for everybody. And that's been the dream for decades, of course. There was a breakthrough in 2022 where fusion was actually created for a brief moment in a laboratory, Lawrence Livermore Laboratory. And that was a fairly significant achievement, and it's been recreated since, but only sort of sporadically and not at commercial scale. We're a long way off. It's very technically challenging to do this, let alone commercially.
Well, I'll ask the elephant in the room question. Where are we on conflicts of interest with this president and this administration and investments in business and that type of thing? Where's the market kind of evolved to? This is before the Trump administration. This stuff, I would say, rarely happened.
It almost, I struggle to remember it happening now. It's commonplace, isn't it?
Yep.
And let's be clear, the Trump administration has a very robust, I would say, very sort of clearly outlined energy agenda, an energy dominance agenda. They are pro-fossil fuel. They also support the nuclear industry, and the nuclear industry has gained a lot of momentum since that discovery I mentioned in 2022. But since Trump has come in, he's been very supportive of the nuclear industry to build new nuclear reactors. Look, we have serious issues here in this country with with power demand from the AI industry and how we're going to service that demand and keeping a lid on prices. The Energy Secretary, Chris Wright, is also very pro-nuclear, been very vocal on that front. But yeah, it's kind of amazing, nevertheless, to see this kind of deal this morning.
Well, just looking at the DES function for DJT, 12 employees. That's, I guess, in the trailing 12 months, $3.7 million of revenue, $1.3 billion of cash, though, $950 million of total debt. So what does Donald Trump Company, Trump Media and Technology Group Corporation, what is that? What did they really bring to this deal other than maybe some cash?
The name, I guess, the ticker.
Okay. Right.
Yeah, it's to a large extent, it is a meme stock, I think it's fair to say. And with a cash pile, and if they can use some of that cash pile to fund nuclear research and development, then maybe that's a sensible use of that cash.
Yeah, name recognition goes a long way in 2025 and 2026. Simon, how big is the investable universe of nuclear companies right now?
Wow, that's a good question. I mean, in terms of fusion companies, I think this will be the first company, fusion developer, that's actually listed on a stock exchange. So there's a handful of these companies. Some of them on the East Coast here. There's a cluster around the Boston area, and they're all privately held, apart from this one. In terms of other nuclear stocks, there's a handful of them. There's a company called Fermi, which has had a lot of interest recently, which is trying to develop a campus down in West Texas that would include AI data centers and potentially a new nuclear reactor to power that data center. That's a very ambitious project. Then you have a handful, as I say, of other companies that are trying to develop small, medium-sized nuclear reactors. And this is the other thing that the Trump administration is very keen on, to kind of lower the cost of entry, if you like, into the nuclear industry.
What can you tell us about the timetable associated with commercially deploying utility-scale fusion power companies?
So, well, if we're talking fusion, it hasn't been proved at commercial scale. So we're probably talking decades before, I would say. It's fair to say.
I'm just looking at the Bloomberg reporting, and the combined company plans to begin construction next year on the world's first utility-scale fusion power plant. So that's going to take a long time to construct that.
I mean, we don't even know if it can work at a commercial scale. Now they can pour the concrete and build the foundations. Nothing to stop them doing that.
And this sounds like a multi-billion-dollar type of plant for these things.
Potentially, no one's ever built one before, so we don't really know. I mean, we know that conventional fission reactors, which have been around since the end of the Second World War, the last one built in this country went over budget, and it was about over $10 billion, I believe.
Who's going to provide the financing on all that?
I think if it can work at scale, then a lot of more investors might take a look at this, including mainstream investors. But it's so sort of hypothetical at the moment. It's almost impossible to say. What is the return on investment going to be for something like that?
It's early innings, not even first inning at this point?
This is very early innings. I mean, the sort of the well-worn joke, it's not even funny anymore, that nuclear fusion, it's the future, and it's always been. It's the future 30 years out, and it always will be 30 years out. That's kind of where we've always been. It exists in the textbooks. It now exists in the laboratory, which, don't get me wrong, is a big step forward. But transferring that, creating nuclear fusion for a fraction of a second and then evolving that to where it's on all the time and being able to power a town or a city is a quantum leap.
SMR, small modular reactors.
Yes.
That seems like pretty cool technology to me, but that's still years out.
That is, again, probably years out because it's technically challenging, but it does exist. I mean, you use them in nuclear submarines and aircraft carriers.
Yep.
So there's nothing to stop you taking one of those out of a ship and having it on land. The challenge there is actually possibly more regulatory. And again, that's something that the Trump administration is actually trying to address in terms of permitting reform and so forth. So there are companies that are listed that are developing these things. We haven't seen one yet that's been sort of produced and it's been proven it can be manufactured at scale, but it's more achievable, I would say.
All right, that sounds like something to think about. Simon Casey, managing editor for energy and commodities for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio. Because I'm probably in the camp as it relates to powering all this stuff. We're going to need everything. I'm going to need wind. I'm going to need solar.
Yeah,
I'm going to need
as
nuclear.
Simon says, this is looking decades down the road here.
Yep. So it's going.
I mean, we have nuclear power plants, fission. We don't have nuclear fusion yet, except as he said in the textbooks and now in labs.
All right, we'll figure it out. S&P up 88 points at the high of the day. The Nasdaq is up 420 points. That's 1.8%. So a big move higher in risk assets. The 10-year Treasury yield that's down about 4 basis points, 4.11% on the back of that inflation. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So check us out there. We got some more earnings. FedEx coming up. We want to talk about that. Walmart, we got a cool story on the Bloomberg Terminal. Walmart's $115,000 pay and better rigs draw women to trucking. How about that? So we're going to get all that in coming up. Lee Klaskow, Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst, joins us here. Lee, let's start with FedEx here. What are you looking for with their earnings?
Yeah, I think it's going to be some decent growth year over year on volumes, probably low to mid-single digit growth. On the earnings side, you're probably going to have, at least where the street is, around 2% EPS growth on 4% revenue growth. They're still dealing with a number of headwinds from a tepid economy. Obviously, what I think we're most interested in is their insights into how peak season is going. This is a quarter that ends for them at the end of November, so they get a little taste of what customers are doing and consumers are doing, and that's probably a nice read through not only for the economy but for a lot of retail names out there as well. Also on their freight business, which is their less than truckload business, that has been impacted dramatically by the soft industrial production and manufacturing economy. The ISM manufacturing index has been down 35 out of the last 37 months, which is a really kind of a good indicator for LTL or less than truckload demand. We expect lower tonnage to be mitigated by decent pricing. That's a consolidated market where they have some pricing power, so we could probably see mid-single digit rate increases there.
And just to be clear, less than truckload is a shipping method for smaller freight that doesn't fill a whole truck, so businesses can share truck space with other shippers. Yeah, because I hear this term so often, and I don't know what it means necessarily. Lee, what about tariffs? Because initially, FedEx was seen as incredibly vulnerable from the direct impact and indirect impact of tariffs on demand from consumers for goods, for parcels, from businesses as well. How has that played out?
Yeah, probably the biggest impact to them is the removal of the de minimis exemption, which allowed lower value freight, $800 or less, to come into the country and not have to pay duties. So this really drove a lot of volume, especially coming out of China into the United States from companies like Temu and Shein. But those kind of companies took advantage of that, and the Trump administration wanted to reduce that loophole, and that actually had bipartisan support. The Biden administration wanted to reduce that or limit that as well. It just came to fruition during the Trump administration. So I think that is a pretty big impact. You could see volumes between China and the U.S. for all parcel carriers down 25 to 30% because of that.
Lee, we've got one of the most highly read stories is about Walmart and attracting women truckers. I didn't know how big Walmart's trucking fleet was. Talk to us about what's going on at Walmart and maybe women in trucking.
Yeah, so they're like I believe the second largest private fleet out there. I think Pepsi is the largest. Hopefully I'm right in saying that. And Walmart is known to be a great employer for truckers. They pay well above the average. They have better benefits. And it's a good place for somebody to learn how to become a truck driver. They do hire a lot of experienced people, but they also have their own programs where I think it's 14 to 16 week program, which is significantly more than you and I could get a CDL probably within 4 weeks. I probably wouldn't advise you or I being a truck driver for a safety factor. But they produce not only better paid truckers, but they also produce safer drivers because of their more intensive training. And the industry has been reaching out to women to become truck drivers. It is a very difficult job. A lot of truck drivers are not home every night, and so you have to be willing to be away from home for maybe like 5 days at a time. And it's also a tough lifestyle, right? I mean, you're not going to have maybe the food choices that you want on the road. Again, you're away from your family, and rest stops maybe aren't the best places for people to stop, and some truck stops never really cater to women before, and I think that has slowly changed. There's a great organization that I recently attended and spoke at their conference, Women in Trucking, where they really are advocate for women within the freight transportation industry, and you are seeing more and more women gravitating to that, which is can be an excellent profession for folks.
When you say Walmart pays more, how much more are we talking, Lee?
The average trucker makes anywhere between. This is going to be a huge range. You can probably drive a truck through it, but $50,000 to $100,000, and Walmart tends to pay well over $100,000 for their drivers, and I'm not quite sure if that also includes benefits and overtime, but they are known for being a better employer when it comes to compensation.
Yeah, just amazing. All right, Lee, good stuff. Lee Klaskow, Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Coming up, we're going to have a spaceship launch coming up here. The Blue Origin will launch its New Shepard NS-37. That's a 6-person crewed flight that will lift off from West Texas.
The flight's only 10 to 12 minutes, but it's an exciting one.
It is. So, especially if you're in it. So we're going to bring that to you in just moments. It's scheduled for the top of the hour. We'll see how it goes. You know how these astronauts are with their timing and things like that. This is good.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Bloomberg Intelligence here. Paul Sweeney and Scarlett Fu. This is the second hour of our program on this Thursday morning. We're, of course, coming to you live from the Bloomberg Interactive Broker Studio. We've got a lot going on this hour, including the launch of New Shepard NS-37. It's a 6-person crewed flight that will lift off from West Texas. We will bring you there live when it begins. Following that, we're going to speak with David Kudla, founder, CEO, and chief investment strategist at Mainstay Capital Management, to get his outlook on the markets. And Craig Trudell, who is a Bloomberg Global Autos editor, will talk to us about CarMax and how its used car sales miss is the latest blow for this company. And following that, John Tozzi will be joining us on Bloomberg's latest series about cancer capitalism. He has a story called One Generic Cancer Drug Costs $35 or $134 or $13,000. It all depends on where you go, what hospital system you use. But first, we want to bring in Charlie Pellet for our Bloomberg Business Flash.
Right, I thank you very much, and here's what's going on. The Dow, the S&P, NASDAQ all advancing. CPI Thursday, stocks rallying, data showing inflation cooled last month, ignited stock and bond markets, bolstering bulls with more prospects for more decisive Fed rate cuts in 2026. Right to the numbers, the S&P 500 index up 86, gain there of 1.3%. Dow Industrials up 418, up 0.9. NASDAQ Composite Index ripping higher now by 1.8%, up 411. NASDAQ 100 Index up 1.9%. And the Bloomberg Mag 7 Index surging 2.4%. 10-year 4.11% with the 2-year 3.45%. Gold up 0.1%, 43.44 the ounce. West Texas Intermediate crude 56.39 a barrel, up 0.8. And Bitcoin now rallying 2.8% to 88,303. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Underlying U.S. inflation did rise in November at the slowest annual pace since since early 2021, an unexpected improvement following months of stubborn price pressures. Micron Technology shares surging after earnings. MU on the ticker, up now by 11.2%. The warm reaction to the Micron report sets the company apart from Broadcom and Oracle, which you recall jarred shareholders with their results last week. Today, Oracle up 1.8%. Broadcom trading lower by just about 0.2%. After the close of trading today, we will be hearing from both FedEx and Nike. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Green on the screen. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, there was a big selection to choose from, but I'm looking at shares of Accenture, that is ticker ACN. We're seeing shares lower, down about 1% right now as we speak. This is after the company gave a second quarter revenue forecast with a midpoint that fell below what analysts had expected. We did have Vital Knowledge, the analysts over there, saying that they do think that the company put up respectable numbers, but they say that the company is often grouped in the AI losers basket amid fears that its model will be disrupted by new technologies. So we are seeing shares a touch lower, and it hasn't really been a pretty year for the company. Shares down about 23% so far this year.
And my favorite shoe company.
Is it?
Yes.
I was wondering.
With some news. I have like 20 pairs of
I have a friend
Birkenstocks.
that's obsessed with Birkenstocks. I didn't know if people are still buying Birks.
I have sneakers,
Okay.
like Birkenstock sneakers.
See, I didn't know this existed, so you're loyal.
Yes.
A loyalist.
Several, like at least 4.
Well, shares of Birkenstock are lower, ticker BIRK, down about 9% right now. This is after the company gave an outlook that was seen as disappointing. They're essentially forecasting slower sales growth for the year ahead. This is, of course, due to the impact of the weaker U.S. dollar. They also cite tariffs. So we really are trying to see the CEO coming up with some sort of turnaround story, but right now it doesn't seem as though it's paying off as it currently stands. Shares of the company are down about 26% so far this year.
Are Birkenstocks cool?
Are they comfy?
Or are they just comfy?
You break them
they're
in?
both. They're both.
Okay.
They're very comfortable, and they're wide in the toe box, which is important for me.
Okay.
And they have, an arch support, so that's also good.
All
The
right.
only criticism I have is that the sole it wears down pretty quickly.
I do see that. I've never owned a pair. Never owned a pair, but I know some
The
people
ones
do.
that look like mushrooms, I think it's the Boston one. Those are really popular right now.
Now I have to look up all the photos.
I know, now we have to do that.
We're gonna get Paul Sweeney in some Birkenstocks.
Oh, boy.
I'll pay to see that, please.
Exactly. All right, CarMax.
CarMax, ticker KMX. Also lower earlier. Now it's in the green, but we did see shares earlier falling more than 6% in this trading session. This is after the company warned about fourth quarter margins. They're saying that they expect lower retail used margins in the fourth quarter in order to improve price competitiveness. The company also plans to boost its spending on marketing. So it doesn't seem as though this is what investors wanted to hear, but we are seeing shares bouncing back just a tad, up about 0.8% right now as we speak. But it really hasn't been a great year for the company. Shares have down about 50% so far this year in 2025.
All right, good stuff. Thank you so much, Nora Melinda. She is our Bloomberg Television Markets correspondent. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. So, Paul, we had some economic data this morning. It was delayed, as everything is these days, and it didn't really do much for the market in terms of changing the narrative, the existing narrative.
Well, I think, the markets are rising higher here on this inflation data. Just if you take it at face value, which a lot of folks are saying don't do that, it suggests that, okay, maybe inflation's not a problem. This Fed can cut rates. So let's talk to somebody who actually did go into the details. I'm not a detail guy. I'm just like, I talk to detail people, and they tell me what to say. And that would be Mike McKee. He covers all the economic stuff for us here at Bloomberg. Mike, again, I get a core year-over-year 2.6% inflation rate. The consensus was 3%. Is that a good number? Tell us about the quality of that number.
It would be a good number if the quality were high, and we don't know. You could have done the details on this one, because if you open the report and the charts, they're pretty much blank spaces throughout. They didn't have any month-to-month data. They just basically had a 2-month change in the price levels. And so they calculated things on a year-over-year basis, and we saw a drop to 2.7% for the headline, 2.6% for the core, which is exactly what the Fed wants to see. But those are really big drops, and it implies some real changes in prices going down a lot. And a lot of people are pointing the finger at housing, that the Bureau of Labor Statistics, for whatever reason, just presumed there was zero change in the price of housing in October, and that has biased the numbers down. Now, the people who get nerdy about all this and follow it, as you mentioned, have put out a lot of notes saying, I'm not so sure about this. So we'll wait for the December numbers come out January 13th, and that'll give us a better idea.
Will those be better quality?
They'll be a better quality because they get the whole month's data. It'll be a little different because they don't have all of the November data, but they'll have more November data, so they can do a month-over-month change, which we didn't see in these 2 months.
Okay, so it's a very incomplete CPI report when it comes down to it. Mike, I know that you look over all the economist notes, you look at what people are saying. What is the feedback from the peanut gallery? How are people interpreting this data point when it comes to understanding the economy and where we are?
Well, the interpretation would be, this is good news. We're seeing a decline in a lot of different areas. There's still inflation, particularly a lot in food, but it has come down. The rate of inflation has come down. Now the question is, are the statistical quirks in this going to continue to tell the same story when we get to the December numbers in January, or is this kind of a one-off weirdo report that will kind of be forgotten by the time we get the next set of numbers?
Well, the market's certainly reacting, with the S&P up 1.4%, yields coming in about 3 basis points, 4 basis points on the 10-year. At the very least, can we say it doesn't appear that we have more inflation in the economy? Maybe it's not 2.6, but doesn't appear to be something north of 3.
That seems to be the case. It could all change. The biggest thing is because, as we mentioned, that housing is the issue, and housing is about 30% of the CPI. So it could weigh down an awful lot on the number. The question is, did also, because they got started late collecting the data once the government shutdown ended, did they collect more data during the period that we were seeing holiday sales, Black Friday sales and things like that at the end of November? And then did that bias it down as well? So a lot we don't know about how accurate this is.
Okay, so, I mean, investors can only do with it what they can. They're going to take it at face value, and it seems like that's what's happening right now. Mike, are we caught up to date on all this delayed data, or we still have more data that's going to come rolling out over the next week from, way back in September, October?
Well, we still have some more data that people will be interested in. Next week, we get the GDP numbers for the third quarter, which we would have gotten back in October. And we get updated PCE spending and income numbers, and we'll get an updated PCE inflation report, although probably the economists are going to be able to put together a number in advance of that, so we have a pretty good idea of what it is. And after that, most of what we'll see is lesser import. So we're almost caught up to the things that we care about.
Got the initial jobless claims. That used to be kind of important. 224,000 in line with expectations. The continuing claims, which people like you tell me I need to pay attention to, came in a little bit lighter than expectations. So nothing alarming, at least in those numbers, really, on the labor front?
No, labor front, nothing changes there. That story doesn't change. The Philadelphia Fed number, the headline number, came in at negative 10.2 after negative 1.7 in the prior month, which would sound bad, except the underlying numbers weren't bad. Prices paid went down.
They're selling fewer
employment
cheesesteaks in
went up.
Philly?
So, the picture is sort of status quo after all the data we've gotten now.
I mean, this is a loaded question, but did the president have this data, the inflation data in particular, when he spoke on the economy yesterday?
He should have, yes.
Oh, okay. So
he would have gotten the way it usually is handled. They would deliver it at 6 p.m. the night before. Last night, the night before it was released, 6 p.m. last night, to the chairman of the Council of Economic Advisors, who can then share it with the president. But interestingly enough, the problem is, if you're the president, you're going to make a speech about inflation. You can't quote any of the numbers.
Right.
So
you're
he may
speaking
have
broad
had
brushstrokes.
He may have had it, but as has been pointed out by many people, the numbers he used about inflation were not tethered to reality.
But I mean, it's fair for him and for the administration to say, economy's growing, inflation's moderate, the labor market's still going strong, things are good.
Yeah,
That's a fair statement.
and there's a big difference between what you do if you're a Wall Street economist or Wall Street trader and what you do if you're a politician. A politician, you claim credit for everything and point out the good stuff and hide the bad stuff. The administration's problem has been, and the dissonance last night was that they're claiming credit for things people don't feel like they see. You're telling me food prices are down, but I go to the grocery store and food prices are still high. So that's a tough sell for them. And then he also makes up a lot of numbers. So we don't know, it's hard for him to make a case.
Yep.
Didn't his administration say, I feel like it was a Scott Bessent or a Howard Lutnick, that at some point he would own the economy, that early on in his administration, it was Biden's economy. So whatever happened was Biden's fault, but they would own the economy at some point. Are we at that some point?
Oh, we passed that point. I think if you had to put a time period on it, you would sort of look to the beginning of summer or at least the passage of their big bill. And if the numbers are good, they come out and say, it's our economy. If the numbers are bad, they say, well, we're still dealing with the Biden economy. And it's, of course, disingenuous, but I can't say that they're any more disingenuous than any other administration at doing
This is what you do.
This is what you do.
What should the economy expect, or what should we expect from that piece of legislation, the One Big Beautiful Bill? What should we expect in 2026?
Well, we should expect some stimulus because it does change tax law. There will be maybe bigger refunds this year. And we will also see certain categories of people. It's not as broad as the president was saying, but some people won't have to pay taxes on tips. And some seniors get a expanded tax credit for Social Security because they're seniors. It's not a tax refund in that sense. And some people get no tax on overtime. So they'll have a little bit bigger take-home pay.
Back when I was in the tip game, nobody reported tips.
But now people put it on their credit card bill, so I think it's a little different.
It may be harder now because back when they were still using Confederate money then.
I was a bartender in Richmond, Virginia for 3 years.
The other side of this, though, is if they don't solve this problem with the Obamacare subsidies, anything that comes into your pocket
go right out.
It's going to go right back out again and more. So it's really hard to know how the economy is going to develop.
So that's an interesting point. Do you see that coming up in people's forecasts for CPI?
No.
Shouldn't it, though?
Well, part of it is the way these things are calculated. The CPI uses the profit margins of insurance companies to try to impute what the rate of inflation is. PCE does it a different way. PCE measures what the insurance companies receive as opposed to what the customer pays. And so at this point,
They're
it's
not
hard to know
measuring my
exactly.
out-of-pocket costs.
It's not. We can guess that it will push inflation in healthcare up, but we can't have a good grasp on by how much yet. And all this could change because they're blasting that extension out of the House with the discharge petition. So around the first of the year, they may be able to solve this problem. But that's something to keep in mind and keep an eye on. See whether it takes money away from people.
And it's serious money. I mean, it's for material amounts of money here for 22 million Americans. I mean, I would think that would be political suicide. I mean, I'm not a poli-scientist, but I would think that'd be political suicide.
Common sense would tell you that.
Common sense would be like, get something going.
Well, the Republican congressmen who have to run in districts where it's a close race are pretty upset because
they're leading the way on
that
the
doesn't look
revolts.
good.
Yeah. All right. We'll keep an eye on. There's a lot of stuff to keep an eye on. But again, market's definitely reacting to that better than expected PPI number. We'll see how that number gets, or I guess trends out over the next several periods. Mike McKee, thanks so much for joining us, helping us understand what's going on out there. Mike McKee does all the economic stuff for Bloomberg Television, Bloomberg Radio. We appreciate getting a few minutes of his time. Again, the stocks are moving here, folks. We are pretty much at the session's trading highs. The S&P up 90 points. 1.35%, and the NASDAQ up 440 points. That's almost 2%. So that's some moves there, folks. And the VIX 16 coming in here. So we're in good shape. More coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. CPI Thursday. Stocks are surging. Data this morning showing inflation cooled last month is igniting stock and bond markets, bolstering bulls with prospects for more decisive Fed rate cuts in 2026. S&P 500 index is now very close to session highs, up 91.6812. That is a gain of 1.3%. Dow Industrials up 440, up 0.9%. NASDAQ Composite Index up 1.9%. The NASDAQ 100 Index up 2%. And the Bloomberg Mag 7 Index up now by 2.6%. The 10-year at 4.11%. The 2-year 3.46%. Gold up $30 the ounce, 43.69 now, up 0.7%. West Texas Intermediate crude oil up 0.8%. Right now, WTI's at 56.45 and Bitcoin 88,120. Bitcoin up 2.5%. Trump Media and Technology Group, the company behind Truth Social, is getting into nuclear fusion. Company says it will merge with TAE Technologies, a closely held fusion developer founded in 1998 in a transaction valued at more than $6 billion. Shares of DJT, they're up by 32.9%. After the bell today, FedEx and Nike. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet, for that check on the markets. We do have a rally on our hands here with the S&P 500 gaining for the first time in 5 days after some cooler than expected consumer inflation data points. Let's bring in David Kudla now. He is founder and CEO and Chief Investment Strategist at Mainstay Capital Management, joining us right now from Troy, Michigan. David, how are you thinking about the inflation data that was long awaited and at this point, if you take it at face value, seems to confirm that we don't have a whole lot to worry about when it comes to inflation?
Good morning, Scarlett. Well, unfortunately, the way I'm taking it is it's a meaningless number. What we've learned is where they didn't have the data for certain categories, you just entered a zero. So it's so far away from the trend, and knowing what the errors are, it may have been better to not report it again, but they at least should have the caveats out there about the number. So and here's what I'll say: if we look at it, moving into 26. I hope this doesn't. Let me say this: I hope this doesn't give anybody hope that inflation is we're headed right back down towards target because we're not, and we're not with what's going on with the debt crisis we have in this country and around the world. What's happening with just the level of supply for bonds that are coming to market, for debt that's coming to market, treasuries, and we're going to move into a higher inflationary environment. So if anything, this number should not only be thrown out, it could give somebody a real misread. Kevin Hassett may want to do a victory laps about it, but it's not a complete number. There's data missing.
Sorry, are you surprised by the market's reaction here in the stock market?
No, if you look at it, the NASDAQ was down 4 days in a row. So it's, we were due for, like we say, we're due for a correction or we're due for a little bit of a pullback. When this number came out, there was no, qualification around it. And boy, it looks great. Stocks would rally on that. But we've had a tough, this is December 15th to December 31st. Is seasonally a very good period for stocks. You have the Santa Claus rally and you have the pre-Santa Claus rally. And we've had 4 days of a sea of red. So it's about time to have a nice up day.
Okay, that's fair enough. We did mention the first rally in 5 days for the S&P 500. There's been a lot of concern over AI bubble fears. Micron seems to have provided investors a report that pushes back against that AI bubble fears, at least for now. How are you thinking about the Micron data point after Broadcom and Oracle's results were so poorly received?
Yeah, it's it's encouraging, and I'll tell you really the macro or a larger data point I think is meaningful in terms of is this an AI boom or an AI bubble or an AI boom that's becoming? We still say AI boom. Does it have bubble-like characteristics? Yes. Is it scary when you look at an Oracle and what the amount of debt these companies are taking on could potentially do to them? These companies that have otherwise fortress balance sheets, wide moats, very healthy companies, but just massive amounts of debt they're taking on for AI CapEx spend. But we look at tech stocks are up over 25% this year, and what's happened to valuations? Because that's what people want to do, right? Compare it to .com and all the problems back then when you had companies that had multiples of 50, 100, 150, 200. The valuations of tech stocks are right where they started the year.
Yep.
So earnings forecasts are keeping up with price. So it's not that they're becoming significantly overvalued, even though they've gained over 25% this year. It's being reinforced, and we're in a great corporate earnings period in terms of reported earnings, the beats, and gross margins.
You got in your notes here, the Yukon Cornelius rally. I get the reference. Very cool. It's one of my favorite characters. How does it apply to 2026 here? I mean, we can't have the same expectations in 26 in terms of the performance that we got in 25.
I will say this. We are still very bullish on gold, silver, and precious metals, hard commodities in general. When you get into palladium, platinum, copper, let's just take gold and silver, right? Gold, speculative investment. It's about the central bank buying. It's, the amount of central bank buying has gone up 5 times since 2022. I mean, they're looking at what's happening to fiat currencies around the world. They're looking at this debt crisis, and they want insurance. They want to diversify their reserves. They want insurance. China's been selling a lot of U.S. treasuries to buy gold. So we have that along with investors looking at it the same way. How can I get some some insurance against inflation, which we think is going to go higher in 26, at least for a period of time.
Right.
Silver has incredible industrial demand as well.
Yep.
That with the AI boom has grown even more.
Right. All right, Dave, thanks so much. Appreciate it. As always, David Kula, founder, chief executive officer at Mainstay Capital Management here. We got a rocket launch coming up in just a moment. Blue Origin will launch New Shepard NS-37, a 6-person crewed flight that will lift off from West Texas. We see the clock up here, T-minus 2 minutes and counting. We're going to bring in some folks that can help us understand what's happening here. Sana Pashankar, she's Bloomberg space reporter, and George Ferguson, Bloomberg Intelligence senior aerospace, defense, and airlines analyst on this new rocket launch here. Sana, talk to us about what's going to happen today.
Yeah, so on this New Shepard launch, the New Shepard rocket will boost up to the Kármán line, which is the internationally recognized boundary of space, and it will bring a crew of 6 up there for a quick experience of weightlessness. They will be able to see the Earth from space, and then, they'll come down, the engine will cut off, and the capsule will come down under parachutes. The trip lasts roughly 11 minutes.
Yeah, it's pretty incredible that this all takes place within an 11-minute span. George, tell us a little bit about these New Shepard rockets. What makes them special?
Yes, I mean, New Shepard is largely been designed just to work, roughly in the Earth's atmosphere. That's why they just get to the edge of space. It's an advancement. It's one of the first new engines developed in many, many years to operate inside the atmosphere. I think it helps to, continue to push space exploration forward, even though it's a tourism mission, by, working new ways to lower costs, reuse parts of the rocket. Again, this is largely a tourist mission, though, and really stays roughly inside the Earth's orbit, so not cutting edge.
Yeah, to that point, there's 6 people on this flight,
Sorry,
including
not orbit.
The
Not
first
orbit,
wheelchair
atmosphere.
user to fly to space.
Yes.
You know what? The clock has stopped,
Yeah,
Paul.
so we're back on a hold here, T-minus 58 seconds. So
I think high winds have been a problem.
Okay, well, it's West Texas.
It is. It's West Texas, and it was due to start at 11 a.m. Eastern time, so it's already 30 minutes behind schedule. But Sana, let me come back to you for a moment here, because George was talking about how this is a tourist flight. There's 6 people on this particular flight. How do you get on this flight? How much does it cost?
Yeah, so, Blue Origin has really not disclosed much publicly about
Okay, guys, I'm back.
strategy,
Sorry
and they
about
also
that.
did
That
not
call
disclose
took
the pricing
forever.
benefits. But Virgin
Forever.
Galactic, which is another space company, which does
What
space
do we got
tourism,
going? Looks like there was a big
$600,000 for a
Shrek
similar
going on
experience.
here.
But Blue Origin
Try and get
has never
caught
said
up
how
here.
much a seat costs on a New Shepard flight.
That might have been tough to get in on.
Jeff Bezos.
That happened
Elon
really
Musk,
fast. Look at the
they work with
rejection
some of
from the
the
VWAP.
defense contractors, the rocket.
What are we thinking now, guys? What are we thinking now? I'd like to get in on something just to get even at least today.
Yes, I mean,
I'm not even going to be greedy.
Jeff Bezos, sorry.
Anybody get a
Blue
piece of that
Origin,
long?
They're developing New Glenn as well, right? New Glenn is sort of their heavy lift rocket that's already done some missions for the government. I think it's also going to sort of take the mantle in pushing, Project Kuiper, or I think it's now called LEO, the Amazon low Earth orbit constellation into space, into into large numbers. So look, I think what both of them are doing, SpaceX and Blue Origin, it's absolutely great, right? We're taking money from the private sector. We're developing ways to go to space cheaper and cheaper. I don't think they're going to make a lot of money going to space. I think the opportunities in space are all about what you put in orbit and what you do beyond orbit. But it's great to see again SpaceX, Blue Origin spending the money to develop the rocket motors, develop the processes. They're going to lower the cost of space and let us access it more, and I guess drive into the brave new world.
Blue Origin, privately held company. SpaceX, privately held company, although it may go public next year, as we've been learning. Sana, we know that Blue Origin's last New Glenn rocket sent 2 NASA satellites to Mars. What is the role of NASA right now in space exploration?
Yeah, so one really key mission is that they will be launching their Artemis missions to send astronauts back to the moon. And, the one with American
Hey,
astronauts.
shout out to
Them back
people
the
on
moon
Rumble. I
in
appreciate you
2027,
being
but
over
they
there. I
have
got 4 people watching on
another
Rumble.
mission in between that is
Got
likely to
2
happen
watching
later
on
next year.
YouTube.
So that's a really
Hey,
big
Sugar Rush, the
part
200 on the 1 hour. I'm
NASA's,
going to
space
start
exploration
overweighting it.
capabilities. But even like you
The
said, they're
200.
always doing science
I was on a
experimentations
call
and
for one
science
of my
launches.
favorite
So the
convergences
last
of
Glenn launch,
indicators.
it sent
VWAP and
2
200
Mars
EMA lined up at
satellites,
1018 on NQ
on
and
their way
ES.
to
I would
explore the
have
Martian
totally taken
atmosphere.
that.
So they're
Now the
constantly doing
ES stopped.
science
Yeah.
missions,
Yep.
doing
Yeah, you
like
were right on that call
telescopes,
to move for the high
and then
side.
when it comes to
Yeah, I
human
made a rule a
spaceflight, I
long
would say
time
that
ago,
Artemis
Sugar
is
Rush.
their
I don't
only
take a trade when I'm on a
main,
sales call.
spaceflight mission.
I can't manage the
George,
trade
on
when
the
I'm a
defense front,
sales
on the
call.
rocket side, I guess what I've heard on the missile
Hey,
side, something new is
DJS,
a number of
Lumbo,
these
DJ.
hypersonic
DJ, you
missiles.
still out there?
What is that, and who makes
Don't think this is rolling over today since it's
So I
been
mean,
selling last
the
few
U.S.
days.
makes it. China, Russia make
DJ
hypersonic
thinks we're not
missiles.
rolling over.
Our high-speed missiles.
How
They
you doing,
fly,
man? Glad you stopped by
4
if you're
Mach
still
5.
around. Glad you stopped by.
Obviously, it's
Let me try and catch
an
up on
attack
these
weapon
chats.
unlike the other
Hogwarts is
ballistic
looking for the
missiles that
rollover.
are
Ballistics
pushing something up
talking
into
about
the
a garbage
orbit and
day
coming
so
down,
far. I agree.
with on a trajectory into your target. Hypersonics are
Hivox.
closer to the Earth and moving at high speeds.
Hivox, any thoughts on
I think
Tesla?
probably where you're going.
He's a new trader.
Part of that defense, part of
I don't know. Does anyone
development
watch
is going to
Tesla?
be putting a constellation of satellites up,
SM missed some good
over,
longs. Took the second one, but got stopped out for plus 67. Well, that's good.
that will
SM
allow
got
us to see things
got
like
himself a green
hypersonic
trade.
missiles,
How you
ballistic
doing today,
missiles,
SM, my friend?
see them sooner, track them, and it's
Good
all
to see you
about,
back in the grind.
future,
Trying to
missile
grind
defense
this thing
for,
out, man.
for the homeland, where you'd be able to track them, and then
SM just
potentially within
finished
orbit
his
intercept
semester
space we could
in
fire,
college, and he's back to the
on things like
grind.
hypersonics
I'm
coming
about to
into
go back to sleep. I know. It's been a pretty tough week.
And SpaceX are actively involved
Sugar
in?
Rush.
Yeah, so it's early days.
Correct,
right?
giving
The Trump
thousands
administration
back,
has announced
trying to be on a call in a
$175
trade.
billion,
Yeah, man.
towards this
I just
effort
don't do it,
in the
dude. I
latest
don't do it,
defense
man.
budget.
SM can attest to that. He's seen me
We
blow many of
think this is something
accounts while I was on a call.
It's a never-ending
The next
journey,
thing you have to
because
add to
they're
your
always
stream
playing
is
cat and
a
mouse game of
yeah.
the adversary
Do
makes
you think I
something
really need
faster,
that though? You
stealthier,
think I
and you have
need
find
to
a way
have
to
a webcam?
discover it and then intercept
I didn't
and
really want to
destroy
do
it.
that. I
think
certainly
that
can't do it
both
until
Blue
I
Origin and SpaceX will be
like if I'm working full
involved
time,
in
I can't have a
probably
webcam
deploying the
on. I don't
satellite
think.
constellations. I
Stock
think
Jock.
because they're just
Oh, hey, is
cheaper costs for
Stock Jock
companies
is
like
trying to long on
United Launch
Tesla.
Alliance that are Boeing, Lockheed.
I'm gonna do the
I guess
chat
ULA
box.
is involved as
I'm
well,
gonna do the
depending
chat
on
box.
what level
That'll
of
be done this
secrecy you
weekend.
need
I'll
for
figure it out. That's my
some of
main
these
goal this
missions.
weekend is
But
to get the
I
chat
think,
box
again, sort
working.
of the
Sugar Rush.
reduction in the cost to access
You think so?
space and
Why do
access,
people? You think people want to stare at me while I'm trading?
build these
That's kind of weird,
constellations,
isn't it? Or no?
in the Earth's
But I think you
atmosphere.
should wait till you have the
However, it
system.
is
Yeah,
really
it's
fun to
like
deploy
there's
out
some
there,
things
and
I don't want to go full
I think
bore.
they all help sort of to
I don't want to go
develop
full
space
bore
and develop
until
the
I
opportunities that we
have
get from it.
All right, George, thanks so
I
much.
have
Appreciate that.
the
George
beta
Ferguson,
version back
Senior
and we
Aerospace
test
and
it.
Airlines Analyst for Bloomberg Intelligence. And Sana,
Because the whole point is I don't want to spend marketing time and dollars until there's a product if people want to try it, they can. And right now they can't. More personal? Oh, really? Okay. I'll think about it. I have a hard time getting my mind wrapped around how I'd want to do that.
We'll come back to it.
But definitely the chat box being live on the screen with everybody consolidated. I think you're right. That's going to be huge. I just got to set it up. I got to have time to.
Karman line, which indicates that you've entered space, and there have been 6 repeat passengers.
Oh, really?
Yeah. Can you imagine saying I did that?
I was thinking of maybe doing the webcam like from behind me so you can see all my screens facing behind me. And then maybe I can just make sure I blur out the screen so you can't see like numbers. I don't know. What do you think of something like that? Kind of like what was that TV show where the robot they sit in the theater and watch old TV shows and they make fun of it? Something 3000. You know what I'm saying?
And for yourself, learn more at hbs.me/breakthrough. The Dow, the S&P, NASDAQ all higher. S&P right now best level of the day, looking at a gain of 1.4%, up 93. CPI Thursday. Dow Industrials up 451. On the Dow, a gain right now of 0.9%. NASDAQ is surging 2% with the 10-year currently yielding 4.11% and the 2-year 3.46%. Gold up 0.7%, 43.70 the ounce. West Texas Intermediate crude up 1.3%, 56.69 a barrel, and Bitcoin now up 2.6%, 88,173. Data showing inflation cooling last month, igniting
people like interactions. But do you know what I'm talking about? What was that called? Hold on.
Cuts in 2026. But Dave Kudla, the founder and chief investment strategist at Mainstay Capital, right here on Bloomberg Intelligence, he told us this data point carries zero weight with him.
Unfortunately, the way I'm taking it is
Mystery Theater, Mystery Theater 3000,
where they didn't have the data for certain categories. You just entered a zero. So it's so far away from the trend, and knowing what the errors are, it may have been better to not report it again, but they at least should have the caveats out there about the number.
Dave Kudla of Mainstay interviewed on Bloomberg Intelligence. Keeping an eye on Micron Technology shares after earnings, stocks surging now by 11.9%. Recapping, stocks higher, S&P up 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Phil and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Look up at our screen here. We're still that rocket launch still at a hold, T-minus 58 seconds. So we'll see how that plays out going forward. Big take story. We bring those big take stories to you every day. They are the Bloomberg News, really featured stories, great topics, deeply sourced, great graphics. So they're just outstanding stories that highlight really interesting stories out there in the global economic and finance. And this one focuses on healthcare. Hundreds of hospitals across the U.S. are marking up old cancer treatments. In some cases, hundreds of times what Medicare pays. Just another part of the financial side of healthcare. I had no idea how that stuff works. John Tozzi, he's a healthcare reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. John, what was the aim of your story? What did you
something like this, guys.
Really report on?
Yeah, so we know that when hospitals administer drugs to patients like chemotherapies, they basically set the price, negotiate the price with insurers.
See
so
something like this?
For one price, and then they have a reimbursement rate that they get with insurers.
Where you see my
we were trying to figure out
where you see my whole setup. I got 7-8 screens on my trading setup, and then you see me sitting behind it. Would that be okay? I'm gambling on my eval right now. It does not feel good. Yeah, it's a bad habit to get into, man. With Xmas and market being slow in the next 2 weeks, it's either I get my account in a really good spot or I fail it and pay the fee again. Okay, so if you're at the end and you're not going to trade much before the account renews, then go for it, man. You know what I'm saying? You don't want to waste it. You don't want to waste it. You want to go for it.
If you had to boil it down to
for sure.
Why that is, what's the reason behind it?
Yeah, I mean the hospitals are
Hey,
trying
SM, what do you think of something like this? You see how the guys are sitting in the background? Yeah, so, but you just got to tell yourself this is a gamble trade and this is not how I'm going to trade if I pass. So if I pass this and I get into my PA, Fairy King, you're going to say that was what it was and I'm not going to do it again. Because you can create a you can create a bad habit real quick, you know, if you get lucky a couple times.
Examples of some hospitals charging.
Yeah, I know. I had one expire too because I wasn't being aggressive enough, and I should have just full ported it. And I got so many anyway right now that I'm playing
I do have
with.
good insurance. I have the best insurance, but it
But-
just when the numbers on the bill itself, no idea. So,
And
but I
sometimes
just
the
look
numbers
down
are
at-
bananas.
I
too.
just look down at the bottom and say, "Thank you, insurance."
But yeah, that's okay. I'm glad if you guys are full porting and you got to say it out loud so you know that that you get confirmation that it's okay under the circumstances. Throw it in chat. This is stuff we talk about all the time. No gambling. But with evals, they expire, and if you can't trade them normally, then you got to be more aggressive. You're either going to get, you know, if you blow it, it doesn't matter anyway because you're going to have to pay the renewal. You might as well, if you're going to pay the renewal, you might as well just get a new one. So just take your best shot at passing it in a couple of trades. Would be my advice, but just you have to know that that's what you're doing, and you have to acknowledge it for sure. Hey, SM, are you there? Hey, Sugar Rush, what do you think if I did something like this? You see how they're sitting in the background, but it would be me sitting here, and then you would see all my screens. And I was thinking of just having something up on the screens other than the charts or something, you know, just so it wasn't.
That is a complicated question.
Just, yeah.
The Medicare. One way to think about it is for her dose for this drug, the Medicare rate, which is.
I just don't think I want the camera in my face all day. I gotta be honest with you. But something like this would be cool. Then you'd see me like moving my arms and stuff and talking and working on different computers. You could see the headquarters.
And they would have paid $35.
Right here. These guys. These guys are watching the movie.
Your reporting really
You've never watched.
trying to figure out the
You've
pricing,
never
like you
watched
said, and
this
that's a
TV show,
Herculean effort because everything about
Mystery
this healthcare
Theater
system is about,
3000.
you know, not being transparent, about, you know, having your leverage points and getting what you need. But I remember that under the first Trump administration,
You know what
were
I'm saying,
pushing
or
for
no?
More transparency. They wanted hospitals, they wanted insurance companies to reveal their prices.
No, on. Oh, I'm sorry. On the NQ. I'm so sorry. I had the ES.
Now
Right here.
than there was before that.
See, they're kind of like talking about what's going on and making jokes while the movie's going.
It is sort of, I would say, fits and starts. It is imperfect. A lot of the data.
So I was
is,
thinking of just
difficult
like
to
this whole thing would be my trading rig,
but
and it would just be facing down from behind, and then you would see me working all day.
And some of the reporting and analysis we brought to this piece.
And then have the chat scroll and maybe do this instead of NASA. You think that guy? You think that'd be better?
It's a great story. I think a lot of people can relate to it. Anyone who has to get
I just
medication
don't think I should do it while I'm still working. Real job, Plan A though.
Can harm cancer patients. And you can find those stories on the Bloomberg Terminal and Bloomberg.com/big take. And that is there's a rule of thumb out. I mean, there's definitely a feeling out there, particularly among cancer patients, that this thing is.
This stuff's pretty funny if you
It's a
watch
racket.
this.
It's a big racket. It's a huge business, and so the incentive for a cure per se, I don't know.
What is the series called? Cancer Capitalism?
Capitalism.
Okay, Cancer Capitalism.
Good
Great
stuff.
stuff, John.
Yep.
Thank you so much.
Thank you.
All right, let's talk a little bit about company news. CarMax coming out with some
What do you think, SM? Do you think that would be better than watching NASA all day?
That the economy is getting better. CarMax is flagging some margin pressure. And certainly, we already know that new car prices are expensive. Used car prices have gotten really expensive as well. Craig Trudell is Bloomberg's Global Autos editor. He joins us now from London. Craig, what did we learn from CarMax?
Yeah, these are some soft numbers from CarMax, and it's not a huge surprise in that they actually just had some pretty substantial management changes quite recently, where they warned that sales were going to drop for this quarter that they just reported this morning. And the outlook for the coming quarter is also pretty weak. I think there's definitely some pressures that you alluded to, that is industry wide of pricing is pretty, it is very strong. strong, but questions about just how sustainable that can possibly be. Real questions about lending practices.
All right. Well, that's my idea.
Maybe
Let
some
me know if you think that's a
need
good
to kind
idea.
of tighten up standards on that front. And then I think there's
That's
also
my
some sort of
idea. And then I could
idiosyncratic
probably do that in the
issues to
corner
CarMax
and
where
then do
you
the
have
chat right here,
the
and we'd still have the
Carvanas of
trade
the world
box.
or
But in the
Amazons
beta
that are going to
version,
be
you'll be able to move the trade
moving
box
more of
around,
the
so I
car
can
buying
kind of
process, at least for used cars online, and that pressuring a used car retailer like CarMax.
excited about the whole thing. I'm kind of almost hoping they send me a severance package.
Year to date. So, I mean, some of those competitive headwinds you
Send
mentioned
me
are pretty
send me the
pretty
severance
significant.
package straight
Craig,
from
just talk to us
India,
about the used car market
because
in
that's
general.
probably who's
I read
replacing
something
us.
recently. I think maybe the average age of a U.S. automobile is like 12 years or something.
Yeah, I mean, and this has been like this long-term trend where we've seen, consumers hold on to their vehicles for longer. This is, of course, a positive if you're a manufacturer to some degree, in that it sort of speaks to, the idea that the cars you're making are sort of, built to last, and yet it is also a demonstration, I think, of a lot of trends. One of them being, affordability
No,
is so much more of an
no, I'm
issue
gonna
for
try and do
people
this.
buying
If
new
that
vehicles, that
happens,
we're seeing more and more consumers being
if
priced
that
out
happens, I'm gonna
of the
try and
used
do
car
this full
market,
time.
and so you have
I'm not gonna
consumers
leave that
who
job.
it's
I'm not
taking them
leaving.
longer
I'm
to
not.
pay off
It's too easy,
the
man.
loans on their cars.
It's too easy for what I'm
In
getting
some
paid.
cases, they're underwater, for quite some time, and that is really
So,
leading to these trends
but
that
if
we
they
see
eliminate my
more in terms of
department,
uh, term
the last 2
loan
years,
length,
they've reduced
being
the sale,
longer rather
the
than
corporate side. They've
the
reduced
sort
the
of
corporate sales
the
force by
five-year
60 or
car
65%
loan
or something
is
crazy, and I made
is
it through
now
both those
the
layoffs.
7-year car loan, if you will.
So if they do it again this
These trends
year,
have been sort of
around
a
usually
long-standing
happens around May,
growth, but it's
June.
been really fascinating to watch it becoming
If I
sort of the
don't
new
make
norm.
it, then
Yeah,
I'm
because
gonna. I want to
affordability is
have this
clearly
all set up
an
to make a
issue.
run at doing this
Average
full
age
time.
average price of a car is so much higher than it used to be. Or an automobile, so
That's my
much higher because
plan.
that's
So I'm just trying to make it better every day and kind of get the final
trucks and so
product
on.
ready. So,
Can CarMax
when I sit, if I get the email saying this is your severance, you got 2 weeks or a
Yeah, I
month
mean,
or
I think
whatever.
I mentioned the management changes that have been made. I do think they also
Everything's already set up and
maybe
working.
don't
That's
necessarily
why I'm
get
pushing to get the other
a ton of
streams
credit
efficient and
for the
running.
idea
And
that
I
they
got to build the
disrupted
website. I
the
get my
buying
server
processes to a degree.
functioning properly.
I think
I got so
Carvana
much to do.
manages to kind of portray itself as this
LLC, all that stuff.
entirely online
So that's kind of my plan.
company, and yet it has substantial sort of real world retail presence as well. I think Amazon has been this long time sort of boogeyman if you're following this space, in that if they enter this space more meaningfully, it spells trouble for both of those companies potentially. And yet it's been sort of patchy, their ability to crack this market. We've seen Hyundai sort of move first and Ford follow recently. I think if we see more of those dominoes start to fall, where more manufacturers and brands put their used cars on Amazon,
All right.
that would be
We're gonna have another fake pullback.
going forward.
Hey,
So it's
how
going to be
about
another bear
specifically,
trap.
Craig, for used Teslas? Where do they go?
It's a
interesting.
trap.
They actually do end up with the likes of CarMax or Carvana.
Because I think
You
that
do, of
if
course,
I get
have
these other
a
streaming
unique
areas
circumstance here
working
where
properly
because Tesla owns its stores and
and get everything interfaced, and if I spent, you got to spend marketing dollars over there to promote your stuff.
to at least
I think if I went full tilt and had everything set up, I think I could get
sort
to.
of vehicles return to the company.
I
But
could increase
it's
it
not
enough to
necessarily in their
be
control,
okay.
right? If you or I want to turn in our Tesla,
I mean, it's
and
not like
buy
rocket science what
from
we're doing
elsewhere,
here all day,
that
It's
cars
we're just
are
watching the markets go by and trying to,
say a Chevy
you know,
dealership and use it as a
trying
trade-in.
to
So they don't
logically and
have
intelligently talk about
Yeah, and
the
Craig,
best
you mentioned
trading day,
Carvana there.
keep things
That
structured,
stock is up 3.5%
talk about
today.
good practices, places to look for, and everybody has their own entries, strategy, everybody's got their own stuff. But it's nice to have like a base, structured day that, maybe you can parallel yourself to, and that's kind of what I'd like it to be. because everybody's going to have their own opinions on long, short. Everybody's going to have
very volatile.
their own
A
their own
few
way
years
of looking
ago,
at the market,
you know, we were seeing that stock just
and that's good. I like
absolutely
that.
rip during the pandemic. They went through you know, some boom times, and then really had this absolute collapse where there were concerns about whether or not it was a company that was going to survive. So I think they're coming back from those, you know, darker days, and it's really been a roller coaster the last half decade.
And we got some big news, Craig, you know, recently, Ford taking that big breakdown. What's been the kind of the fallout from that? Is that, to me, it just felt like that's a big step backward for the
All right, so it looks
EV
like we're about the
movement here in
triple
the
top
US.
here, and we're kind of doing the same thing on the ES.
Yeah, I think, you
So
know,
there's
the
definite
US,
resistance up in this area.
the electric vehicle transition in the US.
We've got the
is
same
really,
kind of
you know,
action up
sort of
here.
a negative story that keeps sort of getting darker, I guess. You know, with the policy outlook that we have under the Trump administration,
I'm not sure I like
we
this.
don't have vehicle tax
I'm gonna pull
credits.
this
We
out.
don't have a credit system that has been so important to Tesla for so long, where, you know, if you don't comply with fuel economy or emission standards, you can sort of make up for it by paying for credits from Tesla. That's gone away. The outlook for EVs industry-wide is bleak, and I think you also have to some degree, sort of wear it if you're Ford. I think they tried to make this concerted effort to compete with Tesla, and they had some failures on their own part as well.
Great. Craig, thanks so much. Appreciate it. Craig Trudell covers all the auto industry stuff for Bloomberg News. He's based over there in London. Some red headlines crossing the Bloomberg terminal. This is from Blue Origin. We are standing down from today's mission. So Blue Origin delays the launch of a crew on
Okay,
Space
so
Tourism
if the
trip.
ES, if the 20 EMA supports the price from here, then we may be looking at moving. You know, we may be looking at moving to the next level. It's looking strong on the NQ. It's just, this is looking strong, man. The bulls are in charge. The bulls are in charge today.
She joins us here in our studio. Rachel, what did we hear from Darden today?
Yeah, so the company,
It's just a matter of fact
has done
right
well
now.
Today, it saw same-store sales rise. It actually raised its sales forecast, and stock is up as much as 4.5% today, which is the biggest gain in almost 7 months. And I mean, while sales are up, though, its profits have kind of taken a hit because of high beef prices. You know, we've been hearing about that. That has affected their earnings for a little bit, but now they do expect beef prices to hopefully come down in the near future.
Okay. I guess
Oh, hey.
fast casual is kind of their stuff. So
Somebody actually liked my
I'm
post.
sitting down, I've got a waitress, I'm doing all that stuff, but it's talk to us about their brands and what they're saying about their brands.
Sure, yeah.
On
so
X.
I guess they would call themselves a bit more casual dining.
Okay,
Yeah, than
okay.
fast casual. I guess, you know, this industry has their terms. But yeah,
Interesting.
they're actually kind of saying that it's just still been pretty resilient. You know, their target audience are these like middle
All right,
and high
the
income
person who
customers. And
liked
those
my post
haven't
on
been so much
X,
affected by the economy.
you might
maybe
be the
a bit
first
more
one.
worried,
Thank
but
you.
that hasn't really stopped them from spending, and you know they see
You'd have
these
been a lot
restaurants
cooler
as
if you
kind of a
followed.
treat to them. And you know, for many consumers too, I think they're starting to see these restaurants like Olive Garden and Longhorn Steakhouse as a place where they can kind of get pretty good food for, you know, a pretty good price right now, especially when you see places like Kava and Chipotle, which those are your fast casual places, and you know they're pretty expensive now.
Got
with
5 over.
inflation, and so
Rumble
the
people,
comparison
do you know how to use chat? If you can hear me, Rumble people, say hi in chat. I can never get to Rumble people to interact in chat.
So they're raising their 4-year forecast. Is that more on the revenue side?
This is
that
crazy how this works.
costs, or what are they doing there?
So they actually increased their
All
same-store
right.
sales.
All right, what are we doing?
And so they do expect, you know,
What are we
consumers to
doing?
keep
All right,
coming.
we get a
You know,
little
they have
pullback.
other tools in their belt to kind of keep drawing the consumers. Like they introduce like smaller portions. They are on Uber Eats now. But yeah, they actually maintain their earnings per share guidance just because of commodity prices.
So again, what are some of the? Are you seeing differences within the restaurant industry? You know, from the lower end to the higher end about just sales trends, how their customers are doing, or is it a different discussion?
I think it's a different discussion. I think we've heard a lot about how a lot of the fast food chains, a lot of the fast casual chains, you know, they're still getting hit by your lower income consumers kind of pulling back, you know, like inflation and commodity prices are high, whereas your casual dining restaurants, they seem to still be pretty resilient. Like Chili's is another example. They're still able to draw that consumer who are still able to spend a little bit more.
So as a reporter covering the restaurant industry, you got to get out of New York City because we don't have a lot of that stuff
that's
here.
true.
So you got to travel around the country, right? Go to where the Cracker Barrels are and the Chili's are.
Yeah, you definitely have to. I think for most of us, I mean, in New York City, unfortunately, you have to try to get into Times Square just to get that buy one get one pasta, which is not the most fun.
Yeah,
experience.
exactly. So what's the format? What's the buzz within the restaurant industry these days about like maybe the format, or is there a new cool company? Like for a while there was Shake Shack and all the burger stuff and the smash burgers and all that stuff.
I mean, I think Chili's was the cool company for a bit. They had really good social media. A lot of their items were going viral. I think with Olive Garden, I think what we've seen today is the popularity of smaller portions seem to be something that consumers are gravitating towards. Especially with some of them, going on weight loss drugs, some, becoming more
All right, so
conscious. This might be actually a good
we're
thing for them.
chopping. All right, so this is the first candle to really chop
With the GLP-1 drugs.
the 20 EMA. The last time we chopped it, we went higher. So let's see what the next couple candles do here on the NQ. The ES is already breaking down, so maybe the ES is going to lead the NQ. We're almost on a EMA cross on the ES.
They are slightly affected. Like they're seeing some diners cut back on appetizers and desserts, but they also say that it's mostly alcohol, which we have that they're pulling back on, which is the longer term trend.
All right, Rachel, thank you so much. Appreciate it. Rachel Pua, earnings specialist, Bloomberg News, joining us live here at our Bloomberg Interactive Broker Studio, talking about some decent numbers out of Darden restaurants here today. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news.
Art Bell used to have a cam, but he had a cam kind of like the one I'm talking about doing. You guys know who Art Bell is?
Kind of worthless.
Radio host.
The market's certainly reacting to that, and maybe it's a bounce back from
Midnight in the Desert, Coast to Coast AM.
Over the last 4 or 5 sessions, but the S&P up 1.25%. That's 84 points. The Dow's up 300 points. That's about 0.6%. But the tech-heavy Nasdaq, as they say, up 435 points, 1.9%. So some big moves there. The volume today is kind of right in line with historical levels. No panic or crazy
All right.
buying.
We're in the cross candle now on the ES.
Lower, sitting right at 16 right here.
NQ.
We have more coming up. Bloomberg Radio with the latest market news.
Let's see if the 50 EMA holds it. Made a higher low. ES made a lower. Yeah, I know. I'm not sure. I'm trying to figure that out. Right now, I can take the short right now on the ES on the next candle. So the next candle I can take the short. But I think my entry should be up here because I'm not sure if the 50 rejects it, then
CBS's Kelly O'Grady. It doesn't mean prices are dropping.
so we're in confirmation zone. So we're trying to figure that out right now, Hogwarts, I think. I think that's what we're trying to figure out right now.
Actually did see a price decrease, but then on the flip side, a lot saw a huge price increase. Beef, as people are thinking about their holiday dinners, were up over 15%. You also saw electricity, utility gas, fuel oil.
The report comes hours after President Trump's primetime defense of his record on the economy and other major issues. CBS News White House correspondent Weijia Jiang.
The president insists that his economic policies are working, and any wins that have happened so far since he came into office in January are a result of his decisions. He also took a lot of time to make an argument against his predecessor, former President Joe Biden, and how Biden's policies, according to Trump, are the reason why there are any economic problems right now.
House Republicans passed a health care plan that does not extend Obamacare subsidies, and CBS's Caitlin Huey-Burns says
that prompted a mini revolt.
You saw 4 Republicans buck their party leadership and support that discharge petition to essentially force a vote on the House floor to extend those Obamacare tax
I feel like I should get in on the
Now,
NQ
House
because
Speaker
it's
Mike
going to
Johnson told
follow.
us last night that according to House rules, you need 7 days at least to consider any sort of discharge petition, so he won't be able to bring it up until the next year.
All right, I'm going to give it another candle or two. I'm just going to kind of watch this for a minute. I got to go to the bathroom. I'll be right back.
Care for transgender youth.
We're done with junk science driven by ideological pursuits, not the well-being of children.
Now to Boston, where just days after being convicted of murdering his wife, Brian Walsh was sentenced.
The jury, having returned a guilty verdict on charge 1, murder in the first degree, he was sentenced to the state prison for the term of your natural life.
Anna Walsh disappeared 3 years ago. Her body was never found. Prosecutors relied on Walsh's online searches about dismemberment and disposing of a body to secure the conviction. Pope Leo today named a fellow Chicagoan, Bishop Ronald Hicks, to be the next Archbishop of New York.
I very much look forward to working closely and collaboratively with the priests, the deacons, the religious, the lay leaders of this archdiocese.
And checking Wall Street, right now the Dow is up 274 points. The S&P is up 79. This is CBS News. The pot increases in a major lottery game.
Check your Powerball numbers yet? Sorry.
Tonight we have our life-changing jackpot.
You are not a billionaire. No one won last night's $1.25 billion prize. That ups Saturday night's take to $1.5 billion. The last time someone won the game was in September when 2 players split $1.7 billion. The next drawing will be just before 11 p.m. Eastern in the Florida Lottery Draw Studio in Tallahassee. Tickets are $2 to play. Odds of winning, 1 in 292.2 million. Deborah Rodriguez, CBS News.
President Trump has refashioned a West Wing walkway he calls the Presidential Walk of Fame, with plaques that include references to sleepy Joe Biden and call Republican icon Ronald Reagan a fan of a young Trump. They call Barack Obama one of the most divisive presidents in history. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
A day after the president says prices are dropping, he gets the evidence. Welcome to the Thursday edition. As the latest CPI shows, prices rising at the slowest pace in over 4 years. We're going to get the latest from the White House. We check in with Bloomberg's Tyler Kendall, and we'll look under the hood in this report. Not everything's going down. When we spend some time with Bloomberg's Michael McKee, the White House looking to private business for cyber help, defensive and offensive. We're going to talk with Bloomberg's Jamie Tarabay, who got the scoop. And generations of Republican orthodoxy up in smoke today as the president is expected to sign a rescheduling of cannabis. We will inhale with our political panel. And it's all after a look at Wall Street. Charlie Pellet has the latest on the markets on a Boppo day here. Charlie, is that you, Santa Claus?
Indeed. Look at that. Dow, S&P, NASDAQ, a lot of green right now. We have got the S&P 500 index as we get right to the numbers here, up 70 at 67.92, up by about 1%. This after data showing inflation cooled at a startling clip last month. That ignited stock and bond markets. The Dow up 219, now up 0.5. Again, the S&P up 1%, while NASDAQ right now higher by 1.6%. The NASDAQ 100 index doing a little bit better, up 1.7%. And the Bloomberg Mag 7 index outperforming, up by 2.3%. The 10-year, 4.11%. The 2-year, 3.46%. Gold now at $43.47 the ounce, up 0.2%. West Texas Intermediate crude oil up 1%, $56.51 a barrel. And Bitcoin up 1.4%, 87,200 now on Bitcoin. Underlying inflation rose in November at the slowest annual pace since early 2021. Reaction to the report and what it means for consumers from Erin McLaughlin, senior economist of the Conference Board.
Obviously, even within public policy and elections, the concepts around affordability are still being discussed. You know, for American consumers, food costs more, insurance costs more, housing is still, double what it was 7 years ago. And so in medical costs as well, which I don't think we spend enough time talking about. So those really big costs are still weighing on the consumer.
Erin McLaughlin of the Conference Board. Yes, we'll have a whole lot more on the CPI report with our Michael McKee coming up in just a moment. Bottom line here, stocks higher though. S&P up now by 1%. Micron after earnings. Micron Technology had reported last night up now by 11.9%. You recall last week we did hear from Oracle. Oracle shares up by 0.8%. Broadcom up by 0.3%. Both Oracle and Broadcom sold off after their earnings reports. After the close of trading today, FedEx and Nike. I'm Charlie Pellet. Balance of Power continues now. Back we go to Washington once again. Your host, Joe Matthew.
All right, Charlie, thank you. Yeah, we're looking forward to another busy after-hours session. Romaine Bostick will have that for us in the late edition of Balance of Power. Could Nike have good news? We'll find out together. Welcome to Thursday. You made it to the little Friday edition of Balance of Power here on Bloomberg Radio. Satellite radio channel 121 and always streaming live on YouTube. Find us if you want to watch the radio on TV by searching Bloomberg Business News Live. Yeah, you made it to Thursday, and we're brushing out the cobwebs after a late night here in Washington. The president speaking in prime time, and he will potentially hold forth later on today. I'm looking at the guidance from the White House signing an executive order, 1:30 p.m. Eastern time. Well, that's during the show here, and you know what they're saying. This is going to be the big cannabis EO, rescheduling marijuana, which we'll discuss a little bit later on with our political panel. He's got a Christmas reception on the calendar as well. I think my invitation got lost. I don't know about you, producer James, but I'll keep looking. Now, if I learned anything last evening, I'm going to take a cue from
I missed it.
From the President of the United States.
I suck, dude. I totally missed that shit.
And so I'll begin the program. By telling
Can't believe I missed that shit.
That I just inherited a mess from Paul Sweeney. And I am fixing it. We're bringing this.
I gotta start. Gosh darn it! I was sitting right there. I almost put the trade in.
That was the message from the president last evening. Listen.
My goodness.
We're bringing our economy back from the brink of ruin.
That's painful. I'm gonna give myself a FOMO right now. I'm giving myself a FOMO alert right now. Damn it.
American history. 1,450,000 military service.
That's a FOMO alert.
Receive a special we call Warrior dividend.
There is no FOMO.
I'm also
there is no FOMO.
Gigantic health insurance companies.
There is no FOMO.
Some of the most aggressive housing reform plans in American history.
The
100 point.
You're
up.
The nation in prime time from a Christmas-adorned White House.
I could have had the whole thing.
Raising the question in living rooms across the country: why are we yelling? He was actually distorting the microphone at times, cranking through the copy. You barely heard a breath.
Careful trying to catch the knife, guys. That's what FOMO does. It'll make you try and catch a knife.
So we've been spending the last couple of hours dissecting.
Careful on the knife catch.
Not just the language, but the optics of what Americans were treated to last evening. We're going to have more on this a little bit later on with our political panel. But let's go to the White House right now, where they're still recovering from the big speech. Tyler Kendall is on the North Lawn on a chilly day in Washington, our Washington correspondent. Tyler, the White House thinks this was a slam dunk, to be clear, right?
Right, Joe, and I think we should also say that we should offer Paul Sweeney a defense there, because you did encapsulate exactly what we heard from President Trump. He really did blame his predecessor, which is something that we often hear from this White House, which is interesting because we know the administration was trying to use this platform to frame its messaging, because it may seem like we're far away from next November, but we are about to kick off into the new year and head into midterm season. But you're right, we heard from officials out this morning really praising this speech, and President Trump really used it to tout his policies from the last year and try to reassure Americans when it comes to the economy. I will say, though, we should point out that we also did hear from him that some of these policies that he's implemented this past year are going to take time to work their way through the economy, an argument often heard by his officials, like the Vice President J.D. Vance, who has urged patience, right? President Trump saying that the U.S. is poised for an economic boom next year, that some of those tax incentives in the One Big Beautiful Bill will come into fruition next year, that there will be a new Fed chair next year, and sort of pointing us forward. In terms of actual policy, we can get into, he of course hit on a lot of topics, but perhaps the most tangible new one is him announcing, as you heard, those warrior dividend checks that they're being called. These are payments to U.S. service members, he says, are being funded by tariff revenue. They're already in the mail. He says they'll come in time for the holiday season by the end of the year. Joe, we should point out there are reports that this money was previously allocated and appropriated under the One Big Beautiful Bill. That's important when we're talking about some of the other initiatives that were floated, like tariff refund checks for the rest of Americans. That would need Congress to do separate appropriation if that was going to come to fruition.
Fascinating. Tyler, sounds like something's going on there in Lafayette Square. Is somebody on a loudspeaker? Are they trying to get on the air with you? What's happening?
I mean, maybe. It is actually a beautiful day here. The chill isn't.
Yeah, this really upsets me. This really upsets me.
Protester, a little bit muffled.
I'm not upset. I'm just like, I'm kind of disappointed in myself for not.
People wonder what the heck, you sound like you're at an airport. I thought maybe it might be the construction site, but Tyler, thank you. We'll get back.
Not being more aggressive at getting myself in, you know.
Producer James and I will have to go check this out after the program. I want to stick with this for now because we're delighted to have Michael McKee with us, and we're going to look at the CPI report. We only have a couple of minutes to do this, but I need to get Michael's take on the speech last evening.
Hogwarts, did you get that short?
Michael McKee. The price of a Thanksgiving turkey, he said, was down 33% compared to the Biden Thanksgiving last year. Eggs down 82%.
I mean, you sit here all week for a move like that. I had it in my sights, and I never executed.
No, but you wouldn't.
All week you wait for a move like that.
True. I would point people to the fact checks in the major newspapers and other things today that have quite a long list of things that he exaggerated or lied about. But that's kind of par for the course. I think the most interesting thing is what Tyler was just talking about, and that's the payments to service members. That money was already appropriated as housing money that they would have gotten anyway. So it's sort of like somebody walks into your house, sees the presents under the tree, picks one up and gives it to you and says, "Oh, here."
Interesting. 1776. The checks are going out. So we got CPI today, and I know that it's incomplete. So some people are calling this garbage. The White House is embracing it, I'm sure, because it came in a little bit better than expected. Can you take us inside the report here, Michael? Because it's one of these deals where the headlines are pretty great, actually, but we're seeing a lot of prices skyrocket as well, especially with food. Beef prices soaring here, coffee prices up 20%, banana prices up 7%. There are a lot of goods in the report that are being touched by tariffs. How do you look at this as a larger picture?
Well, it's kind of something you have to look through or look beyond. I could say I inherited.
I don't know, but I had the signal to take the short, and I decided to wait for another confirmation candle, and I missed it.
And there was very little data.
I was sitting taking a dump while it happened. I thought I got time to.
It's almost all blank space.
I got time to sit on the toilet and evacuate
from September to November.
My bowels.
On a year-over-year
This will hold for another candle or two or three. And no, it didn't. I came back and it's on the VWAP.
But
So I'm sitting here like,
statistical anomalies in there that are really bothering a lot of the economists, and the biggest one is for housing.
yeah, I did.
Component in the CPI. They assumed, it appears, that
It probably
housing
happened. It's
inflation
probably
in
simultaneous.
October, which,
Oh,
for
shit.
those who spend their lives buried in spreadsheets, would be impossible. It just
That's right,
would not
man.
have
I
happened.
flushed the toilet
And
on this
so at this
mofo.
point,
I'll have to let
there's
you
a
know
lot of
next time.
questions about exactly what this is telling
And
us.
it's drilling
We have to
hard,
kind of wait
and
till
I
we
didn't get
the
any of
December
it.
numbers, which will be a complete month. We get those January 13th to get a much better picture of inflation.
Well, so in our remaining moment or so here, is the conventional wisdom on point that this guarantees a cut in January?
Yeah, I have to do the text thing. Like we'll have to have a whale text string, but instead this will be like the flush.
And planning on continual lower rates from the Fed, but when you look at the Fed funds futures, they're only pricing in a 25% chance of a January cut. That's up from like about 20% before this number. So it doesn't look like the people who are putting money on this are convinced yet.
Interesting. That meeting is going to be really something. It's the final week of the month, right? What data will we have between now and then will help fill in the blanks?
Oh, we'll have a lot. We'll get the third quarter GDP, which we have not had yet, and we'll get PCE numbers updated, but also we'll have a new jobs report, new CPI, new PPI, and retail sales numbers. We'll have an idea of what the holiday shopping season was like. So the Fed will have a much clearer picture for the January 28th meeting.
Good to see you, Michael. You did a good job with that mess that you inherited, and I appreciate the time and the effort here. Bloomberg International Economics and Policy Correspondent. I don't know. I say we dug out of the hole. We are making this network better than ever before and faster. You know it. I know it. Everyone knows it. JB Terabay is coming in next with her great scoop on what's happening at the Pentagon. They're reaching out to private cyber companies
All right.
to help play offense. We'll have that story next, only here on Bloomberg.
I guess the only thing we can do is see if we find some support and if we roll back up. All right, that's enough. I don't know why it went down. Sugar Rush. Let's take a look.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We are well off session highs. Stocks do remain higher. Traders are welcoming the slowest increase in consumer prices since early 2021. Right now, the S&P is up 51, 67.72. That is a gain of about 0.7%. The Dow up 66 points now, up 0.1%. The NASDAQ Composite Index, 23,000 even. NASDAQ right now is up 304 points, up by 1.3%. NASDAQ 100 index doing a little bit better, up by 1.4%.
All right, we're hanging back to the VWAP. So that was a violent move down to the VWAP, that's for sure.
10-year yield at 4.12%.
That was violent.
Spot gold, little change, down $5.50 the ounce to 43.32. West Texas Intermediate crude up 1.1%, 56.55 a barrel. And Bitcoin right now, 86,000 even. We got Bitcoin up by about 0.1%. Trump Media and Technology Group, that's the company behind Truth Social, getting into nuclear fusion. The company says it will merge with TAE Technologies. That's a closely held fusion developer founded in 1998. In a transaction valued at more than $6 billion. Shares of Trump Media and Technology Group, ticker DJT, up now by 34%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthews.
All right, Charlie, thanks. Tell us again what we have after the bell, Charlie. It's Nike, and what's the other name we're looking at?
FedEx going to be definitely keeping, a real good indicator of what the U.S. economy is doing. FedEx shares, I mentioned right now, up by 0.5. Nike, we're going to find out about the turnaround plan. Nike right now up by about 0.5%. So two key reports after the close of trading. Can I just do one more earnings report for you? Micron, they reported last night up 11.
All right. Does anybody have
and in sharp contrast to what
does anybody have any
Oracle and also
what do you want to call it?
Last week, Oracle up 0.7 right now. Broadcom up by 0.2%. We got you.
Don't you feel great for selling
theories?
Micron right
like a
that?
theory?
Charlie, thank you.
On what we do next?
FedEx, so goes the nation, which is why we'll be talking about it.
Gold surges after downside US 43. Gold is way up.
He'll square things away after the bell. Thanks for being with us on the Thursday edition. You made it to Little Friday. We have a lot to talk about here in Washington. Our political panel's back together. Rick and Jeannie will be with us a short time from now, and we'll have more on the markets, by the way, when Charlie Pellet updates things in just about 20 minutes' time. This story jumps off the page, speaking of which, jumps off the terminal with a scoop that you're not going to hear about anywhere else. As usual, Jamie Tarabay is way ahead with the headline, the Trump administration turning to private firms in cyber offensive. Yeah. You know, we ask this question a lot around here when we talk to cyber officials with the White House, smart folks at CSIS. What are our offensive capabilities? Can we do a Stuxnet around here? Can we turn the lights out in Moscow if we need to? Nobody ever answers that question. Have you noticed that? I get really long answers, but not really a sense of what we can do or what the country is interested in doing. Enter Jamie's story. The administration preparing now to enlist private companies in more aggressive efforts to go after criminal and state-sponsored hackers, according to people familiar with the matter. She's with us right now, Bloomberg National Security, Capital Influence reporter. Great work, great to see you. Are we talking about the CrowdStrikes of the world, the Palo Altos, or is this a different class of cyber company?
There's a different kind of company that you don't really hear a lot about, particularly people who've come out of the intelligence community. They've left NSA or CIA, and they create their own companies. And what they do is they have technology that they've developed that could be considered dual use, but they frame it as defensive tech. And so it's usually contracted to US Cyber Command, which is really the place where a lot of this offensive cyber normally happens. And they can deploy it for defensive or offensive means. But the fact is, once that contract is signed and the tech is handed over, the company does not then know what the government does with the technology. Yeah.
And these are privately held companies, not publicly traded companies that our listeners own shares of right now.
I don't think so, but you never know. I think that definitely this is the signal that this is sending is to industry that there's an opportunity here. So a lot of people are very excited about it. Some of them are extremely gung-ho, but others are quite reticent because it does get rid of that gray area where they can say that they're developing defensive use versus offensive use tech, but also because, if they do have shareholders or investors, for some people, they could be very leery about getting on the wrong side of that. There's a lot of risk inherent in the activity and in the operation, and so we still don't know any of the details, but there's been speculation, and I've been tracking this since April this year. So there's been a lot of conversations and chatter about what this would look like and what that posture is.
Well, we've got a lot of questions for you here. For starters, is the United States government not capable of doing this work? Do we have the brain power? Do we have the resources to do this on our own? Or is this clearly telling us that we don't?
We have the brain power. I don't know that we have the scale. And that is something that people who have left government will tell you, as well as people who are in government. And we saw this in the previous administration, the cyber workforce gap of 500,000. The new National Cyber Director, Sean Cancross, thinks now it's closer to 1 million short. And this is something where industry is saying we can bridge the gap. And that's really, you're dealing with adversaries, for example, China, which denies a lot of the cyber attacks, or Russia, which don't really see a divide between military and civilian, and they just throw everything they can or they want to at different targets. And this is combating not just all those nasty ransomware attacks that we've been reporting on for so long, but also the nation state activity, which is the espionage, the sabotage, the intelligence gathering, the IP theft. So it's a whole of house approach. Very, very aggressive.
Wow, this is fascinating. Speak to us about the legality of this. Now, I guess if the companies don't know what you're doing with the software, that's the whole point, right? Because technically what you're describing is a new class of defense contractor. Are you not? Wouldn't Congress have to say in that?
I think that we know for sure there's going to be at least one executive order once this strategy is announced sometime next month. But no one I've spoken to says that that's going to be enough. There needs to be legislation, because you know that EOs can obviously turn on a dime, be cancelled, etc. So that doesn't really give anyone any kind of real legal protection. It doesn't spell out or codify authorities or protections for people who want to be doing this. So it's going to be really interesting to see how the Hill takes it. And I know...
All right, I'm kind of sitting here kind of brewing a little bit because I missed that.
Investigations into what that process would look like, but everyone that I've spoken to about
that was like the perfect setup on the ES, and I missed it.
The devil is in the details. We don't know what
it was right here.
So so we're still waiting.
Well, to that end,
I sat there, talked about it, and I waved it off, waiting for another confirmation candle.
Will outline this plan that you're talking about. I'm picturing you in some sort of dark
signal
parking
was
lot
right there.
being handed a copy of. Have you seen this draft? What's it going to say, and when's it coming out?
There are 6 pillars under the strategy.
You've seen this draft.
It's 5 pages long.
It's 5 pages. Okay.
And it's being
signal's right there. I don't know why it dropped though. Does anybody have anything? I've been looking through the news trying to figure out what happened.
To get their take, get their feedback.
And I don't see anything other than probably a consolidated effort to move it back to the VWAP.
Was struck by was how short it was. But also that the first pillar in these 6 pillars was the offensive cyber and quote-unquote unleashing the private sector.
Wow. So what do our allies think about this? And are they going to get in on this game? Will they start hiring these same companies?
So some of the conversations that I have had with folks overseas is that they have been really waiting for something like this. And it's going to be really interesting to see how the U.S. threads this needle legally and what example or precedent that will set for its allies. I have people in the UK
working below 30-year fixed rate, moving mortgage, moving averages in the week of December, prior week, Freddie Mac.
Is that there's a sense of urgency. There's a sense of necessity.
5.5%. That's good news, though.
And that everyone sort of feels like
isn't that good news?
Hits for so long that they really want to start
sugar rush
and doing it in a very aggressive way.
For an 8-week bill auctions.
Family of digital Blackwater.
You know what? You're right.
That's the risk, and
You're
I
right.
think that that's why everyone's waiting to see what the legality is, because right now the way that it's sort of described to me is when private contractors go and work for an agency, they share the same board, right? And now under this new policy, potentially, they could
Yep.
be
Well, that
moving
really
off
affected
different
it, didn't?
boards.
Yeah, I
They
know.
don't even know who they're targeting. Or they could say, go into this
So he's
electricity
saying
grid and take this
that the
actor
mortgage rate's going down.
like just out of the networks, get them out.
The
So
mortgage rate's going down would induce a sell-off.
But it also exposes them. So if I'm going after you, and I've seen you in like a network, and you see me, and you're like, you know what? I'm going to go in there and I'm going to burn your entire architecture.
Oh my God.
So it does. So it has.
Yeah, I know, but that's like what I talk about a lot is what is logical doesn't like what's logical for a guy that goes to work every day, has a family,
CEOs who do have shareholders,
you know,
is the fear of people who
has got a mortgage, 2 cars, the things that logically get you through life, and you're a decent person, and you're an American, like those things
I can just imagine the
will drive you crazy watching the market, because the way you logically think, the market purposely does the opposite, and it will drive you crazy. It'll take a person like I just described and turn them into a psychopathic maniac. Yeah, and it seems like it would increase business, you know what I mean? Like it's making it more affordable for people to buy a house and things like that. So you're thinking, well, that should be a good thing. But the people, the whales, the people with access to the capital know that's how we think. So they'll feed on that and take their capital and push it down like this to collect all the stops before it makes the move it should make. You know what I'm saying?
Cyber is a tool.
And it's stuff like this that'll make you go into the most worst chopping, revenge trading, blowing account.
Will purportedly be used in a war with
Yeah,
China someday.
that's
When you're talking about
they cared about something.
Here, are these companies prepared to meet these requests?
Prices adjust to the lower rates and go up anyway to compensate, and nothing is more affordable. Well, I'm not making the argument that anything is more affordable, but if you have an 8.5% rate because you bought during the high and you can refinance for 5.5%, I mean, on a $500,000 mortgage, that's a big difference.
We don't know yet.
So I'm just saying, what I'm really saying is, if you're a regular guy looking to work the market and you see news like that, you think, oh, that's got to be good news, right?
Or is this about embedding ourselves?
Well, yeah, well, it will, because you can get a mortgage at 5.5% instead of at 8%. So it does. It does.
For all sorts of reasons.
Yeah, but that's not the argument.
Right now, we have no idea.
The argument is that's not. Yeah, I understand what you guys are saying, but that's not the point I'm trying to make. You're correct. I get what you're saying, but the real point is when you're looking to make a position based on news, and you're starting to try and comprehend on what the market is thinking. You're thinking that, okay, we're cutting rates. Money's going to start moving around at a cheaper rate. That should be a good thing. And then the market drops 150 points off that news, doing the opposite. Do you kind of see? That's the kind of thing I'm talking about. But I'm with you on the corporate greed. They're never going to do anything for a normal person. And the point that it does help existing owners. I understand what you're saying there, but if you can get a lower rate when you buy, maybe you were on the edge of affording a house in a neighborhood you like, but now you can because the rate's 3 points lower. I don't know, whatever. But the point is were you more prone to say, okay, I'm going to take a long, if I'm in a long, I'm going to hold the long because that's good news? Or, you know what I'm saying? They were collecting stops on stuff that's perceived by the regular person trying to get it, trying to trade. They did something that maybe logically didn't make sense, but maybe, that's all that I'm saying. Because it looked more like a manipulated dump to me, but maybe I'm wrong. But that's all I'm trying to think about. You know, that's on a $500,000 mortgage. 3 points might be $1,000 difference in the payment. 800 to it maybe. But we got to do something about prices. Prices have artificially inflated by probably 30 to 50% minimum nationwide on housing. Does that make sense the way I'm trying to explain that? The way I'm trying to think? Just the point of the thought I'm trying to make? Yeah, and they keep wanting to increase the minimum wage, which makes, yes, yeah, absolutely. All that does is make things more expensive. That just creates inflation and makes it harder for small businesses to operate. Because a minimum wage job was never meant as a place to be able to, you know, make a living. You know, it's not meant as a wage where you know, you have a family and a house and a car and all that stuff. That's not what it is. Yeah. Yeah, the money printing is the real reason why we're at where we're at. That is correct. Yeah. I think one of those years we printed in 1 year 30% of all the money in existence. We printed that much in 1 year. I think somewhere around the end of the COVID era. Yeah, it accelerated. Yeah. Yep, 1,000%. Everything was manageable and you could keep up. You know, you could keep up by just working hard. And then in 2000, yeah, right around that time is when that was the housing crash. Yep, that was the last housing crash. All right, we got our trade box back on. We're still calling for the short, but I'm not sure that that's what we're going to be doing. But I was just trying to talk about the psychology of how your bias might be, you know, based off how this move happened, you know. But all the things you guys are talking about are correct. I would agree. I would be on the same side of that argument. The money printing is 90% of where the reason why we're where we're at. And all that happened is the more money printing, the more fraud. And once fraud, you know, once the system gets used to the extra money, they can't do without it. You know, Elon Musk was in there trying to cut that fraud out and reduce what we have to borrow. And the whole system went crazy. Yeah, it's hard to roll it back once they have it, you know. You know, Elon Musk said it that if he had godlike power on Joe Rogan, if he had godlike power, he could reduce our budget by 50% and still operate properly just by getting rid of the fraud and the nonsense programs. And all the, you know, all the people who have government jobs that are basically useless to the American people.
NASDAQ are all advancing. S&P right now up 0.9%, higher by 62 at 67.83. The Dow up 148, up 0.3%. S&P to be sure off session highs. NASDAQ up 1.6% right now, with the Bloomberg Mag 7 index rallying 2.3%. The 10-year currently yielding 4.12%, with a 2-year at 3.47%. Spot gold, little change, up $3 the ounce to $43.40 now. West Texas Intermediate crude up 1%, 56.50 on WTI, and Bitcoin up 0.3%, 86,199 on Bitcoin. Underlying inflation rose in November at the slowest annual pace since early 2021. National Economic Council Director Kevin Hassett was on Fox Business this morning talking about the report.
Sell off the, yeah, that's what I was thinking.
Report.
You see, that was pure manipulation for it to do that. There were probably a ton of longs looking at that information coming in, saying this should be, this should be good news, and then they ripped everybody's face off, and now it's, now it's going back to where it should have been working.
Some Tesla owners are buying glass breakers and other accessories to help.
It's interesting to watch this shit happen. Once you can really just sit down and just think all day and try and understand what's happening, it's, you have to spend a lot of time watching it go by. I had a hard time, man. I gotta be honest with you. This stuff really psychologically it took me a long time to really get through what's really happening here a lot of the times. I revenge traded. I lost my mind so much. I was like, this is just nonsense. And then I had to rewire my brain. I really had to rewire my brain to be able to control myself during the day. And guys who've been watching a long time, like SM, my buddy SM, and Snooze, and Jay Shades, and the guys have been here since I started talking on the mic. Will tell you that even 6 months ago, I would just be like, fuck all this, and just start going crazy and blowing accounts and be and just stupid psychological meltdown.
What is happening on Capitol Hill with John Thune, the Republican leader in the Senate, now saying that Democrats' 3-year ACA extension, this is the discharge petition.
And this is, I'm coming from a space where that's kind of why I like doing the show the way I'm doing it, is just try and help people like me that are just grinding it out every day, trying to do the right thing, take care of everybody, maybe have a retirement one day,
So we're heading for the cliff. That happens in 2 weeks.
put the hours in so you can have a decent house, nice house, couple cars, hobbies, and be able to make money part-time doing this and understand how it works as quick as possible, really honestly have a real plan B and be able to make some side income by just watching the charts go by and understanding the market. And it's hard to do. It's hard to do, and it's easier to do if you have somebody who's coming from the same place you are that can kind of give you a heads up. Some of this stuff you got to learn on your own. But some of this stuff, at least if you know that's how it is going in, your lesson will be cheaper. Some of my lessons were really expensive, where if I just tell you this is about to happen and you see it happen one time, maybe that's a cheap lesson for you, where it was really more expensive for me. And that's the kind of stuff makes me feel good if that's something we can do here, right now, what do we do now? I'm coming onto a long signal inside a sell fair value gap on the NQ.
As we mentioned a little bit earlier, starting with 11
if this drops back down to the 20 EMA, is that our signal to go long? We got a full-on buy signal right now.
White House, of course, says he knocked it out of the park, and that's been
we're on a confirmation candle to go long. So I think I would like to, if we get a rip back, I would be okay with going long here. But I don't want to go long up here.
High volume, right up on the microphone, actually distorting it at times. Axios calls it a
so let's see if we can get a quick rip down
insisting the economy is stronger than people
before we clear this fair value gap.
Trump's speech, Mike Allen writes, was closer to a Festivus airing of grievances than a Christmas message of hope. A Festivus for the rest of us. Listen.
Here at home, we're bringing our economy back from the brink of ruin. The last administration and their allies in Congress looted our treasury for trillions of dollars, driving up prices and everything at levels never seen before. I am bringing those high prices down and bringing them down very fast.
18 minutes. They say it was the speech that Susie Wiles wanted him to give in Pennsylvania.
Sugar Rush says Jim James, Captain Jim James is very popular. He was talking about the interest rate for the 30-year.
Let's play it to the panel.
A lot of people here watch Jim James. I hear he's a good guy. And standard noon bear drop.
Just like you were.
So we have a standard noon drop off. You can probably track it if you track those kinds of things.
There's Jeannie, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center.
So I'd like to see a real honest pullback and test the 50 EMA or the 20 EMA and I feel good about getting in on
First of all, I'd
long
like to
here.
say it was a beautiful speech in the sense that
He's
it was
good, but
really
I actually
pretty
like some quiet time when
location. I
nothing
love
is
the
going on, and he
festive
doesn't ever
nature of
stop
it.
talking.
It's different than most presidents do, where they show the long
Hey,
hallway
Damon.
with the red
Yeah,
carpet.
it's
So,
just we're pretty chill
kudos
here,
to the
man.
events
Like
folks at the White
when they're,
House
you
for
know,
doing
we're
such a great
analyzing
thing.
minute by minute the
But I will
chart, and
say,
there's sometimes there's only so much you can analyze. You know what I mean? Once you've got
it was
your
very
chart
clear
up to
that
date and you know the
goal of
news
this speech was
cycle,
to get Donald Trump
you
out of the
know,
hot box that he put
you know,
himself in
sometimes,
by
you know,
calling
it's you can goof off a little bit, you know,
affordability a hoax,
find some off-topic stuff to
and the
do.
disastrous speech he gave in Pennsylvania that did the
But
same.
you know,
So
I'm trying to just
clearly they
cover
were
like
rocked by
what's
that at the
pertinent
White
right
House,
now and
needed to get something done before the
not get
holidays.
too.
This was the one opening
He
he
does
had.
talk a lot, does he?
They'll follow this up with
I only
the
watched
North
him for a
Carolina
little bit to
visit,
see what he's got going on. I can see why people
with
like
hope
him.
that he doesn't do the meandering, negative Donald Trump.
Sugar Rush is over on YouTube. Yes, guys, I'm going to try and consolidate YouTube, X, and Rumble chats with Twitch over the weekend and have them scrolling on the screen so everybody can read the chats no matter where you are. Yeah, hey, Ballistics. Yeah, I think we're going to get one here in 2 seconds. Let's see if it's enough for me to get in. I feel safe. Like, if it picks me up on the 20, I feel safe. I feel like I can manage that entry, and I'm on the right side. Hey, let's get weird. Yeah, I'm gonna do it. Sugar Rush gave me a link to an app that will work it. So that's gonna be my goal, is to get that working this weekend. Yeah. Then you know it's okay if more people want to go to YouTube. I need action on YouTube.
Red-faced. He looked like he was some kind of prisoner who didn't want to be there giving the speech. And in fact, afterwards, he
All right,
told
here we go.
reporters in the room that Susie made him do it. And I thought that was a perfect encapsulation as to what happened last night. He did not want to be there. He does not have the interest he said he had on the campaign trail of making lives better for all Americans. His interest is apparently retribution and attacking his opponents. And that's what he spent most of the speech doing. He started off on Joe Biden and he never got off him. And how does that help? He's been in office 11 months now. Everybody knows it is his economy. And much of the facts he talked about were not true. So I don't know what speech Lindsey Graham heard. This was not a home run. This was a home run if you are a Democrat and want to run against Republicans in the new year.
Wow. Okay. Rick, let's talk about style. You know, he was shouting and he raced through the
All right.
script.
So,
Wasn't a lot of breathing.
sorry, I'm working a
It was
lead at
clearly
the same
trying
time,
to be
guys.
high energy and impactful, and I get that. But did it remind us that Donald Trump needs an audience to be effective?
I could, as you point out, there was no audience for this. It was basically like a stage with only a few aides standing behind a camera. It was also a different kind of camera in the sense that the teleprompter was directly in front of him. Normally, he likes to move that head back and forth, reading the teleprompter, driving the teleprompter operator crazy because he'll stop and tell other stories.
All right, my strategy says I can take a long
that he likes to do.
anytime right now.
Last night. So it is not the Donald Trump that we have gotten to know. And again, I mean, I think you must punctuate it with this. I mean, I don't think Donald Trump in his lifetime has given a speech that didn't get to 20 minutes. I mean, that was really amazing in and of itself. And as you say, stylistically, rather than meandering, he rushed through this thing. I mean, it was how quick can I get this done and get back to my watching the White Christmas episode. So I mean, like I really thought I was seeing a different guy up there. Maybe they got a doppelganger to call this one in.
When I got into the radio business, Jeannie, it was a really different experience than it is now. And everybody was fast talking and deep voices and whiz bang.
All right, so we're challenging the 50 EMA guys on the NQ. We're on the VWAP on the ES. So if you're looking on the ES, we're doing a big VWAP challenge. I really like that. Let's see if I get picked up on the NQ right
As you
here.
move away from the politics here, just as a communicator, can you deliver a message that lasts with voters?
Did it just miss me?
On a speedboat.
You know, you absolutely can if your heart is in it. And the problem with Donald Trump last night was the fact he was talking fast.
Got 58 seconds till the next candle.
Listening to him because he didn't want to be there, and that's what he told the pool reporters after. Susie made me do it. What he wanted to say was everything is great, everything is fantastic. If it's not, which the polls
But it
say
missed me
people
by
don't
like
believe
3
it is,
ticks.
then blame Joe Biden. That was his message, and that is not a winning message. And so that is the problem. You couple that with the number of misstatements, I think is the best way to put it, that he made on everything from inflation to unemployment to immigration to tariffs. I mean, the list goes on and on. And he
I'm not going to chase. I'm going to wait till the next candle and see what happens.
Saying to people, I understand what you're contending with, and I am here to make it better. That message he has not been able to deliver since he's gotten into the White House. And so, yeah, you can talk fast and do it, but he was not able to do that last night. And so I think the big question is what happens in North Carolina?
Okay.
That's right. Friday night, we're all going to be listening, see if it is a little more like Pennsylvania or was a little more like last night. I think we probably know what to expect here, but I wonder if you guys saw what the president did with the
I'm just going to sit in the 20. I'm not going to
outside the White House.
Not going to cuck out here. I'm going to sit in the 20.
Right outside the Oval Office. This is where he hung all the pictures of the presidents and put a framed photograph of an auto pen in place of Joe Biden. He's added plaques that add context and biographical information. There you go. If you're with us on YouTube, thank you, Cece. You see what I'm talking about here. It looks like something you'd catch in a museum. These are like brass plaques below the framed photos. In the words of Caroline Leavitt, the White House press secretary, as a student of history, many were written directly by the president.
It just missed me.
Indeed.
All right.
Joe Biden's reads, Sleepy Joe Biden was by far the worst president in American history, nicknamed both sleepy and crooked.
You know what? I'm not going to do it.
Barack
I'm going to sit here.
Obama was
See
the
if it
first black
flushes
president,
back.
a community organizer, one-term senator from Illinois, and one of the most divisive political figures in American history. George W. Bush created the Department of Homeland Security, but started wars in Afghanistan and Iraq, both of which should not have happened. Bill Clinton served as Attorney General, governor of Arkansas, before winning the presidency in what was called a major upset over George H.W. Bush. In 2016, he writes, Clinton's wife Hillary lost the presidency to Donald J. Trump. Rick, taxpayers are going to have to pay to have these removed, right?
Yeah, I'm sure taxpayers have already paid to have them put up, and that should anger some taxpayers because it is an incredible waste of money. Look, if Donald Trump wants to write a history book and settle scores, I think it's great, right? Write it. You can even do it while you're president. I don't care. But then at least people who buy it with their own money, and he's not writing it with taxpayer money. The White House is an iconic building.
Missed it again,
should
guys.
not be partisan in and of itself, and the fact that these are tacked up there indicates a different kind of role for that structure.
See if we get another test.
Jeannie, Ronald Reagan was a fan, he wrote, of President Donald J. Trump long before President Trump's historic run for the White House. Likewise, President Trump was a fan of his. Even Republicans get a backhanded compliment here.
That's right. I'm sure George Washington was a fan of Donald Trump's too as well, Joe. Listen, this is indicative of what we saw last night. This is somebody who is much more interested in attacking Rob Reiner, who is interested in putting up plaques, attacking his predecessors, who is interested in doing all kinds of things except dealing with the health care and the issues and the cost of living that people are feeling. That he rushes through.
I'm starting to think the speech didn't change any minds, at least on our panel. Jeannie Shanzano and Rick Davis will be back with us in our second hour with a lot more to talk about, including our conversation ahead with Jody Arrington, the Republican who runs the House Budget Committee. Straight ahead, only on Bloomberg.
I've had that happen a couple times in the last few weeks. I sit in the 20 and it just barely missed me on the long call on the pull deck. I'm still just gonna sit here just to see if we barcode enough and just it'll wick me, and then I'll get in on the bigger move. So I'm just gonna sit here. I'm not gonna follow it up and take heat. Yeah, I'm with you, DJS. I'm with you, Slumbo. No need to trace this. 2 candles. We could just get another big red candle and I'll be in. You know, there's no point. There's no point. You know. I always like to try and get my entries where they're easily managed. If I take an entry now, I mean, that's not going to be an easy one to manage if we still work this range, you know?
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
A glimmer of hope as we head for the cliff. Welcome to the Thursday edition as House Republicans pass their own health care plan. The same day, a petition to extend Obamacare subsidies got enough signatures to hit the floor. We're going to discuss the way forward and what might happen next year in this whole stories, with subsidies set to expire in just about 2 weeks when we talk to Republican Congressman Jody Arrington, who's chair of the House Budget Committee, and by Democratic Congresswoman Sarah Elfreth of Maryland. They'll both be here coming up this hour. The latest CPI out today shows prices rising at the slowest pace in over 4 years. We'll discuss with Liz Pancotti at the Groundwork Collaborative, looking under the hood at the data with analysis from our political panel. Rick Davis and Jeannie.
What's up, Uranium? I'm just fighting the FOMO again. Ah, man, I missed 2 trades. One by being a chicken shit, and one just missed me by a few ticks to get in on this long.
Data showing U.S. inflation cooled last month. That did ignite stock and bond markets, and right now the S&P
but it's okay.
Off session highs, but it's up 70.
It's okay.
792, a gain there of 1%. Dow Industrial is up 183, up by about 4.
It's okay, Eeyore.
Nasdaq Composite Index surging 394.
Whatever.
1.7%. The 10-year yield, 4.12%, with a 2-year at 3.47%. Gold is down 0.1%.
That drop? Well, we were talking about it. Manipulation, possible interest rate announcements for mortgages, maybe just a normal pullback from noon activity. You know, a number of things could have added up to it.
largest American maker of computer memory.
But I had the damn short signal a candle before, and I said I'll give it one more confirmation candle before I get in. I went to the bathroom and it dropped while I was taking a dump.
Shareholders last week after their results, Oracle up today by 0.7%, and Broadcom up by just about 1%. Warner Brothers shares falling below Netflix's $27.75 offer price. Traders are betting.
Here we go. Maybe I can get some action.
Bidding war for Warner Brothers Discovery is turning
Action
into a
Jackson.
one-horse race, with Netflix winning out over Paramount Skydance. Again, recapping, stocks higher, S&P up now by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. And back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, many thanks to Charlie Pellet. He'll be watching Wall Street for us throughout the hour here with another update on the markets in about 20 minutes' time as we talk politics here in Washington on the Thursday edition of Balance of Power. Thanks for being with us on Bloomberg TV and radio, streaming live on YouTube and on your satellite radio at channel 121 with big questions about health care and what will happen at the end of this month with enhanced COVID-era Obamacare subsidies that you hear us talk about every day set to expire. We do have a bit of a status update. A lot happened yesterday, and you heard much of it take place here in real time on Bloomberg. We spoke with Mike Lawler just a short time after he and 3 other moderate Republicans crossed the aisle to sign a discharge petition that would force a vote on a 3-year extension, a clean extension. This is the Hakeem Jeffries discharge petition, and so that was a pretty big deal that they walked across the aisle on this. But there is more. You know, the House Republican leadership also had its own bill. It emerged Friday night. We've talked about this as well. It does not extend Obamacare subsidies, but it did pass on a party line vote, 216-211, while you were out at the holiday party last night. So what's going on here? Is it possible to avoid the cliff? Senate's getting ready to go. Even if these things pass now, you can't do anything about it till January, right? That's, well, the discharge petition would see action on the floor. Either way, Hakeem Jeffries, the Democratic leader in the House, thinks everybody ought to stay until it's done. Here's what he said.
Under no circumstances should the House of Representatives adjourn until we successfully extend the Affordable Care Act tax credits for tens of millions of Americans. American people deserve a vote today.
All right.
Not tomorrow, not next week, not next year, today.
Of course, that
Jim says, be careful, another liquidation break. Yeah.
And that discharge petition,
Yeah, I feel like if I get picked up here at the bottom end of this fair value gap, I can manage that.
And exactly how we're going to fund the government past the end of the month in January. Will there in fact be regular order? Jody Arrington is with us right now.
I feel like this entry here will be fine. I'll have opportunity to get out if it looks flushy.
Texas, with us on Bloomberg TV and radio. Mr. Chairman, welcome back.
Because you got the, if you look on the ES, it would have to blast through the VWAP again and this fair value gap, and I still think there's support here. I think there's support here. And you got the 200 EMA. So I think I got enough support that I can get out if I need to. That's kind of why I'm sitting here.
Let me start by saying Democrats created this additional layer of COVID or Obamacare subsidy during COVID, and then they extended it for another.
But this is the problem, is like I'm telling myself I got to be a little more aggressive, but now all my chances are gone and I'm just being aggressive for the sake of it instead of the setup's so good. You want to make sure you got yourself in on it, you know.
So these are expiring as designed, just like every
thinking
other
about that also.
program has wound down as COVID is behind us. So the other piece that is important is the COVID subsidies and the underlying program, Obamacare, has increased deductibles and premiums every year. So the question should be, how do we make health care affordable? And at least the bill that was passed, I don't think it will become law, but the Republicans passed out of the House last night, will reduce premiums, according to CBO, by 11%, save $30 billion. Those are the things we need to be working together on, not throwing good money after bad and propping up a failed system.
Well, you know, Congressman, we've even had some Democrats on the air here who say you're right. This is a program that needs reform, but we also need a bridge, whether it's a year or two, whatever the extension needs to be, so people don't get bit when they wake up the first morning in January with what I realize are already higher premiums, but you've got open enrollment that goes to the 15th. Is there a world in which that could be extended and a shock absorber essentially could be put on?
You know, I don't believe so, Joe, and I got to tell you, my position is we already have tax subsidies built into Obamacare that effectively subsidize people at the bronze level at 90% of their premiums. So that's the subsidy that taxpayers front at about 60 to 70 billion a year. Now that cost has doubled when you add these COVID era subsidies. So you would have to do a lot. The Democrats haven't included any of these things, but you'd have to put an income cap so you're not subsidizing wealthy people. You've seen the CBO reports and the GAO reports about the tens of billions of fraud, the millions of ineligible people. So I understand some of my colleagues wanting a bridge, but the point is we're well beyond COVID. They designed these things to wind down and go away. We should focus on the things like we did in last night's bill, close the loophole that allows insurance companies to actually direct people to higher cost coverage plans that they don't want or need, and that will start reducing the premiums and the cost of care. And there are plenty of other ways to do it, many of which, Joe, are bipartisan. So I think we throw plenty of subsidy. Unfortunately, we're throwing the subsidy at the wrong place. It's to the insurance company and not to the individual and family. So we should work together to make ACA actually affordable, the private market affordable, and bring costs down altogether.
You saw the Republican bill in the Senate, inspired by Senator Bill Cassidy, that features health savings accounts. Mr. Chairman, is that an idea that we should be considering in the House?
Absolutely. We expanded health savings accounts in the big, beautiful bill that passed. We should do more, again, to provide federal assistance to people, let them keep more of their money to provide health care for their families and not line the pockets of insurance companies. They're the only ones that have actually done well since the advent of Obamacare. So there's that. There's the health reimbursement accounts. It's similar, where small businesses can provide these health savings accounts for their employees. There are things that we're doing now that are just plain ridiculous. We're paying hospitals more for the same outpatient procedures that we pay physician groups to do. And if we equalize those payments, by the way, the outcomes are the same. If we equalize those payments, we'd save $150 billion, and we'd stop this consolidation of physicians in one big hospital. Big hospital, big insurance, big pharma. These monopoly forces are making the markets not competitive, and they are not giving the choices to the consumer and patients. Yeah. And that, at the crux of it, that's what's the problem is. Too many mandates, too many loopholes, too many regulations, too many taxes. We got to clean it up and let competitive markets do what they do best, and that's providing the best quality at the best cost for a product for consumers.
You're the chairman of the Budget Committee, of course. Congressman, what are we in for here when you come back in January? Because there seems to be a little bit louder talk, and I realize Chuck Schumer was very clear he doesn't want a government shutdown, but there's talk about sleepwalking.
We just got out of the fair value gap.
Lack of trust between Democrats and Republicans. Maybe we want to park that over here from now, because I know that you're hoping to see regular order come back into fashion on Capitol Hill. Do you have enough time to write a budget and pass it?
We do, and what I would hope is that we could actually use budget reconciliation again, because unfortunately, Joe, I don't think that Democrats and Republicans are going to be able to work together. I think many of the Democrats, not all, but the leadership wants health care to be a wedge issue for November. There are others who want to actually address it.
So if you look on the ES, we still do have a resistance fair value gap up here. So we could chop in this zone here for some time more. So we got to take care of one of these. We got to take care of this one if we're going higher. Got to take care of this one if we're going lower.
Let's do it to make healthcare affordable.
So I'm just going to sit on the bottom on the NQ.
Not just better energy policies.
If I get lucky, I get lucky. If not, then I'll just wait for the next setup.
The pressure on the higher prices and inflation. Let's make healthcare affordable. That will bring costs down, make life more affordable. Cost of living will go down. Things will get better But healthcare's got to be addressed.
It's only 1 o'clock. Yeah, anyone out there in along? Who's got positions open right now? Yeah, good idea, Uranium. Who out there has any positions open? Anyone got something they're working?
A unilateral approach as Republicans if we believe in our policies, and I certainly do.
Well, it gives us a bit of a sense of where we're heading in the new year. Mr. Chairman, it's great to have you back. Thanks for being with us. He's chairman of the Budget Committee in the House, Jody Arrington of Texas. On this CPI day, I know you're having trouble following the data. Everyone is right now because it's dropping at various times still because of the government shutdown, the longest in history, and we don't even have a complete view. Not all the data were collected here, but we've got a number for November on inflation in this country. Dare I say affordability? The president talked about it a lot last night, and what we have here is the headline he was hoping to read. Core CPI easing to a 4-year low in shutdown-impacted report. First person we wanted to call today was Liz Pancotti, the Managing Director of Policy and Advocacy at the Groundwork Collaborative. She's been digging through the numbers since 8:30 this morning and with us now live on Bloomberg TV and radio. Liz, it's great to see you. Do the numbers, when you look under the hood, fulfill the headline?
You know, it's tough to see what we're looking at under the hood today, given the missing data that we've got from BLS, given the effects of the government shutdown. It feels a little like we are flying blind. You know, the headline number ticked down a little bit. I assume the president had seen that by the time he gave his primetime speech last night. But when we look under the hood, there is a little bit of funny business going on. For one, the BLS imputed zeros for shelter inflation in October, giving missing data. Unfortunately, as a result of that and some other collection issues, we probably won't have a really solid, accurate accounting of inflation until probably the April print as things iron out. And so I think as the Fed looks at this ahead of their January meeting, I think we're probably set to really look at that January print for December data and potentially even into February with that January data to see things iron out.
What worries you in here? I know the core number impressed a lot of people. Markets are feeling pretty good about it. We're talking about a rate cut in January. But you're still looking at beef prices up 21% in November, coffee up 19%, banana prices up 7%. Real people buy this stuff, right?
Yeah, that's right. I think especially as we head into the holidays here, we are really seeing grocery prices affect people. Utility bills are up, energy is up 6.9%. I think those pressure points in the winter are always a little bit tougher given, you know, large holiday gatherings and high heating bills, especially in the colder regions, the Northeast and the Midwest. Those are really going to take effect on people. At Groundwork, we had analysis out just 2 weeks ago that showed that popular holiday gifts are up 26% this year, given so many of those are imported from China and tariff rates are just really high. So while the headline number, you know, might seem a little bit optimistic, as we look at what expectations are, you know, the New York Fed's November survey, Conference Board data, University of Michigan, all of those are showing that American families don't feel like relief is coming.
So does the market have this right about January, or does the Fed need to see more?
I think the Fed will want to see more. I think given the missing data, you know, we'll see where PCE comes in and what was imputed for that. But just given the lack of data we have for October, November, I think the Fed is going to want to see
Admar.
things iron out a little bit more.
Admar, I rode all 3 big moves and it was fun. I just didn't have a big enough position on any of it. Well, the fact that you got in on it is enough, Admar. Good job, dude. 68.46. Uranium is long at 68.46. All right. So he says we're going to bust out of this fair value gap and head higher.
Or lower price increases.
Well, it sounds like a good one, man. I'd do some back testing on that and see how you can make it part of your regular.
You stay up late to watch the president.
You know, and also look at all the variables. What was the volume range like? You know, what was, you know, were there any trend lines? You know, anything you can find outside of like what the core strategy is to add to it, to kind of refine, is a good idea. Sounds like you got something going, man. Good job.
We're bringing our economy back from the brink of ruin. Wages are rising much faster than inflation. There are more people working today than at any time in American history. 1,450,000 military service members will receive a special, we call Warrior Dividend before Christmas. I'm also taking on the gigantic health insurance companies. I will announce some of the most aggressive housing reform plans in American history.
Okay, a lot of that. We're bringing the economy back from the brink of ruin. He said there, Liz, wages rising faster than inflation, more people working today than at any time in American history. Is all of that supported by data?
You know, what we saw in the jobs report this week, we saw the unemployment tick up a little bit. We have seen retailers say that they are hiring a lot fewer seasonal employees this year. Real wages are not looking so hot. I don't see a lot of truth in the president's statement. You know, it was kind of funny. I think Mike Conzel pulled the spreadsheet of CPI data and just sorted by descending to see what price points he pulled out. I was confused by airfares and sports tickets, but I thought those were funny ones to pull out. And apparently, if you just sort by the biggest numbers, that's where you got them. I think for most families, they're not even thinking about the price of airfares or sports tickets right now because they're struggling to pay the grocery bill and the electric bill.
Oh, you're making me want to fly somewhere. Just 30 seconds here left, Liz. Are you still waiting for the real impact of tariffs because of front running? When does it show up?
Yeah, I mean, I think we're seeing this in Christmas presents right now under the tree. Harvard Pricing Lab shows that goods prices are up about 7% from their pre-Liberation Day trend. And I think Goldman still has the estimate at about 55% of tariffs being passed through. I think we are at the tail end of those inventories that were kind of inflated, rushing ahead of that Liberation Day. The president has still not figured out exactly what's going on with China.
All right, I'm not going to sit here like this.
TBD. Could be an interesting new year for a lot of reasons following our conversations with Liz.
I'm just going to wait and see what happens here.
Jody Arrington, better fasten the chin strap. Our conversation coming up with...
I got a call in 10 minutes, and then after that call, we got the big rah-rah Zoom meeting. They're going to make everybody feel like there's going to be no layoffs. Everybody's like, yeah. Then 3 months later, you get your letter. Somebody gave me a thumbs down on Rumble. I got a thumbs down on Rumble. Somebody on Rumble didn't like me. Yeah, I know. I'm not worried about it. I just I find it funny. You know, it's pretty neutral stuff. I don't know, you know. I can say some pretty crazy things. So I guess if you tune in and I say some crazy things and you're a snowflake, you could get offended. Or if you're a real Karen trying to be a speech police, you could get offended. Cool. I appreciate that, Admar. I really do, man. I really appreciate that, dude. Thank you.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got
well, so this is the first deviation from the VWAP on the NQ. Let's see where we're at. Let's talk about where we're at. All right, we're at the first deviation from the VWAP right here. So I got a shade difference in the thin line. And then we've got so maybe we range and we work this fair value gap. Captain Jim James says we need another liquidation pullback for the real move up. So maybe we get another flush back to deal with this fair value gap, and then we move. Maybe we work this a little more, and then our real move. So our stochastics are ready to roll over. So maybe we need another full rotation down, and then we make the real move to go higher. So let's take a look. Let's see. I'd like the rotation down and give me a chance to get in on the next move for sure. But then if you look on the ES, we do have resistance, so that, you know, we do have resistance, so we could, you know, roll over, find support, and then make the real move. So that's, you know, that could be a thought of what we're doing next.
The executive leading GM's tech push is emerging as the front runner to eventually succeed CEO Mary Barra when the 60
Just got to give it some time to cook and see what we do.
Automaker now Anderson joined the company as chief.
The one thing I do know is we will get another chance to enter. There's no, there's no reason to sit here and make a reason to enter, because the entry will come.
Recapping stocks higher, S&P up 1.1% for on.
Sometimes it doesn't feel like it's fast enough, especially when you missed a move like I did by a few ticks. But that's the danger. If you set your limit and you're like, I want to be in here, I don't want to be in, that's the game you're playing. It may miss you, the liquidation candle may miss you. Or it may plow through too. But I don't like marketing in on a on a pullback liquidation like that. I don't like marketing in. You can get a really bad fill, and then it can run against you. Yeah, it seems a little stuck, huh, Uranium?
To sign a rescheduling of cannabis that would unlock a more favorable tax treatment status, they say, for cannabis companies around the country. But pot stocks have turned decidedly lower today, with great disappointment about what this order apparently will include. A briefing with reporters earlier reportedly includes that the president will direct the Attorney General to expedite and complete the marijuana rescheduling process and allow doctors to prescribe CBD products.
Yeah, I know. Every time we say that, we get Shrek'd.
And more.
I know.
CBD products are different than
Shrek.
THC
It's a trap.
products, so don't smoke them if you got them.
I got to make a sound alert for Admiral Akbar.
It's a trap. We haven't seen this
so I can play
on
it
a piece of paper yet. Now, I've got more for you. The press secretary, Caroline Levitt, just a short time ago announcing on social media that there's a new name for the Kennedy Center. Taking to X to write, I have just been informed that the highly respected board of the Kennedy Center, some of the most successful people from all parts of the world, have just voted unanimously to rename the Kennedy Center to the Trump Kennedy Center. Congratulating in this note, not only President Trump, but likewise, she says, congratulations, President Kennedy, because this will be a truly great team long into the future. We need to get to Tyler. She's on the north lawn of the White House right
You said
now.
that last week. It's a trap sound. Yes, it's on my list. I know. It takes time to do these things. And
the chairman of the board.
if I didn't have a regular job A, it'd be a lot easier to make time to do these things.
Effort under this Trump administration to remake the institution here in the nation's capital.
I was just trying to get the other streams to work right all last weekend. There's a lot to the streaming stuff, man. I can see.
The last administration were fired, and as you mentioned, we saw President Trump himself appointed as the new chair. Now, there is reporting that this vote happened with President Trump phoning into the meeting. That's according to some media reports that have already started circulating after this tweet was posted by the White House Press Secretary Caroline Leavitt. Worth also mentioning the last part of that post on X. She says that the building will no doubt attain new levels of success and grandeur, in her words. Important context here, you'll recall when the One Big Beautiful Bill passed this summer, tucked inside of it was $257 million appropriated specifically for a renovation of the Kennedy building. So, Joe, this really, as we're discussing, is the latest in what has been a series of steps this year, both with the institution itself, but of course the backdrop that this is in the nation's capital. And President Trump has tried to assert his authority here in the nation's capital, including when it comes to the National Guard and crime and working with the local government.
We've, of course, seen ticket sales impacted by the politics around the Kennedy Center, and even some touring shows cancel appearances. Tyler, I thought only Congress could rename the Kennedy Center. Is that the case?
I'm going to have to get back to you on the exact specifics of that. According to the White House press secretary, this was a vote by the board, which, as we've been discussing, was experienced a shakeup earlier this year under the Trump administration. So I'll get back to you on the exact specifics on how this happened, but as you alluded to, widely expected.
I appreciate this, Tyler, and we'll keep our eyes on this EO signing that's set to begin a couple of minutes from now, and it looks like they'll be running late at the White House. Tyler Kendall on the North Lawn today with news on the Trump Kennedy Center. We'll see if that's codified. Sarah Elfreth was listening to our conversation. The Democratic Congresswoman from Maryland joins us now on Bloomberg TV and radio, live from Capitol Hill. Congresswoman, it's great to have you back on Bloomberg. I didn't think I'd be asking you about this, but does Congress need to have a say in renaming the Kennedy Center? And as a Democrat, would you buy tickets at the Trump Kennedy Center?
Thanks, Joe, for having me on. And I was giggling over here while I listened in on that conversation. Just like the president trying to rename the Department of Defense, the Department of War, this is a similar situation. It requires an act of Congress. And so this is pretty make-believe at the moment. And unfortunately, taxpayer dollars might be used to change the name on the wall. But the truth of the matter is we have a system of checks and balances and shared governing here in Washington, and Congress is going to have to approve that. I would be a no vote. As you mentioned, ticket sales are down. There's kind of ramifications of the president's getting so involved in the Kennedy Center politics. I don't quite understand it when we have so many other issues, serious issues the American people are counting on us to address. Why he's spending so much time on this, it boggles the mind.
Well, it's just something we thought we'd get your take on, Congresswoman. And we're a little more interested in your take on health care right now, because we had a remarkable conversation yesterday with Mike Lawler, the Republican from New York, who signed on to Hakeem Jeffries' discharge petition to extend Obamacare subsidies. He was one of 4 Democrats to do so. Now, I realize Republicans passed their bill last evening that doesn't touch Obamacare subsidies.
Right.
And I'm wondering what you think about the next step here. I just asked Congressman Jody Arrington this same question. Is there a deal to be had here, or we're as good as over the cliff?
Listen, I'm an optimist. I wouldn't be in this business if I weren't. I would like to believe that cooler heads can prevail, particularly as upwards of 20 million Americans are set to experience this huge affordability crisis on January 1st because Congress has chosen not to act. House Speaker Johnson has willfully chosen not to negotiate with Democrats to get the votes he would need to pass something actually meaningful and lower the cost of
and
healthcare.
the ES looks like it's going to take off, guys.
Maybe we'll get a Christmas miracle. Cooler heads can prevail, and we can come together. I'm grateful for Mike and the 3 other Republicans for signing on. I think they saw the light, they heard from their constituents. They're doing something about it. That's what everybody watching at home should expect of their members of Congress. But, Do I think the speaker's going to call that up for a vote before we adjourn in, I don't know, maybe an hour? Not likely.
Maybe an hour. Well, yeah, because I guess by the rules, with it being discharged, that would likely put you into the beginning or middle of January when you get back, right? Is this the issue that defines the midterms? Is this what brings Democrats back into power?
I think this is one part of the issue that brings, hopefully the confidence of the American people back to the Democratic Party. It's the affordability crisis broadly. You were just chatting about the impacts as we're going into the holiday season. I spent, my Small Business Saturday a few weeks ago visiting small shops in Annapolis and in Ellicott City in my district and just talking to those business owners about the tariff hits that they took, purchasing a lot of the products they had on shelves for the holiday season pre-tariffs, and then to come to find out that they're going to have to pay, depending on the country, 30% tariffs. They can't afford to eat those costs. They're being passed on to the American people, and that's just one part. We talked about groceries before. We talked about, I just paid my electricity bill, and it was staggering. We talk about health insurance, housing, childcare. I hear constantly. The Republicans promised to solve it. The president promised to solve it on day one of his presidency. We're almost a year into that with no meaningful impact. At least folks back at home in my district aren't feeling the impact of these actions. So I think this is a mantle.
This is a horrible day for me.
Are really
I'm not in on
charged up
anything.
To lead on over the next year and prove not just that we're against the president or against Republicans, but we're actually for solving this affordability crisis.
Congresswoman, you represent Maryland's 3rd district, which includes all of Annapolis, and of course that means our great Naval Academy. You're also a member of the Armed Services Committee, so I'm sure you're knee-deep in conversations and briefings around what the president's referring to as a naval blockade around Venezuela. There was a closed-door briefing earlier this week, and I'm wondering what questions you have going forward and whether you think this is the march to war in the Caribbean.
It's really unclear. I was in 2 closed-door classified briefings this week.
Yeah, I know, man.
And I left
it's
with
painful.
more
It's 1:30. We still got time, but we really do need that snatch back.
And the Navy. 14%
and I just got to make sure I get fired in this time.
Engaged in some type of conflict, undefined conflict.
Fired up on that.
I was with the Secretary Hegseth, when he talked just 2 weeks ago about not entering the American people and our service members into meaningless and endless wars, and yet our goals with Venezuela are completely undefined. And as a member of Congress, member of the Armed Services Committee, that really troubles me. It's keeping me up at night with so many of my constituents, including a lot of folks from the Naval Academy down there right now. At the same time, the American people deserve to have answers. This is, months-long engagement in a part of the world that the president can't define our goals or why we have 14% of our fleet down there in the first place. And as I've said, I can't tell you how many times in my first 11 months in the House, our founders and framers structured the Constitution intentionally putting war powers in Article 1 with the Congress. Unfortunately, we had 2 resolutions yesterday that did not pass to kind of regain some of that control. I hope the American people are equally concerned.
14% is a remarkable number, Congresswoman. I've only got a minute left. The president said yesterday, having framed this about drugs until now, that this is about the oil, he said. Venezuela took our oil illegally, and we're going to take it back. Is that what this is about, oil?
I don't know what it's about. I also think that it's a false bill of goods that he's selling to the American people. Listen, I've had family members who have unfortunately lost their lives to fentanyl, but if we were focused on fentanyl, we'd be focused on China and not on Venezuela. What they're taking, what they're sinking, are boats carrying cocaine, not boats carrying fentanyl. And at the same time, the president is pardoning literal drug kingpins who have been convicted by juries of actually killing
Cell block
people
6680
so
says
there's a mismatch of messaging here that is also deeply, deeply concerning.
Democratic Congresswoman
Tonight
Sarah
is the
Elfreth
7th night of
Maryland. It's great to
Hanukkah.
have you, Congresswoman. Thanks for being part of our conversation. We'll assemble our political panel next, only here on Bloomberg.
grinding up. Are you still in that long uranium? Hey, Ladioff. Hey, Ladioff, how you doing today, man? You up? Are you in a long? All right, Ladioff's in the long. He's in a long buy. Do you have a target? What's your target, Ladioff? Hey, Alleyway. I say we retest. Oh, hey, thanks for following, Alleyway. I say we retest 6878. Big Bear wall still sitting up there. Oh, wow, that's a big... So you think we move 20 more points before we run into resistance? That's a big call. I got a level at 78 right here. Okay, I can get behind that.
It's 140 on Wall Street. We do check markets all day long here at Bloomberg.
Overnight, I'm not holding it. Oh, okay. I'm scalping till we get there. Okay, yeah, I totally get it. I get it. Are you in a position right now? There is a pivot at 68. All right, Sugar Rush over on YouTube is confirming your resistance level. He's calling pivot at 68, 79, 82. Yeah, there's usually like a zone, you know what I mean? It's like three or, you know, could be 2, 3, 4 points of that zone of resistance. Whoever thought that ads on this bitch was a good idea. So, you can go over to the YouTube channel, man, or, you know, if you want to support the channel, you can subscribe, but I don't ask people to spend money. If, you know, if you want to subscribe, great, but you can go over to the YouTube channel. There's no ads there yet. I can't do nothing. Oh, all right, hold on. Hey, Lord Titty, how you doing? Yeah, I know. We've had good signals, though, you know, man. There's been good signals. It's just I didn't get in on them. 25,450. All right, Ladioff is calling 25,450 on the NQ.
24 hours a day. Subscribe to Bloomberg News now wherever you get your podcast. And Balance of Power continues right now. Back we go to Washington. Once again, your host is Joe Matthew.
All right, Charlie. Thank you so much. The voice of Wall Street with us on Bloomberg TV and radio. Charlie Pellet live in New York. He'll have more in about 20 when Bloomberg Business.
Ladioff is calling 25,450 on the NQ.
We are watching Wall Street with Charlie.
That's about the same level as the. Oh, hey, we went from wall to wall on my charts from bearish triple stack to bullish triple stack back to the bearish quad stack below it. Back to retracing all of yesterday. I think we may be near the bottom of the weekly range. Okay, so you think we go up from here. But I wanted to tell you, I can't do anything about the ads. You know, I don't ask people to spend money. If you want to subscribe, great. The ads won't come through. But you can also go over to YouTube. There's no ads on YouTube yet on my channel, and I watch the chat there, Alleyway. So just letting you know that. Yeah, man. It sounds like 25,509. Okay, yeah.
We have a whole new dose of FOMO thanks to Micron technology.
Well, Micron is certainly pulling a lot of its.
Sounds like everybody's kind of seeing the same levels right now.
In that group here, I mean, as you look at Micron,
seems like everything's pretty organized. You just got to wait for your entry point, and then make sure you take your profit down. It seems like right now.
They are seeing the company being able to charge more for their products.
Sugar Rush is calling 25,509 on the NQ.
And surging demand as some of the things.
Body Off's calling 450.
Seeing the street celebrating, as you mentioned, just a tad.
And then 82 to like 70 was, would you say? 78 to 82 on the ES for the high side before we come back down. Yeah, everybody's pretty. I think everybody's seeing similar things today.
All right, Nora, thank you so much.
That's when the whales mess with you. They get it super organized, super making sense, and then that's when they start liquidating. Yeah, 68.41. Okay. Yeah, but the VWAP. Let's say we're gonna. So maybe we got to challenge. Maybe we got to challenge this fair value gap, right? So maybe we got to do some business down here before we make the real move up. I'm in on that.
Right now, we'll note that pot stocks are heading lower, so it's not entirely clear what the language is going to read. Jeannie, is the president taking an issue away from Democrats?
Yeah, I got a level right on that.
That is a fear amongst many of the liberal groups. They're saying,
yeah, here we go. We got may the drilling commence. Middle Earth.
Of them who supported Trump in
Radio check, Middle Earth.
Support the legalization, but this is obviously not legalization. It's a rescheduling, should say that. But that is
CVD is dropping, Delta percentage is dropping. Okay, so everything's rolling. Rolling.
His campaign, and Tony Fabrizio, one of his chief
the Delta crowd's in on the
cannabis companies.
On the drop.
You know, there's some push there, and he thinks it's good politics.
All right, Rick, I think you're saved by the bell. The president is talking now with the pool standing right in front of the Resolute desk. Let's bring you in the Oval live on Bloomberg TV and radio.
Patients suffering from extreme pain, incurable diseases, aggressive cancers, seizure disorders, neurological
Delta change is positive, could be move, could be elastic, be quick to exit. Okay.
With chronic medical problems that severely
interesting.
Degrade their quality of life.
All right, let's see what we test. Let's see what levels we can test here on this drop.
I can't tell you. I think I probably have received more phone calls on this, on doing what we're doing. I don't think I received any calls on the other side of it, but hopefully this reclassification.
Oh shit! I gotta make a phone call,
which, by the way,
guys. I'll be right back. I'm late on it.
Will help many of those patients live a far better life. We're joined today by Secretary Robert F. Kennedy Jr., who's doing a fantastic job, Administrator of Centers for Medicare and Medicaid Services, Dr. Mehmet Oz, the FDA Commissioner, Dr. Marty McCary, Director of the National Institutes of Health, Dr. Jay Bhattacharya, and the Director of the National Institute on Drug Abuse, Dr. Nora Valkow, as well as Dr. Ilana Braun from the Dana-Farber Cancer Institute, Duke University's Dr. David Casseret, the National Commander of the American Legion, Dan Wiley, and my friend Howard Kessler. Howard, how are you feeling? I'm telling you, he looks better than he did 20 years ago. But I don't want to go through what you went through to get there, right? But it looks like you're doing great. I'm proud of you. I want to emphasize that the order I am about to sign is not the legalization, or it doesn't legalize marijuana in any way, shape, or form. and in no way sanctions its use as a recreational drug. It has nothing to do with that. Just as the prescription painkillers may have legitimate uses, but can also do irreversible damage and never, you know, if you look at some of the damage that can be caused, wreck lives, and if it's abused, it's never safe to use powerful controlled substances in recreational manners, and especially in this case, if you take a look, illegal and unregulated drugs, very, very bad thing.
All right, guys,
So I've always told my children,
I got
don't
canceled
take drugs,
anyway.
no drinking, no
Cracking
smoking,
moves. CPOC
and
needs
just
to
stay away
shift, in
from
my
drugs.
opinion.
I have been, they would look at me and
All
they
right,
said,
I got a
"Jay,
Zoom
would you
call in
stop
like
saying
13
that?" I would say
minutes.
every time I
45.
looked at
It's
it
a
practically.
meeting.
Young
I
Americans
gotta
are
do it.
especially at risk, so unless
So all right, let's see
a
what we
drug
can
is
do here in the next
recommended
10
by a
minutes,
doctor
and then
for
I'm gonna be away
reasons,
for a little
just
bit.
don't do it. At the same time, the facts compel
No
the
shift.
federal
We could
government
sling
to
back.
recognize that
We're in the
marijuana can be,
slingshot. We're in the
legitimate in terms
slingshot,
of medical
bitches.
applications when carefully administered. In some cases,
Bears going quiet.
this
Trump's
may
talking
include
about
the use as
marijuana.
a
Where's Juju
substitute
at?
for
Juju, you
addictive,
listening?
potentially lethal
Uncle Donnie's
opioid
talking about your
painkillers.
marijuana, Juju.
They cause tremendous problems. This can
Where's
do it in a
Juju?
much lesser way, can make people feel much better.
I hope you're listening.
That are living through tremendous pain and problems. 40 states and multiple U.S. territories have already
Better average in.
recognized the use of medical marijuana.
Yeah, push your
This
dad, yeah.
classification order will make
This
it
candle's
far
gonna
easier
tell you
to
what's up,
conduct
I think,
marijuana-related
alleyway.
medical research, allowing us to study benefits, potential dangers, and future treatments. It's going to have a tremendously positive impact, I believe. We're also asking Congress to reconsider its classification of hemp-derived CBD to ensure seniors can access CBD products they have found beneficial for pain and other reasons. Some people are literally dying, and they're dying with tremendous pain, and this can, in many cases, literally stop it. And they have their senses about
Bullish
it,
imbalance
as
on
opposed to
bottom
painkillers,
of
which
candle.
Don't allow that.
CPOC still
don't
not
allow them to die with
sifted.
dignity, frankly.
Candle close in 30 seconds.
Promise to be the
All right, 30
president,
seconds till
common sense,
alleyway
and that is
closes his
exactly what
candle,
we're doing. This is really
gets
something
his
having
signal.
to do with common sense. And it's something having to do with the
Sifted,
fact that
shifted,
so
I'm sorry,
many
shifted.
people that I respect ask me to do it. People that are having problems, big problems. They
Yeah,
have
I'm
big
feeling like
problems
this is
with illness,
this is
with
looking heavy to
cancer in
me.
particular.
This is
I now want to
looking
ask
like we're
Dr.
gonna
Oz to say a few words, followed by Dr.
we're gonna move
Braun,
to the
Dr.
short.
Casseret, Dan
Maybe.
Wiley, and Dr. Valcow.
Maybe we'll have to wait and see.
We'll sign the order as soon as they're complete, and we'll take some questions. Please, go ahead.
Mr. President, thank you for always bravely pushing for common sense
Moved.
change.
This is too late. I've been in.
So, President Trump.
Yeah, no, I don't have a signal to do anything yet. I don't. I missed my signal on the long, and I missed my signal on the short. One of them was working, and one of them, I had a limit set, and I missed it by a few ticks getting picked up. But I don't have any signals right now for me.
As he says,
Short off trip
marijuana
stack
can be legit
6850.
in terms of
Let's
medical
take a look at the
applications,
ES.
and this will open up some opportunities for research. It will also allow cannabis companies, as we understand it from analysis at Bloomberg Intelligence, to have a much more favorable tax treatment by the federal government. Let's get back to our political panel. Bloomberg Politics.
Admar, I just had a buy signal, and I want to wait to see it visibly. Yeah, I know. All right, alleyway's out of the short. 68.45. 5-point move on the ES is a good trade. Nice trade, alleyway. Nice trade. That's a solid trade on the ES.
Yeah, really, Joe, what I picked off in his comments were that he didn't hear from anybody that said this wasn't a good idea. And I would remind him, 22 House and Senate Republicans signed an open letter to him asking him not to do this. And then more recently, another 9 sent letters, Republican members of Congress, to the Department of Justice asking them not to do this. So there is a group within the Republican caucus want to stick their heads up over the fence and say, hey, we don't think it's such a great idea. And I would remind him there's a reason that almost all the states that have had zero tolerance laws toward marijuana
Close enough. Close
are
enough,
governed
alleyway.
by Republican
Close
state
enough.
legislators and Republican governors. And so, yeah, there's a divide politically.
Yeah,
on
I'm
this
kind of
issue.
feeling
And
it
I
right
think
here.
This is another
I'm
example
kind of feeling it.
where, maybe Donald Trump is doing something commonsensical.
Thing is I've got a red
but it
forecast cloud on
certainly
the
does create
NQ.
a lot of pressure within the coalition that made him president.
So I gotta wait. I don't have anything solid. See, I'm gonna talk myself into a trade now, and it's a low percentage trade compared to the correct signal.
Follow more carefully because it's all U.S. cannabis companies, not mixed in
Oh,
with
hey,
Canada.
hey, see you later, Alleyway.
Right now.
We'll be here tomorrow, man. We're here. The stream is up 24 hours during the trading week. I'm on the mic from 8 to 4:30, dude. We'll see you later.
Probably did. And I think you hear the president there in the remarks, at least I read them, as him trying to be cautious. The medical community has long said that the 1970 Schedule I designation for marijuana didn't make much sense anymore because it includes the idea that there is absolutely no medical use for marijuana. And most members of the medical community say that's not true. So I think that President is on the right side when he says there is medical research use. It needs to be rescheduled. But of course, for people in the cannabis community, they have long wanted more. And I think what Rick's talking about is a really important aspect of this. The president is sort of caught between these two divides in his own party. And I think he's trying to walk a middle that may not make anyone happy. But it is the next logical step. And I think betting markets had this happening at about 90%.
All right, this is looking weak, huh?
I think it was expected, but probably not what everybody in the community may have wanted.
Well, he did suggest that it was coming on the campaign trail. Rick, we saw an op-ed recently from Roger Stone urging the president to take this move. So clearly he's got a lot of people around him, to your point, who are suggesting this is a good idea. But you mentioned the senators, and I'll point to those in the DEA who think that they've been abandoned here, having seen in many cases some of their colleagues killed in trying to enforce anti-cannabis law. What kind of a dynamic is the president creating within the administration on this?
I think it's a little bit of stress. It's not the first policy that he's, taken a position on where he doesn't create that kind of stress. I mean, he is not a, doctrinaire ideologue. He very much talks about his ideology as common sense. And in his world and the advisors around him, like you mentioned, Roger Stone, they're saying, hey, this is common sense. Of course, you're going to do this. And so, I think he buys off on that. And yet that does create a lot of stress within the government agencies that have long since seen the negative effects of this in communities. And then, of course, as we've talked, the political organizations that have campaigned against this and continue to do so to this day in states that are still having referendums on this topic. So, it is... it's a step toward legalization, but not in total.
Rick Davis and Jeannie Shanzano, many thanks to our great panel for the insights. It is official. The president rescheduling cannabis with a cadre of supporters in the Oval Office. Bloomberg Business Week Daily will have more on this as he is expected to take questions from reporters. So keep it right here on Bloomberg TV and radio.
All right, I got 4 minutes for I gotta do my Zoom. It's about 45 minutes or so. I don't know, guys. It's like faking you out. Is it long? Is it short? Is it long? Is it short? See, that's why the initial move was down here. The initial move was right here. This was the initial move, right where these EMAs crossed. Okay, so now here, you're kind of trying to figure out, are we going to continue higher or are we going to break down into the short? So this zone is a lot harder to determine. This is the A+ move right here. So it took off, and then my entry missed me here by like a few ticks. I was sitting right here, and then I would have had to run up. Now you got to decide, are we gonna, what are we gonna do here? Right now we got a red forecast cloud, that's for the short. We got a green control EMA condition. So it doesn't really know yet. Uranium just got a short signal. The ES, same thing on the ES. The move is right here. Okay, that was the signal. Okay, Ladioff. Ladioff's calling the bump. And right here was the entry. Ladioff's calling the bump. All right, guys, I got to sign off for about 45 minutes. I got to go do this meeting, so we'll just see what happens. I'll be watching it while the meeting's on. I'll see you in a little bit.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very happy Thursday, everyone. Good afternoon across Bloomberg platforms. This is Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters in New York City. Hey, we got stocks bouncing off their lows. I've been watching yields. We did get an inflation print earlier today. At the longer end of the yield curve, we are seeing yields a little bit lower, shorter end, maybe a different trade.
Yeah, we're going to have more from Charlie in just a minute on the trade, but the Dow is up 0.4%. The real action, though, happening in tech stocks. The NASDAQ up 1.7%. The S&P up a full percentage point, Carol. And if we take a deeper dive in there, only energy, real estate, and consumer staples are in the red.
It's funny that you say energy. We're going to get to that a little bit later on this hour. What I do want to say is that on the trade, we're going to kind of dig into all of that. CPI, Micron Technology soaring in today's session, bringing up most of the chip names. We're going to get into all of that that's coming out to investors. Get a look on the trade.
Yeah, investors, too, I think have a lot of questions going into next year. We got Jason Granite stopping by in just a few minutes. Chief Investment Officer over at BNY. He's got 6 for 26. These are essential questions, but also maybe some answers for investors.
Yeah, looking forward to that. Frank Sorrentino will have some answers as well. He's founder and CEO of Connect One Bank. Great read on small business, great read on construction. Curious to see, too. We talked to him just after the November election, so curious to see what he has to say about residential and housing and costs, again, in New York. We've talked about this with him in the past.
Yeah, he's going to be joining us a little later this hour. And you mentioned energy, the reality of energy and sustainability. The CEO of Honeywell Energy and Sustainability Solutions joining us a little later, too.
Pretty cool stuff coming your way in the next 60 minutes.
Funny how that works. Got a great team who puts it all together for us, right?
Thank God for them.
Yeah.
Hey, also thank God for Charlie Pell. Let's get a check on the trading day here. He is right here in New York.
All right, I thank you very much. Focusing right now on what's happening with U.S. markets higher across the board. With the Dow, the S&P, NASDAQ all advancing. Will the gains stick? Stay with Bloomberg Television and Radio right into the close to see how things shake out. But right now, S&P up 67. It is a CPI Thursday. We're looking at a gain now of 1%. Dow Industrials higher by 158, up 0.3. NASDAQ up 366 now. NASDAQ up by 1.6%. The Bloomberg Mag 7 Index higher by 2.3%. 10-year, 4.12%, with the 2-year currently yielding 3.47%. Gold, little change, down 0.2%, 43.29 the ounce. West Texas Intermediate crude up 0.7%, 56.31 a barrel. And Bitcoin right now retreating by 0.3%, 85,675 on Bitcoin. Bottom line here, stocks are advancing as a cooler than expected inflation report lifts hopes that the Fed will cut interest rates further. Right now, looking at wheat stocks, they are higher. We've got shares of Canopy Growth up by 5.2%. Tilray right now up by 1.1%. But interestingly, the marijuana ETF, the Amplify Alternative Harvest ETF, ticker MJ, it is down by 6.9%. President Trump saying his executive order on marijuana will make it far easier to conduct related medical research, and that his administration will ask Congress to reconsider its classification of hemp-derived CBD. The president saying his order will not legalize marijuana in any way. Again, recapping, stocks are advancing, S&P up by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, Micron Technology, man, that stock is soaring in today's session. We saw that play out after it reported late last night after the close. The stock right now, Tim, is up about 13% in today's session. Company came out, rosy outlook, thanks to the AI boom fueling demand for memory chips. So it pushed up the Philadelphia Stock Exchange Semiconductor Index with it. The stock's up more than 4% at its intraday high today.
Yeah, 12.7% where it is right now, higher. That's pretty good.
Yeah.
What about 200% for the year?
That's like what?
Pretty unbelievable.
Unbelievable outperformance. I was looking at it is about 1.5% of the Nasdaq 100, just about 0.5% of the S&P 500, but about 7% of the SOX. So I'm just trying to look at where it's being felt here in today's trade.
Okay, so that's the micro from Micron.
Yeah.
The macro, this morning's read on U.S. inflation, CPI showing underlying U.S. inflation rose in November at the slowest annual pace since early 2021. The data, though, Carol, a bit muddled thanks to that, U.S. government shutdown.
All right, add it all up. We have stocks bouncing around a little bit. We did see a rally earlier on, and we also did see yields, most notably at the longer end of the yield curve, moving lower. Let's get our market roundup, and for that we head to Ed Harrison, senior editor and author of the Everything Risk newsletter. He's in the Bloomberg News Washington, D.C. bureau. Ed, good to have you here. Markets are bouncing around a little bit, but we did see a rally, and we still are up about 1.6% on the NASDAQ 100. Do we just say, thank you, Micron? Thank you, CPI? It feels like Micron has a lot to do with this.
Yeah, I think you're right, Carol, because Micron was up 14% pre-market, and now it's up 13%. So it's basically held onto its gains, and even before we had the CPI, that's what the situation was. The CPI only helped that, but the CPI, it was a bit dodgy, the data, to be honest, because of these imputed prices, and I can go into some of that with you.
Yeah, let's do that. Why is it murky?
Yeah, so owner's equivalent rent in particular, shelter is the biggest component. I looked at the numbers, and if you look at the actual number for August and you compare that number to for September and compare that to November, you get an annualized increase of something like 1%. Now, if you go back and you compare September to July, you get an annualized increase of 4%. So what's clear that happened is that they did something to make the October number the exact same as the September number, and then they based the November number off of that, which artificially lowered the shelter cost, which is the largest component of CPI. Now normally you would think that would come back out in December, but the reality is that owner's equivalent rent is only calculated once every 6 months. So the next survey is January or February, which means essentially that these numbers, this zeroing out of October, will be carried forward for another 2 to 3 months.
Ed, forgive us. We've got to run to the White House, the Oval Office. President Trump signing an executive order in terms of the reclassification of marijuana, but he is also taking some questions from reporters. So let's listen in.
money go to the people directly and let the people buy their own health care. And they'll get much better health care than they get with the Unaffordable Care Act, as it's known by a lot of people. It is virtually unaffordable for people. It's a bad thing. We can have a great thing. Let the money go directly to the people and let them buy their own health care.
But this is an urgent problem, Mr. President. Is there anything you can do now, Mr. President?
Can I answer, Mr.
This is
President?
going to be right now, as far as I'm concerned. Go ahead.
We just got data today. We have federal exchanges where people come shopping for the ACA. And the president hasn't heard this yet, but we've talked to the team. The percentage change from last year was down 2.7 to 2.8%. Not the massive numbers that have been predicted. And there's many possible reasons for this, but right now Americans are signing up for these programs despite all the things that have been going on. 2.8% is a tiny fraction of what many had claimed would happen, and I think it speaks to the fact the American people appreciate these ACA plans are already subsidized over 80%. So it's a good deal, even if you don't get the extra 15, 20%.
It's a great solution to much better health care at a much lower cost. Yeah, please.
But do you want Congress to extend these ACA subsidies?
Well, I'd like not to be able to do it. I'd like to get right into this, and I'd ask Oz this question in particular, but I'd like to see us get right into this. I don't know why we have to extend. This could be done rapidly if the Democrats would come along. We have a problem. The insurance companies own the Democrat Party. They own it. And the Democrats having a hard time. They give a lot of money to the Democrats. Very little money to Republicans, by the way. A lot of money to Democrats. And they're going to have to decide, do they want to do the right thing or do they want to be beholden to the insurance companies? They're making a fortune. I want the money to go to the people. Go ahead, Oz. How would you say that?
I agree with the president. We have some ideas out there. Congress is working through some concepts. But I just want to emphasize that the ACAs are not imploding based on the data we just received from the federal marketplace.
This can go very quickly, actually. Yes, please.
Mr. President, can I ask you, clarify something for me on the Federal Reserve? How many people are you interviewing for the Fed chairman, and what did you think of Chris Waller?
I think he's great. I mean, he's been a man who's been there a long time, somebody that I was very involved with in the sense of his career, and he's a fantastic man. I met him yesterday. Again.
So how many people are you looking at?
We're talking to 3 or 4. I think every one of them would be a good choice, honestly. We'll be making a decision pretty quick.
Is Michelle Bowman on that list too? Are you going to interview her?
She's fantastic. She's a fantastic person.
Thank you, Mr. President. Some GOP lawmakers have written to you in recent days saying they're concerned this executive order could normalize drug use for youth. How would you respond to them?
You're talking about this particular today? Well, I think I'd let one of the doctors respond to it because they can do it a lot better than me. But I can only tell you that when you see polls of 82% of the people want this, when I have friends that are really, really sick and they've gone through, I guess you could say, unfortunately, I don't want to become too involved in it because I don't want it happening. But these are people that really know what's going on. Very smart people. This is one of the most successful people in the country and a very brilliant guy. And when they go through this horrible ordeal of cancer or other things, and they realize that this is something that makes them feel better without all of the side effects of some of the drugs where you're just totally knocked out and out of it. But I'd like to have one of the doctors maybe respond because you people do it better than anybody.
I'm happy to respond.
Yes.
I mean, and my answer is we have had cannabis scheduled for how long? And it hasn't protected neither the adolescents nor the adults. We have 20 million people in the United States with a cannabis use disorder. This is not legalizing it. It's making easier to do research so that we can use it when it is indicated and optimally.
So it's also a big part of this is research. In other words, you'll now have a much larger sample and you'll be able to see if it's as good as many people say it is. I mean, people say it is beyond good, and you'll be able to find that out now.
On housing, you talked in your address last night about housing.
Yeah.
Are you still considering a national emergency over housing?
I'm looking at it.
What would that look like? What would that mobilize?
You know, there's two thoughts on housing. You have a lot of people have housing that because we have such a strong time and such a strong market, their houses are very valuable. It's a big part of their net worth, their house. I don't want to knock those numbers down because I want them to continue to have a big value for their house. At the same time, I want to make it possible for young people out there and other people to buy housing. In a way, they're at conflict. In other words, you create a lot of housing all of a sudden, and it drives the housing prices down. So I want to take care of the people that have houses that have a value to, to the house that they never thought possible, that have sort of made them wealthy and happy, and especially in their later years. Got to be careful with that. I want to keep them up. At the same time, I want to make it possible for people to go buy houses.
Daniel, please. Mr. President, you announced the Warriors dividend last night in your primetime speech. Very patriotic, very generous. What was the rationale and the thought process? How did you come up with the idea? What made you want to give back to
Well,
our
the
troops?
1776 was easy to come up with because we're actually at 1775. The number was 1775, and I said, wow, I think we can afford one more dollar. But they came up to me, it was $1,775. So I said, well, let's add $1 to it. I think we can find that. And very simple, we've had a military that, in my opinion, by other presidents, was not treated well. They're incredible. They're our finest people. They're protecting us. And because of tariffs, we're taking in billions and billions of dollars more than we ever have before. With no inflation, by the way, with no inflation. You saw the inflation numbers, they just came out today. What great timing. Practically no inflation. And yet we're taking in hundreds of billions of dollars. And this is small potatoes by comparison, but it's a way of taking care of our warriors, our soldiers. And I appreciate that question, Daniel.
Yeah, and Caroline,
it was an easy one.
She just posted on X, her press secretary, that the board members of the Kennedy Center voted unanimously to rename it the Trump Kennedy Center. What is your reaction to that?
Well, I was honored by it. The board is a very distinguished board, most distinguished people in the country. And I was surprised by it. I was honored by it. We're saving the building. We saved the building. The building was in such bad shape, both physically, financially, and every other way. And now it's very solid, very strong. We have something going on television, I guess on the 23rd December. I think it's going to get very big ratings. And the Kennedy Center is really back strongly. It's in very bad shape, very, very bad shape physically. And we were also to get Congress to put up a lot of money and other people to put up a lot of money. We had a lot of donors come in for record-setting numbers. So we saved the Kennedy Center, and I was really, this was brought up by one of the very distinguished board members, and they voted on it. And there's a lot of board members, and they voted unanimously. So I was very honored by it. Thank you.
Mr. President, will you be seeking any authorization from Congress for any land attacks on cartels in Venezuela?
For anyone?
For any land attacks on drug cartels in Venezuela?
I wouldn't mind telling them, but it's not a big deal. I don't have to tell them. It's been proven. But I wouldn't mind at all. I just hope they wouldn't leak it. You have people leak it. They are politicians and they leak like a sieve. But I'd have no problem doing that.
Mr. President.
Yes, please.
Mr. President, there's a meeting this weekend on Ukraine in Florida. What are you hoping will come out of that meeting?
Well, they're getting close to something, but I hope Ukraine moves quickly. I hope Ukraine moves quickly because Russia's there. And, every time they take too much time, then Russia changes their mind. 27,000 soldiers were killed last month. Think of that. What do you think of that, doctors? 27,000. It's like a half a football stadium were killed in 1 month. And it's that way. It's anywhere between 20 and 30,000, mostly soldiers. Also some people from Kiev and other places. But largely it's the soldiers. They're losing their lives. Nobody's ever seen anything like it. It's the worst since World War II. And, you've heard me say I settled 8 wars. Some going on for 35 years, one going on for 37, one going on for 32. And 8 wars, and I thought this would be an easier one. This is because of the animosity, the hatred. It's a little bit more difficult than we thought, but there's a chance we can get this done maybe soon.
Sir,
remember that 25 to 30,000 people being killed a month, young people being killed a month. Steve, please.
When do you expect to make your announcement about the new Fed chair, sir? Before
be that much different from what I did last night. I mean, we've had tremendous success. We're bringing prices down. We inherited a mess. And part of what we inherited was the worst inflation in 48 years. I say history, but we had the worst inflation. It drove prices up. And now we're bringing those prices down. But I'll be talking about that. I'll be talking about the fact that we secured the border where literally nobody can come into our country illegally anymore. They came in from prisons and mental institutions and drug dealers and, you know, a lot of bad people from all over the world. Venezuela emptied their prisons into our country. We had Tren de Aragua, which supposedly, the doctors don't know this, it's the meanest gang of them all. Okay, doctor? You don't have to know about it. You got other problems. But they let a lot of bad people in here. And so I think I'll be talking about that. I think I'll be talking about the tremendous success we have by sending the National Guard into various cities. D.C. is the ultimate example. People walk to work and they thank me all the time. People in the White House, they just walk to the White House from 10 blocks away. Before I came into office, they couldn't do that. They were getting badly hurt in many cases and beyond hurt, killed. So we were losing people. We were losing, on average, a person a week. Can you believe it? More. And now we haven't lost anybody in a long time. I consider the two people that got so badly hurt, the National Guard, that's a different city. That was terrorism. That was terrorism. And probably terrorism, maybe terrorism because they were unhappy with the tremendous success we've had because they don't want to see this country be successful. But Washington, D.C. now is a safe, beautiful city where the restaurants are booming, the town is booming. People walk to the restaurants with their wife or their children and have a good time. We were losing all the restaurants. We were losing our life in this. We were just the whole heritage of Washington D.C. was down the drain, and we brought it back. And now everybody's thrilled to be here. It's the hottest. It's a part of the hottest country anywhere in the world. We become, in 10 months, the hottest country anywhere in the world. And I say it all the time, we were a dead country 1.5 years ago.
Did you expect to meet Prime Minister Netanyahu while you're down in Palm Beach?
Yeah, he would like to see me. We haven't set it up formally, but he'd like to see me. We've had great success. Peace in the Middle East, aside from everything else. We now have peace in the Middle East. Yeah, he'll probably come to see me in Florida.
The Egyptians as well? Are they coming
I'd love to have him. El Sisi, he's a friend of mine. Yeah, I'd love to have him. Thank you very much, everybody.
All right, everybody, you've been listening to President Trump there in the Oval Office. The main order of business for the day was about signing an executive order on the reclassification of marijuana, which is why you see cannabis stocks certainly rallying in today's session, making it easier, certainly in terms of access and for businesses. But having said that, as he often does, Tim, taking questions from reporters on a range of topics.
Yeah, including the Federal Reserve. He said talking to 3 or 4 Fed chair candidates, every one of 3 or 4 Fed chair candidates would be great. He said Michelle Bowman is great. He said he'd be making a decision very quickly on the Fed. Then a few minutes later, that he said that decision would come probably in the next couple of weeks. Fed chair announcement over the next couple of weeks.
Yeah, she and Chris Waller were the two that were kind of singled out in that conversation as a result of questions from reporters. Michelle Bowman, of course, vice chair, member of the Board of Governors at the Fed. And so, yeah, we're keeping an eye. We are expecting that decision maybe before the year wraps up. All right, folks, just a quick check on the market trade, if we may, because we are seeing stocks bouncing around here. Just up about 57 points, up almost 0.9% in the S&P 500. NASDAQ 100, some outperformance there, up about 1.6%. We've talked about Micron Technology soaring, bringing stocks up, and really the overall tech sector. And then we had that CPI print, but Ed Harrison got cut short of Bloomberg, but sending us and reminding us that there are a lot of caveats to that report. So we're still waiting for maybe some really clean data that wasn't necessarily impacted by the government shutdown.
Yeah, I would encourage everybody to check out our live blog, our Markets Live blog on the Bloomberg terminal for all the updates, not just today, but every single day with all the market moves. And Ed has a blog post coming soon there that explains the inflation. Just the challenges with the most recent report.
Yeah.
And and sort of the intricacies and the nuances.
Which is why all of our, earnings reports have been so important in terms of getting some color from CEOs. But we're just about done with that. And we're getting ready for a new one come January. Hey, we want to stay, though, on the markets and the outlook. We've got a great guest to do that. And also to get into some new research that they had out late last month, 6 for 26, essential questions for investors. Investors probably have a lot of questions going into the new year. Back with us is Jason Granite. He's Chief Investment Officer of BNY right here in studio. How are you?
I'm great. How are you? Love the new studio.
Thank you.
Very cool.
We're kind of loving it too. How are you loving kind of the market environment right now, and how are you thinking about the new year?
Yeah, so if I go back and think about this year, and we were at the beginning, you think about all the wild things that happened. We went through the new administration, liberation. People forget that the U.S. military was engaged in a war back in the spring. The one big, beautiful bill in negotiations, the long government shutdown, these mega AI deals that happened over the course of the year. And what happened? Kind of what everyone thought would happen. Policy rates are a little bit lower, risk assets are higher, but it was very nonlinear. And so if I think about 26, I think it's probably going to feel somewhat similar. There's going to be weeks, maybe months that don't feel that warm and fuzzy, but pretty strong backdrop. You have the stimulus coming from the one big beautiful bill.
Will that be inflationary though and cause some problems perhaps for the Fed and the next Fed chair, whoever that may be, he or she?
So, I mean, look, we're talking a lot about the inflation data today and questions around it. Obviously, the headline was softer, but markets are not reacting, believing that the underbelly of that data is as clean as it could be from a hangover from the shutdown. I'm not convinced that it's going to be super inflationary. It could be a little, it could put a little pressure against it. And I think, but if you look at where policy rates have been trading for the end of 2026, no matter what we've talked about, all those things that happened, all the questions about all these different Fed people, they've been right between 290 and 310. And so the market kind of has this credibility around where it's heading, no matter all these kind of balls that are thrown at it.
Well, I wanted to just talk about the Fed a little bit because the president did say he's speaking to 3 or 4 different candidates. If you look at Polymarket, for example, the money's still on Kevin Hassett, but Kevin Warsh is a close second favorite. Christopher Waller's on there too. Michelle Bowman, who he mentioned, is still only at 1% at this point. Does it matter to you of those 4 who gets picked?
Yeah, so we've had a lot of names. I think there were 5, then there were 1, now there's 4. Back to my point, markets seem to be anchored at a certain point, no matter where the winds swing on these choices. What I would say is we're still talking about a committee. We're still talking about consensus on a committee. If you look at the dots that come, it looks like a scatter plot. There's a lot of work to do to bring people together. So while I think that it does matter ultimately over a long period of time, obviously who the chair is, if we're talking about the near term, this is about building consensus, getting the views, and quite frankly, this is a tricky environment. You know, Carol, you raised the underbelly of inflation.
Yeah.
We have the labor market that's a little weak. These are tricky times for both the Fed and global central banks, quite frankly.
All right, so you guys have whittled it down to 6 for 26. Essential
Well, we tried.
For
We
investors.
tried.
Was
yeah.
it hard whittling it down to 6?
Yeah, look, I mean, we tried to catch the big themes that are out there, right?
Yeah.
You know, obviously central bank, obviously the dollar, obviously AI. We try to capture all those different things.
Let's go through a couple. Can the global economy maintain its delicate balance through 2026? And you just talked about forces balancing toward growth acceleration, and I guess those that might not be towards that.
Yeah, look, it's fragile. This is what we're talking about. I mean, we think that it can maintain our conviction when we went through and did the work to put that out, as we think that the tailwinds continue to outweigh the headwinds, but there's some fragility.
Yeah.
The labor report showed you that it's kind of not every sector with strength. Obviously, the questions about the inflation data, where things are happening. You know, we think it does have the support behind, but it's more a closer call than not.
Jason, we're going to jump around a little bit in the report.
Please.
The question that you have posed, I think a lot of people have right now when they look at the U.S. equity market. Are U.S. equities overvalued? Yes or no?
Yeah, I mean, obviously, this is everyone's
Are some
question.
overvalued?
And what I would say is there's always some that are overvalued and there's always some that are undervalued.
But are there some more right now than usual that are overvalued?
Yeah, look, there's a lot of price for perfection in the market in certain sectors, right? That being said, we are getting some stimulus that's coming into the market next year. We do have easier, not tighter monetary policy on the horizon. We do have fiscal stimulus, corporate tax benefits that are there. I think a lot of it's in the price, but we think there continue to be a little support on risk assets here into next year for sure.
Jason, what do you do? Who do you talk to? What is the research that you guys look at to figure out whether the AI trade, the AI spend, the AI build out is getting frothy? Is it just a case of looking at valuations, or who do you talk to kind of get an idea?
So you can't just look at valuations. These are new technologies and new horizons where on some level the raw valuation doesn't really matter as much as what are the fundamentals, what's the forward of the different projects, what partnerships. You're seeing all these partnerships come out. So there's a whole series of strategic alliances that are going to be developed over time.
Are you comfortable though with the circular financing and complicated relationships and kind of cozy relationships?
Yeah, look,
it feels
I'm a bond guy, so I'm always a little nervous. That's how it works.
So are those folks when they look at Oracle, right, and what's going on in their balance sheet.
Yeah, I think what you're seeing across the horizon is that we're starting to sift through and think about who some possible winners and losers are, but this is a long game. If I think about back in the spring, people were questioning Google. What's going to happen to search? What's going to happen in that ecosystem? Now people see Google as maybe the biggest winner. So these things can change very, very, very quickly. And I think that we're early enough, and we have a little chart that shows how early we are kind of in the journey here. And that's what I think it's important for folks to remember. We're early days in whatever this AI adventure will be. It's not going to be all highs or all lows, but there's going to be some sorting that goes through.
What's the risk? The main risk for 2026? What gets the train off the rails?
Yeah, look, like I said, there's a lot of fragility. I think obviously for the Fed and for policy here in the U.S. is clearly the labor market. You're seeing a lot of unevenness across the labor market. Growth is strong, but probably slightly below potential. So is there a point where taking folks out of the labor market brings growth down and that starts to fall further below potential? And then, look, we've had rate cuts last fall. We've had rate cuts this fall, and we still have 10 years that won't get off 4%.
Yeah, exactly.
And so, to me, that's something that has to manifest itself through the economy still as well.
Yeah, it's so funny because we had dipped below for a moment, it felt like, and then we had some guests maybe even talking about moving, closer to 3, and yet here we are at 4.1, and we're sitting there for a while.
Yeah, it's pretty stubborn there.
Well, you said, you're a bond guy, so the diverging, one of the things that you guys are talking about, the 6 essential questions for investors, how are diverging rate paths shaping fixed income in the U.S., Europe, and emerging markets? And this is on a day where the BOE and ECB reined in with rates. We get a decision from the Bank of Japan tomorrow. We had the Fed recently. There are diverging policies among some central banks.
And Carol, I would say beyond diverging policies, the agreement is not there. The Bank of England had a 5-4 vote, very tight. As I said, look at the dots, it's all over. The ECB, listen to what they're saying. It's not everyone is student body right, student body left at all these different central banks. So not only do you have different speeds across these, but you also have inside, there's still some sorting that happens. So when you ask about the risks and the things, you can see the confusion in the market, and even from the experts who make these decisions.
So it could go a lot of different ways in 2026.
Yeah, let's have fun. That's what makes this That's what makes it fun to do.
It does sound like there's a consensus that we got to keep our watch on Washington, whether it's policy out of the White House in so many different ways, or policy over, monetary policy from the Fed. There's a lot that's going to be coming our way that way.
Yeah, people are policy, and so you got to listen to what the people are saying. They push it through, and that's what happened this year, right? They drove all these undulations, but if you talked about where we were at the beginning, I think we are where we thought we'd be at the end, but it wasn't that smooth.
No, and there were points where you never thought it was gonna end out this way.
That's right.
Jason, happy holidays.
Happy holidays. Great to see you. Enjoy your break.
We'll see you in 2026.
Okay, see you in 2026. Best everybody.
Yeah, same to you. Jason Granite, Chief Investment Officer at BNY, right here in studio.
Hey, coming up next, we're going to talk about financials as a whole. They're up 13% so far this year. If you get more specific, the KBW Bank Index, it's up close to 30% year to date. Frank Sorrentino from Connect One Bank Corp is going to join us next. In the meantime, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. And here's what's going on. We've got the Dow, the S&P, NASDAQ all advancing. 90 minutes to go ahead of the closing bell. And, of course, coming up after the close of trading, we'll be hearing from FedEx and Nike. Bloomberg Television and Radio. We got you covered as those stocks break. S&P right now up 59, gain of just about 0.9%. Stocks are advancing as a cooler than expected inflation report lifts hopes that the Fed will cut rates further. The Dow up 130, up 0.3%. NASDAQ up 1.5%. The NASDAQ 100 index up 1.6%. Small cap shares taking part in the party. They're up by 0.9%, but the outperformer right now, our Mag 7 index, the Bloomberg Mag 7 index up 2.1%. 10-year 4.11%, with the 2-year currently yielding 3.46%. Gold down $4 the ounce, down by about 0.1%, 43.34. West Texas Intermediate crude up 0.4, 56.15 a barrel, and Bitcoin now down 0.4, 85,590 on Bitcoin. You heard it on Bloomberg Television and Radio. President Trump signing an executive order directing his administration to move cannabis into a less restrictive federal category, setting in motion a regulatory shift that could alter the legal and commercial landscape for the drug nationwide. The order instructs the Justice Department to begin the steps needed to shift cannabis to Schedule 3, a tier reserved for drugs with accepted medical uses and lower abuse potential. Now, we do have the marijuana ETF. That is the Amplify Alternative Harvest ETF, ticker MJ. It is down by 5.9%, but among individual marijuana stocks, weed stocks, Canopy Growth up now by 2.8%. Tilray is advancing by 2.1%. And sources tell Bloomberg UBS is set to begin its latest wave of job cuts in mid-January. UBS shares up now by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, Bloomberg has reported out, as have many other news organizations, something you and I have talked about a lot, Tim, about how some, including...
Or you could just open up the app formerly known as Twitter, and you can just see this.
This is true. It's about how some that are wealthy and just some in general are concerned about some of the priorities of incoming New York City Mayor Zohran Mamdani. On that, we caught up with Kathy Wild, outgoing president and CEO of the Partnership for New York City. They represent a lot of the city's corporate leadership. So we're talking about real estate developers, PE firms, banks, law firms. By the way, Bloomberg LP is a member of the Partnership for New York City. Kathy Wild, also part of New York City Mayor-elect Zohran Mamdani's transition team. And she addressed some of his policies that he campaigned on, including higher taxes. Check it out.
You may raise the rates of taxes, but that may not result in more revenues if you scare people away, or if you scare companies away, or as we've seen lately, we've seen a real threat to jobs in New York. We, for the first time, in my experience over 50 years, are seeing a decline in the number of jobs in our financial services industry. Scary thing. That's 40% of our state income tax revenues. We don't, I mean, these are, you know, we've got to pay attention, and I think he gets that. But we've got to be at the table discussing these issues and helping figure out how do employers help solve the child care problem.
That's Kathy Wild, outgoing president and CEO of the Partnership for New York City, also part of New York City Mayor-elect Zohran Mamdani's transition team. Carol, curious what our next guest has to say about all this.
Yeah, great to have back in studio Frank Sorrentino, chairman and CEO at the publicly held New Jersey-based community bank, Connect One Bancorp. They are the parent company of Connect One Bank. Great to have you here. How are you?
Great to be here. Great to be in the new studio. It's fantastic.
Thank you. Yeah, we've been working on, real estate around here. Tell us about the environment. You are kind of consistently optimistic and have been a lot over the past year. Is that still the case?
I'm very, very optimistic about where we are.
Yeah.
And especially the journey we've taken this year to get here. It's been it's quite the roller coaster, up and down. And we certainly didn't start the year in the same place, but I really felt the foundation was there for a very solid end to 2025. But that foundation now has really created, I believe, an unbelievable ramp into 26. And I think we're going to have a lot less of the noise that we heard during 25 and more focus on how this economy is building strength as we move through 26.
I want to go to what Kathy Wild was saying about concern over New York City. She has a close relationship with many business leaders. She's also part of the mayor's transition team. Last time you were on with us, it was just after the election. We spent a lot of time talking about politics, specifically housing because of your construction background.
It was a great conversation.
But the New York City side of things, I mean, you've got you've got locations in New Jersey and New York and Florida as well, but you've got locations here in New York City, so you understand the economy. What are you hearing from your New York City-based clients?
Look, I think the economy in general is very strong, but we are, as you just heard, we are on the precipice of, if there are changes that drive the sentiment to think that New York is not a friendly place to do business, we could see change. And so certainly that's a concern. We certainly know there's a concern about affordability in New York City. But overall, I think it's all going to work out. It always has before.
Does it make you optimistic that somebody like Kathy Wild, who has the ear of so many in the business community, is involved with the incoming mayor?
Yeah, absolutely. And there's others who are joining the team who I think we would all say we're happy they're there. Look, at the end of the day, I don't think anybody can argue with some of why this mayor was elected, right? The issue of affordability, trying to make a fairer system for everyone. I think we could all get around that. How we go about doing that is a different story.
How do we? I know we talked about this with you, and
But you're a builder, so that's why we talk about it with you, because you understand these things.
I'm trying to unpack this. I mean, a builder's not going to build a building if it's not going to be profitable, right?
Look, there's been numerous studies across this country and across various time periods. It doesn't matter when, how, or where you look at it. There's a really interesting story right now in the Twin Cities, where one city is trying to maintain affordability by government control. And then the other city is doing it by free market. Let's let the builders build.
Yeah.
Because, to me, some of the laws of economics, they're like the laws of physics. You may like to agree or disagree, but they are what they are. And if we increase supply, we're going to have lower prices. And that's something I think politicians don't typically understand. I mean, if you look right now, even in like the rent regulated portfolio, rent stabilized portfolio in New York City, there's 50,000 units that are unoccupied because they're uneconomical to put back on the market based on what they're rent stabilized at and the investment needed to get them back in order. You would think that would be a priority. We want to get those units back into the marketplace because that would help those who need the help.
So if you were advising a politician, the incoming mayor, perhaps, or
I'd love
city
the opportunity
council,
to do that.
What would you be?
You haven't talked with him?
Not yet.
Okay.
We'll have our opportunity.
So what would be the suggestion to actually fill those vacant apartments?
Oh, there's a number of things we could do, right? We could mean test for the people that live in rent stabilized apartments. There are incentives the city could provide to entice the builders to be able to invest make the investments they need in each one of those apartments to make them viable. Since they're vacant, allow for vacancy decontrol up to some level. I mean, there's so many common sense things that we could do, probably over a dinner napkin, that would get those apartments back online in 90 to 120 days.
So why is this so hard?
Is
it politics?
It's how politics works. I don't know. And it's a mindset, right? There's a mindset that government can do a better job than the market can do, when in fact, we've learned over and over and over again here in the United States, the market generally is able to solve these problems and in a very efficient way, mind you.
All right, I want to broaden out. We always do like to talk to you because you have such great exposure to small business and construction generally. How are both of those areas doing? And I'm also curious about small business, as we had a story this week about PayPal looking to apply to become a bank and really tap into the small business area. It doesn't happen overnight, so I'm just curious. You laugh. Do you think that's...
I think it's fine. What I find fascinating is all these companies that want to be banks, because in the current regulatory environment, it's fashionable, profitable, and whatever to be a bank.
Banks have done really well this year.
There are other times in history when being a bank is a little bit more difficult than that. And the banking industry is not just one particular point in time. It's built to last for very, very long periods of time. And so we'll see how they like the regulatory environment at other points.
So small business.
Small business, I think, is doing very, very well today. Again, the noise is out of the marketplace. People are feeling good. I think one of the biggest things we're hearing, notwithstanding some of the employment or unemployment information, is that small business is having a hard time hiring qualified people to fill positions. I think they're getting their arms around what's happening with tariffs. I think they're getting their arms around whether or not there's real structural inflation in the economy, and it appears there really isn't. There's been some price setting that's been going on. vast majority of the small to medium-sized businesses that we represent at Connect One are doing quite well, and they're seeing. What's more important, they're seeing pipelines and backlogs that are taking them into 26, which is one of the reasons I feel so optimistic about where we're headed in 26.
So let's get to, we got the environment side of this. Let's get to the actual running of the banking business. We saw an uptick this year in M&A. You mentioned a favorable regulatory environment. We saw you guys actually close on First of Long Island. That deal was announced last year.
Yep.
Any more M&A for you in the new year?
Listen, this is, I think, our 4th or 5th transaction we've done over the 20 years that we've been in business. And we always like to say we're very opportunistic based on where we are, where the market is, what opportunities are in the marketplace. We've gone through stretches of 3, 4, 5 years at a time without any M&A. That's okay. I do think there's going to be a robust organic growth engine for us as we continue to move forward. But there could be opportunities for M&A. And right now, one of the things that I think would promote that is a regulatory environment that's a little bit more favorable towards it happening. We did not have that when we announced the last transaction. There were only a few that were done that year.
That's what I wanted to follow up on, is that you are in an environment that's much more favorable. So as someone who runs a bank and knows that you haven't done that many over the entire lifespan, but you're in an environment where it is much more favorable.
Well, what's important,
does it make you say, maybe I do something
it's not
more?
so much that it makes us say it, because it has to make financial sense. It has to be something that for us, we can say this is a good opportunity for us to take advantage of.
Yeah.
The better regulatory environment, though, provides more opportunities, because then there'll be other institutions that think they're better off if they partner with somebody. And, in the last 3, 4, 5 years, that hasn't been the case, right? Many institutions are saying, hey, we don't want to take a risk here of trying to sell ourselves or partner with someone, and maybe that doesn't happen, or it takes too long to happen, and they hurt the franchise.
So that's probably a no for 2026?
Well,
it's hard to say.
Okay.
Well, just geographically, just in 20 seconds, geographically, the most appealing area where you want to be, where you're not right now.
Look, we're a New York Metro, based institution, so that's a big market. There's an awful lot.
So you want to grow here?
Yeah, we want to. And as I always joke here, Florida is part of that market. So I like the growth prospects here in the New York Metro market. I like what's going on in Florida.
Okay.
We'd be remiss in terms of Fed policy and what we get in terms of a new Fed chair. And we did get that additional rate cut last week, Frank. The bank
We said we were going to have a rate cut last time we were here.
Just real quickly, 30 seconds. How's the bank managing the rate backdrop and the steeper yield curve that we're seeing? Just quickly.
Listen, I think it's great for banks, and I think you see it, in the market reaction to banks over the last 30, 45 days, right? Bank valuations are up pretty strongly. Banks are now, favored in portfolios today. I think part of it is the steepness of the yield curve, and I think part of it is the optimism around the economy going into 26.
So still optimistic.
Yeah, very.
Kind of love that, right? We could use some optimism. Frank Sorrentino, thank you. Have a great holiday.
Oh, you
Happy
too.
New Year.
Yeah, really appreciate it.
Fabulous.
Founder, Chairman, and Chief Executive Officer of Connect One Bank, right here in our studio.
Hey, let's get an update on the business day, the trade, as we do get close to, just an hour and 15 minutes away from the close of equity trading. Here he is, Charlie.
All right, I thank you very much, Tim. Looking at green on the screen right now with the Dow, the S&P, NASDAQ, all advancing. CPI Thursday, stocks are advancing as a cooler than expected inflation report lifts hopes that the Fed will cut rates further. Right now, the S&P is up 51, 67.72 where we stand. That is a gain of about 0.7%. Dow Industrial is up 75, now up by about 0.2%. The NASDAQ Composite Index up 294 points. On NASDAQ, that is a gain of 1.3%. The Bloomberg Mag 7 Index climbing higher by 1.9% with a 10-year, currently yielding 4.11%. The 2-year, 3.46%. Gold is down $8 the ounce, down about 0.2%, 43.29. West Texas Intermediate Crude 56.01 a barrel, up 0.1%. And Bitcoin now down by 1.5%, 84,601 on Bitcoin. The activist investor Elliott Investment Management has built a stake of more than $1 billion in Lululemon. Lululemon Athletica shares up now by 4.1%. Instacart shares are lower after Reuters reported the Federal Trade Commission has sent the grocery delivery company a civil investigative demand. The FTC declined to comment but told Reuters it is, quote, disturbed by what it has read in the press about Instacart's alleged pricing practices. Instacart down now by 1.4%. Recapping, S&P higher up by 0.7%. Two key earnings reports coming up after the close of trading. We'll be hearing from both FedEx and Nike. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, a story that definitely caught our attention. Trump Media and Technology Group, it's the company behind Truth Social, getting into, drum roll please, nuclear fusion.
Yeah, this is interesting because they do financial services, they do social media, they have the crypto part of it too.
Right.
The company's saying today will merge with TAE Technologies, a closely held fusion developer. It was founded back in 1998. The transaction valued at more than $6 billion.
Yeah, we're going to get into this deal next hour, especially the fusion play, the reality of it. But we thought maybe our next guest might have some thoughts as well because they play big time, certainly in the energy space. We head to Charlotte, North Carolina. Ken West, he's president and CEO of Honeywell Energy and Sustainability Solutions. Starting in the first quarter of 2026, this business will be renamed Process Automation and Technology. Ken, welcome to Bloomberg Business Week Daily. So good to have you here. How are you?
Well, first, thank you for having me. I'm doing great, and it's great to be able to talk to you a little bit about how Honeywell's focusing on continuously providing solutions to our customers around energy expansion and security.
Well, I want to hear about this, and I've got to be fully transparent. My dad worked for the company many years ago, but it was originally Bendix, which was acquired by Allied Signal, which was acquired by Honeywell.
And there you have the history of U.S. industrials in a nutshell.
It's just really wild. I remember it so well, all the acquisitions. Hey, your business, though, a lot of energy exposure. Tell us about it and lay it out for us, for those who might not be so familiar with the current Honeywell, which right now is divided into 4 units, soon to be 3, with a spinoff later on.
Well, that's exactly right. So at Honeywell, we're continuing to focus on the evolution of energy and how we can provide end-to-end solutions for our customers. In energy and sustainability solutions, we bring more than 100 years of technology across decades of development in determining how we can help solve those world's problems, from originally processing some of the first gasoline to developing unleaded gasoline, and now today developing some of the new renewable fuels that are providing sustainable and affordable options for energy expansion for tomorrow.
You know, we look at, and we talk about this each and every day, but the challenges that we're seeing, at least with energy production and demand here in the United States, and the grid certainly not being able to keep up. Where is the bottleneck from where you sit?
You know, take a look, and first, you're absolutely right. The need on energy is greater today than it has ever been. And as we look out into the long term, we see the need just continuing to grow. You know, many forecasts would put it at anywhere from 20 to 40% growth over the next 20 years or so out to 2050. When we take a look at that bottleneck, it really is in being able to develop the infrastructure behind the scenes that can produce that power. And so one of the first areas that we address that challenge is really inefficiencies. And we really come together at the intersection of the technology needed to produce power and then digital and optimization capabilities with Honeywell Forge that we use to provide sustainable and reliable solutions that allow those refineries to produce even more power than they did before. So if you take, case in point, a refinery that we are able to help become 5% more efficient, do that across 20 refineries, we've created a refinery without having to put any brick and mortar into the ground.
Yeah, I feel like that's, you know, Ken, the next focal point, right? We went, especially when it comes to the AI build out, we went to, you know, chips, the chip play and the data center play, and then it was all of a sudden like the power demands and building that out. But now I think whether it's chips, whether it's power centers, we're thinking about how to make all of this much more productive, because that will help everybody meet the energy demand.
It truly is. It both meets the near-term and long-term energy demand and also does it in a way that's economically viable, which is just as important as coming up with a solution. So one of the ways that we're able to do that is by connecting to our plants. And when we create a connected plant, we're bringing in billions of data points every day. And we're connected today to more than 1,000 process units around the world. And we take those billions of data points and we can provide predictive potential solutions for those customers to improve reliability for tomorrow and to augment their workforce. As I travel around the world, one of the things that I clearly hear from all of our customers is a challenge in getting experienced workforce there to operate these facilities. We're able to take our connected plant solutions that run on Honeywell Forge and augment that existing workforce. So we can take a control room operator that may have a few years of experience and provide them the capabilities of a control room operator that may have had 40 years of experience. That in itself allows our customers to become more efficient and continues to improve both reliability and safety of the expansion of energy.
What's the payout that your sales folks have calculated here? Investing in this solution up front and then the efficiencies that it creates, how long does it take to pay for itself?
Yeah, many of these solutions are very fast paybacks. In fact, we have had opportunities where we can save millions of dollars in operating cost and energy costs that are going into a refinery for, a very small fee that goes into our connected and engineering services. I've seen some of these be anywhere from less than a year to just a couple years of payback in some of the projects that we've provided for our customers. I'll give you a perfect example. One of the things that we've been able to do, we provide catalysts to refineries and petrochemical plants. These are key in making the chemical reaction that actually produces the end-use product. When you take a look at these catalysts, they degrade over time and need to be replaced. In the past, you used to have to take a sample of the catalyst from the refinery, send it to our labs in Chicago. We would do microscopy on those samples to determine the color, the size, how much degradation has happened. Today, we can do this with a digital image right on the plant. We can get an image every day and let that refinery know exactly the right day to change that catalyst over so that they can maintain reliable operations.
All right, that totally makes sense. The more data you have coming at you in real time, we talk about that with economic data. Hey, one of the things I wanted to ask you, Ken, Tim and I spoke with Neil Chatterjee yesterday, Chief of Governmental Affairs at Palmetto, former commissioner, and chairman of the FERC, Federal Energy Regulatory Commission. He was during President Trump's term, and then it carried over a little bit into President Biden's term. We talked, though, about the energy mix that's going to be needed for AI data centers, for increased manufacturing coming back to the U.S., but it's also, this is a global story. What's the energy mix that you guys are planning for? And I'm curious, when it comes to carbon-based fuels, when it comes to wind, when it comes to solar, maybe coal, fusion, fission, nuclear, help me understand what you see as the dominant energy mix going forward. Because you guys have to provide the tools to meet all of those different industries potentially.
No, you're absolutely right. One thing is clear in that the world needs more energy in aggregate. And what we believe is that it's going to take a number of different potential options to be able to meet that overall demand. So we're really focused in three areas. First, we're focused on the optimization of the existing infrastructure that's there so that we can make the existing infrastructure more efficient. Second is that we see a number of transition fuels that are helping bridge that gap that we need in both the near term and long term. And LNG becomes one of those, liquefied natural gas. And in fact, we've put a significant investment with two recent acquisitions, one for the liquefaction process unit that we purchased from Air Products, and the other in a company called Sundyne that does pumps and compressors that are targeted at expansions in the LNG space that are helping to drive expansions in liquefied natural gas. And then the third is to broaden the entire realm of feedstocks that are available. And this not only allows responsible and sustainable expansion, but it also allows countries that may not have access to fossil fuels to also have access to the production of power and energy. This can include anything from biomass and other renewable resources. So we see it really as being across all three, and our technologies and solutions are focused at driving the entire aggregate up.
Hey, Ken, just very briefly, we only have 20 seconds left with you, but geographically, the areas of opportunity for 2026 and 2027, what are they?
Yeah, well, we definitely see significant new opportunities right here in the United States, and particularly in areas like the Gulf, where we're seeing expansions of LNG projects.
Okay.
We see need for energy security in a number of new geographies around the world where countries want to have their own access to energy. This is across areas like sub-Saharan Africa and the Middle East. And we continue to see growth in Asia. So I would say across our business, we really are well represented as about a third in the Americas, a third in Europe, Middle East and Africa, and a third in Asia.
Fascinating. Really cool stuff. I hope you'll come back because we both would love to. This is something we talk about a lot in terms of kind of our energy transition, our energy demands and needs. Ken, thank you so much. Have a great holiday season. Ken West, President and CEO of Honeywell Energy and Sustainability Solutions. As we said, this unit's going to be renamed as Process Automation and Technology. So we'll be talking about that in the new year.
Hey, we're talking about the trade right now. The S&P 500 still up 0.7%, but off its best levels of the day. The NASDAQ up more than 1.2%. The Dow up just about 0.1%.
All right, I'm Carol Master along with Tim Stanovic. Let's get to some stocks on the move on this Thursday. Bloomberg News cross-asset reporter Isabel Lee is in the house. Do we start with something that will make Matt Miller happy?
Okay.
He's
He's
listening.
Many things make him happy. Is it airline?
No, I was going to say
Lululemon.
No, but we'll get to it later.
Oh,
pot stock. Sorry, Matt.
That's not even on the list.
It's a surprise.
It's a surprise.
Oh, it's a surprise. Okay, cool. Oh.
Because we know President Trump signing an executive order changing the drug classification for cannabis.
To move cannabis into a less restrictive federal category. So
Sorry,
this
Matt.
sets in motion a regulatory shift that could alter the legal and the commercial landscape for drugs. Basically, he's instructing the Justice Department to begin steps needed to shift cannabis to a tier reserved for drugs with accepted medical uses. So I'm looking at Tilray and Canopy, Tilray TLRY and Canopy CGC, but both shares are edging lower by 1.3% and 3.5% respectively, which
It was priced in.
maybe that's a good explanation.
Weren't they
Oh,
higher
I mean,
earlier,
look what happened earlier this week. Look what happened last
They were
week.
higher
How many
earlier.
days have these been gainers where I'm like, Carol,
Yes.
you got to do pot stocks?
Yeah, I
'cause
mean,
this
it
is
was
gonna
up-
happen.
They slipped into negative
Tilray
territory.
was up 22% earlier today.
Yes, and now maybe it's priced in. It's down 3.18%.
Gonna have to cross that up off my gainers list. To be clear and fully transparent, Matt just likes to talk about it, and
Okay.
so I just don't want to,
Good, that's a good save. I like talking about it. Pot stocks. It's just
Who
fun to talk
doesn't like
about.
talking about them?
I like talking about chips.
Do you?
I like talking about chips.
Sounds like we go to Micron.
Micron. I love this rumble jumble. So Micron ticker is MU. The stock is up by just 11%, and that's after the chip maker gave an outlook that was 80% higher than estimates. I was here yesterday and we were talking about it, and the optimism is continuing. This is the highest in at least 8 months, and the stock is up by nearly 170% this year. So the CEO of Micron said it's positioned as an essential AI enabler. And again, we were talking about this, Carol. It's because of the intense demand and supply can't meet it. And it's good for Micron because then it puts them in a good spot.
Totally.
Okay, before we let you go, just give us 20 seconds on Lulu. Shares are surging today.
Shares are surging. I love Lululemon, the product, but the stock is up by 4%. We have news that activist investor Elliott Management has built a stake of $1 billion in the company. And this comes after the company has really been struggling to turn around their business after the exit of their CEO. Elliott for months has been working with Jane Nielsen. So she's the former CFO and COO at the Ralph Lauren. In fact, sources told Wall Street Journal that they want Jane Nielsen to potentially be the CEO.
Yeah, that I love. I think that's
Well,
an
there is a
interesting
job
story.
open there.
Yeah, exactly.
Yeah,
We're
we
going to
can
talk about
apply.
that too a little bit later on. Good stuff. Really fascinating. Isabel Lee, thank you so much. As always. Don't forget to use that Lululemon credit, right?
Yeah,
Amex.
$75 this quarter.
Hey, Stock Movers
I
Podcast.
used it already.
Did you? I have not. Stock Movers Podcast, 5-minute episodes, biggest winners and losers. Find it on Apple, Spotify, or anywhere you get your podcasts. On TV, the close coming your way. Tim and I continuing right here on radio.
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts. I'm Cammie McCormick. President Trump has signed an executive order that reclassifies marijuana as a less dangerous drug. That opens new avenues for medical research.
It doesn't legalize marijuana in any way, shape, or form, and in no way sanctions its use as a recreational drug. It has nothing to do with it.
But it does shift the federal drug policy a bit closer to what many states have done. This woman in Detroit.
Can you tell me how many people you find in the street overdosing on marijuana? Research or not, it's not dangerous.
Marijuana is currently classified.
All right, guys, I'm back. That shit was painful.
House Democrats released more Jeffrey Epstein photos today. CBS's Scott McFarland has had a look.
Nearly 70 new photos from the Epstein estate released by Democrats on the House.
All right, so we're working double bottom off the low.
Requested all of the Epstein estate files. This is separate from
Is this our bounce into 3:30? We're running on 3 o'clock.
Estate of Jeffrey Epstein after he died by suicide. The photos we see so far show Epstein traveling with in close proximity.
I don't know. We're about to find out.
Powerful people.
Here we go. Here we go again.
Potentially the ears of the powerful.
Lawmakers are leaving Washington for the holiday break without extending Affordable Care Act subsidies. Caitlin Huey-Burns says that.
We're not going to see any action on health care until next year. That is the bottom line here. Mike Johnson told us last night that because of the rules in the House that say you have to have 7 days to consider a discharge petition, that they won't bring it up until January. That is his justification for it.
A judge says he will rule in May on what evidence prosecutors will be able to use in Luigi Mangioni's New York trial for the killing of United Healthcare's CEO. Defense attorneys are seeking to exclude items like a gun and a notebook found in his backpack with an entry about whacking a health insurance executive. CBS's Lilia Luciano.
The other issue that came up in court today was when Mangioni's mother was called by a detective. Back then, the NYPD said that Mangioni's mother said something along the lines of, "This could be something I could see you doing." Well, apparently that statement was wrong, that she never said that. And so Mangioni's defense talked about that in court. They said that neither the NYPD nor prosecutors ever corrected that statement. And that, of course, would have been very relevant, especially with the publicity this case has had.
On Wall Street at this hour, stocks are higher. The Dow is up by 75 points. This is CBS News. There's a funeral for a little copper hero, and you're invited.
As we sift through our last pennies, mourners will pay tribute to the discontinued coins at the Lincoln Memorial this Saturday. The event lists former First Lady Mary Todd Lincoln as one of the hosts, since her husband's face does front the 1-cent piece. The partiful invite calls the Treasury Department's decision to stop minting pennies last month not a retirement, but a murder. An organizer, finance operations platform RAMP, is encouraging funeral attendees to wear black Victorian clothing and veils and BYOP. Bring your own penny. The very first was minted in 1787. Deborah Rodriguez, CBS News.
A new survey finds Americans' assessments of their own mental health is eroding. For the first time, the percentage of those who describe their mental health as excellent has dropped below 30%. 6 years ago, that was 43%. I'm Cammie McCormick, CBS News.
This holiday season.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about 55 minutes away from the closing bell on this Thursday. Carol Master, Tim Stanovic, live across Bloomberg platforms. A market, in terms of the equity markets, bouncing around a little bit. We're off our best and worst levels of the session. What does it mean? Well, we'll tell you in just a moment when we head on over to Charlie Pellet. But
You're going to have to wait.
talk about a little bit of a tease. We are seeing tech, though, some outperformance, especially the semiconductor space.
Yeah, I'm just looking at the NASDAQ 100 up 1.5%. Micron, Lam, AppLove, and Constellation. Interestingly enough, Starbucks. This was more of a broad-based rally before.
Yeah.
But still widespread optimism, at least when it comes to some of those chip names.
All right, so we're going to get into that. Hey, over the next 2 hours, we're talking nuclear fusion, the reality of it. And folks, it's going to take a while.
It is. Will Wade standing by. We're going to get to him in just a second. Also, we got a big focus on the consumer today.
I love this.
We've got the CEO of the National Restaurant Association. She's going to join us on the state of restaurants and their customers in this economy. There's a lot to talk about with her.
Mm-hmm.
There's the immigration question. There's the question about what consumers are spending money on. We got some news from Darden a little earlier today. Yeah, that's just scratching the surface.
All right, I'm looking forward to that. So that's a read on the consumer, a read on small business. We're also going to get another read on big business and the consumer. Nike comes out after the closing bell, so we'll have instant reaction and analysis on that one.
Also, how ski season is kicking off, at least here on the East Coast. The founder and CEO of Snow Partners, it's the parent company of 2 ski areas, and some resort technology. So they're in a good position, at least with East Coast snow right now.
Yeah.
West is not looking good.
All right, so we're going to dig into that in just a moment, a little bit later on, actually, I should say, on our broadcast. Hey, let's get an update on the trading session. For that, let's turn things over to Charlie Bell.
Hi, thank you very much, Carol. And Tim, you mentioned Nike coming up after the close of trading. Shares higher right now, little change. Nike up by under 0.1%. The other major report that we'll be covering, FedEx. FedEx shares ahead of earnings right now. They are up by just about 1.5%. Dow, S&P, NASDAQ 100 index, yes. Russell 2000. Mag 7 index as well. They are all pushing higher right now. 55-point gain, 67.76 where we stand on the S&P. That is an advance right now of just about 0.8%. The Dow up 105, up 0.2%. NASDAQ up 317 now, up by 1.4%. The Mag 7 index, the Bloomberg Mag 7 index up by 2.1%. Your 10-year 4.11% with the 2-year 3.45%. Gold down 0.1%, 43.34 the ounce. West Texas Intermediate crude 56.02 a barrel. WTI up 0.1%. Bitcoin right now down 1.2%, 84,931 on Bitcoin. Underlying U.S. inflation rose in November at the slowest annual pace since early 2020.
Okay.
An unexpected improvement.
We're gonna get a move here.
Price pressures.
Man, that was some painful shit listening to that.
Leaves the Federal Reserve from Aaron McLaughlin, senior economist at the conference board.
One day, there'll be entire university courses just based on understanding corporate culture, I think.
A possible cut in January. You know, once the employment numbers come in early January, and we have some.
They got to get you while you're in school as an intern to brainwash you into that. If you get out into the real world for too long,
over the last couple months.
Aaron McLaughlin of
makes it hard to
board,
comply.
keep an eye on Micron Technologies, surging now by 11.8%. Certainly, the warm reaction in contrast to reports that we got last week from Broadcom and.
All right, how many people are in a long?
Up 0.7%.
Who's getting chopped up, or who's hanging in there trying to ride the long out into the end of the day?
S&P right now up by about 0.8%. I'm Charlie Pelleton.
The whales probably know everybody wants to go long. Hey, Henrik, how you doing, bud? Good to see you, man. Good to see you.
Turning to gold for stability. So to get a free gold and silver information guide, learn how to add metals to your IRA or 401k.
Uranium and Henrik aren't along. I may join you. I may join you. I gotta have my signal a little closer, though. This is way too soon.
Media and Technology Group. It's the parent company of True Social. They do some crypto, financial services. They're getting into nuclear fusion. It's surging today at more than 41%. The company said today will merge with TAE Technologies. It's a closely held fusion developer founded in 1998. This is a transaction valued at more than $6 billion.
It's kind of wild. Shareholders.
This was not on my business, my bingo card this year.
This was not on mine either. Shareholders of each company are going to own about 50% of the combined business after the all-stock deal is completed. That, according to Trump Media, they put that out in a statement. We have a ton of questions.
Hey, good job, Henrik. 600's a good day, man. Good job.
Bloomberg News energy reporter. He joins us here in the Bloomberg Interactive Brokers studio. I got full disclosure. I had never heard of this company before 6:30 a.m. this morning. Had you ever heard of it?
No.
There were.
Yeah, I've heard of them.
Okay, so people in the
energy
energy world know this company.
Yeah. TA is one of the companies in Fusion that we've been watching that's making solid progress.
Solid progress. That's an important way to put it because this is
Fusion,
unproven at this point.
Yeah, because fusion is hard. Fusion's really hard. I mean, I write about nuclear fission, which moves really slow. Fusion's slower than that. It's literally creating a little tiny star that you can find with super powerful magnets and somehow get energy out of that. So
Still won 200 from passing the eval. All right. Well, let's get you your runner and get you through, man. You know what I'm going to do? I'm going to sit way down here at the bottom. If we get a liquidation candle, I'm just going to sit here for now. I'm just going to sit there. If we get a liquidation candle, I'm okay with this entry. Even though my signal isn't here, I'm just sitting down here.
We're waiting for it.
And then I'll wait to see if we get my signal, and I'll make a move off my signal.
All of a sudden, they figure it out, and it could happen tomorrow.
No.
It's more likely it's not going to happen for fill in the blank. How many years?
And I'll do the same on the ES.
Less than 10 for a couple things.
So it's a long ways out.
So we got to remember, the whales know. The whales know everybody's looking to go up at the end of the day. So we got to keep that in the back of our head too.
Working on it in Virginia, but they're doing all their research outside Boston.
Quarter after 3, 3:13. Got about 10, 15 minutes.
Milestone in 2027, 2028-ish. So, like I said,
I agree. I tend to agree.
Several companies that
I just can't get in yet.
So I put TAE on the
Unless it tags this zone down here.
That they're going to start construction
67.27. Yeah.
I'm like,
I agree.
We're going to start building what next year? I'd love to see it happen. It'd be great, but I have questions.
Apart from the association.
Yeah, I knew what you meant. 68.27. Yeah, I knew what you meant.
Close ties to the president that this gives the company.
Yeah, I'm just going to sit down here. If we get a quick liquidation candle and gets me in, I'm okay with being in there in this circumstance. And I'm okay with being in here. So I'm just waiting for my signal to come around and see if I get a chance anywhere else.
One of their big challenges, and I'm like, I thought the physics and the engineering was your big challenges, but they said they get up to $300 million cash out of this right away, or when the deal closes, but close to nowish, to start working on their commercial system. So that's great, and they get access to the Trump media backing, so that's good for them. So there's a lot of money happening here.
I mean, if it was so promising, why aren't other investors rushing to give them money, or others? Is it just because of how long this is taking?
It could be. I don't know the answer to that question, but it's the right question to ask. And they've already raised, I think, $1.3 billion
from Lilu,
which is, a lot of money. But fusion takes time and takes a lot of money.
What account are you on? What account? What size?
Billions of dollars as well.
So let's say one of these companies, maybe TAE, maybe another company, maybe Commonwealth.
I think it's 2,500 or 3,000. So if you're up $1,000 or something like that, you need to, you don't want to let it run back on you.
Okay, the ultimate promise is really,
You know what I'm saying?
something special. This fusion energy
You don't want to let it run back on you.
does not have the dangerous radioactive waste that you get from fission energy. So that's great. And some of the raw materials that they use for fuel, a lot of it just comes from hydrogen. So it's not as hard to get. So fusion companies will say, we have the promise of abundant, clean energy. I'm like, it sounds
Because it's a trailing draw.
fancy, but it's actually kind of what they're working towards. So it would be great.
You want to follow it up with your stop.
Yeah.
Where does the nuclear part come in?
The process?
The process? All right, so fission, which is what we have now, is when you have a big atom and you break it up and you get energy from splitting it. Fusion is the exact opposite. You take small atoms and you smush them together and you get energy when they fuse into something else.
And there's no byproduct.
I wouldn't say there's no byproduct.
So as the eval, same as the eval.
Radioactive waste, but it's not the dangerous.
So yeah, the PA.
From fuel rods.
Yeah, it'll be the same until you get over it. So if it's 3,000, your target, I believe, your profit target is 3,000. That's your buffer. Once you close the day over 3,000, you no longer have a trailing draw. You just have your whole balance. Okay. So once you get to the PA, once you hit your buffer target, 2,500 or 3,000, it'll tell you. Once you close a day over that amount, then the trailing draw goes away and you just have your whole balance. Does that make sense?
I'm not in a position to say, but I will
Some
say.
might say it would be.
Yeah, but it's definitely true that the Trump administration is really supportive of nuclear energy. They've done a lot.
And then you're just trading and just trying to get to the payout.
Policy changes to make nuclear happen.
Is that a good thing in your view for someone who's been following this space? Has there been too much regulatory oversight? To be fair.
To be fair, I hear consistently that one of the challenges for getting a nuclear power plant built is the paperwork. It's getting all the approvals. Now, to be even more fair, I want to.
You got to read it's either a 15-day or a 30-day. You got to read the rules.
Especially in this country, nuclear is very, very expensive, and one of the
You got to go so many days. You got to go trading days where you took a real trade, and you got to stay within the 30% rule. And it's depending on how the account was set up, it's either 15 trading days or 30 trading days, depending on depending on if you took the
How many are China putting online next year?
Way more than that.
the edge enhancers.
We will continue
Yeah.
this conversation into the new year. We'll wait. Thank you so much. Happy holidays. Merry Christmas, all that good stuff. Bloomberg News energy reporter. All right, coming up next, the state of restaurants in the U.S. with the president and CEO of the Restaurant Industry Trade Group. That's next.
318. But I haven't emailed him to say I pass. Yes. So when you get over the target, I almost certain 50K is 3,000. When you're over 3,000, stop trading and you'll get an email within 48 hours. Don't trade it again, okay? I'm almost certain that 50K is 3,000 and you got a $2,500 draw. But am I then forced to trade every week when starting on PA? No, you gotta at least trade a couple times every 30 days or something like that. You don't have to trade every day. You know, if you're on vacation a week or two, that's fine. You know what I'm saying? Okay. All right, we got 9 minutes till 3:30. If I don't get picked up here in the next 10 minutes, I'm gonna close for the day. Just take my L. I'm not gonna get too close to MOC with the entry. If I get picked up here in the next couple candles, fine. If I don't, then that's gonna be it for me for today.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got 39 minutes to go ahead of the closing bell. That means 39 minutes until we hear from the likes of FedEx, and also reporting after the bell, Nike will be all over those reports as they drop. Right now, the Dow, the S&P.
ES is at VWAP? Yeah, ES is on VWAP right now, yep. ES is on VWAP. I'm just sitting below it in case there's a liquidation candle before it goes. I don't want to be in up here right now. Maybe, I don't know. I'm just protecting myself. What a nice sugar rush from YouTube. What a nice retest. Bounce off 68.14 on ES and 200 EMA 15-minute NQ. I saw it but didn't take it. Did you guys? No, I had a couple beautiful setups today and I just didn't get myself in. Once I was sitting on a limit and it missed me by just a few ticks on the pullback. But right now I'm too close. I'm too close to the close for me. So if we get a pullback and I get put in, I'm okay with where I'm in. But I'm not gonna get in where the price action is now, going into, you know, sitting inside a resistance fair value gap and then going into MOC in 20 minutes, you know? Oh, from the YouTube chat, Sugar Rush, there's people over on YouTube. I'm going to fix that here. Maybe I'll work on it tonight. I'm trying to consolidate all the chats, Henrik. Yeah, I'm going to try and consolidate them and put them right on the stream so everybody can read them. I'm gonna. That's my next thing I work on.
Restaurants, the owner of Olive Garden and Longhorn Steakhouse, climbed after the company raised its comp sales forecast and cited better than expected growth fueled by affordable meal options and strong spending from higher income diners. Darden expects some economic pressure in the first half of next year, but Carol, this could be offset by consumer spending from potential fiscal stimulus in early 2026. And beef prices are also expected to fall next year.
Hallelujah.
As production increases. I mean, beef has been getting hit hard.
A lot of chicken in our home.
Yeah.
Michelle Corsmo is president and CEO of the National Restaurant Association. We're curious what she has to say. It is the trade group for the restaurant industry, and she joins us from Washington, D.C. Michelle, Tim just laid out really good news, or some good news, we should say, from Darden today. We've seen
oh yeah, it's not on the Discord. The chat isn't on. It's like if you go to YouTube, if you watch the stream on YouTube, you would see it there. But I have a program. You know what? I'm gonna sit down tonight and I'll start working on it. It's gonna be a bigger problem as I collect more people from other streams. Because people like knowing, like what's going on with the show. Yeah, on YouTube. Yeah, you'll see Sugar Rush on YouTube. You can type something in and I'll see it over there too. It's just trading the forecast over there.
Which is up from last year, but not as strong as it needs to be and not as strong as we want it to be in these really tight margin businesses. And what we found is it kind of depends on what how your is and really how you're leaning into that price certainty for customers. Value matters, price certainty really matters. And so you see that making a difference as they're also navigating all of the tariff and supply chain and beef price problems that you've just talked about.
Yeah, we're going to get to some of the challenges in just a minute. So that's how your members are doing. Your members depend on consumers. From your perch, how's the consumer doing? And it's not monolithic by any means, but how would you describe the U.S. consumer right now?
So the U.S. consumer right now, I would say, is very deliberate. They want to be certain about what they are spending and how they're doing it. And that's really a place where restaurants have been able to lean into some of that certainty in the offerings they have and the pricing. But it's definitely been a situation where we're not seeing as much traffic as we normally would. We always want to see those guest count numbers going up in restaurants, and it hasn't been going up at the level that people want.
Okay, so I just want to go through some of the challenges. You mentioned some of the challenges. You said...
Hey, Grizzly DK, is that you, Henrik? I see you, man.
What is the biggest challenge that restaurants are facing?
Certainty. I think with every industry and with every business, what everyone is looking for is certainty. And we certainly know that the president has an aggressive agenda to try
Okay.
to make
Henrik's over on YouTube now.
for U.S. consumers, but the lack of certainty actually creates...
All right, I don't think I'm getting in on this long, guys. I think I'm just going to miss it. But I'll sit right here just for another couple candles, just in case I get lucky.
Changing from day to day, that
And get a liquidation candle.
A bit of a challenge for restaurants trying to serve consumers that are looking for that certainty.
You know, one thing that we seem certain about is immigration, and this note from Torsten Slok at Apollo this morning really caught my attention. He writes, from 2022 to 2024, net immigration was around 3 million people per year. The CBO forecasting that annual immigration in 2025 to 2026 will be around 500,000 people. Torsten writing, quote, "This has important consequences for labor supply, wage growth, and housing demand." From a labor supply issue, that affects your members, but also from a customer's perspective, that affects your members. Which one is harder for the restaurants in the U.S. right now? Is it the lack of workers from immigration? Or is it lack of customers from immigration?
That feels like a Hobson's choice. So without a doubt, the restaurant industry really cares about ensuring that we've got enough workforce to help provide that great hospitality that makes people love restaurants. And there's 988,000 open positions in restaurant and hospitality this month. So we need workers. And this is why it's been a significant issue for us to push for immigration reform. We need more legal pathways for guest worker programs, more opportunities for people to come in and do this work, even as a guest worker, in a legal documented fashion. And so getting to that solution is something we're really pushing for Congress, because we need to get people in jobs in restaurants.
All right.
Consumers need it.
Well,
Inflation data faces credible questions.
That the industry needs. Is the White House
Echo, echo, echo. Oh, is there echo on the mic, or you just, is that?
On immigration. So they're
Just saw it in TOS.
less than maybe they were in years past, recent years past?
This has been a difficult issue. In fact, some would call this the third rail in terms
Oh,
of
okay,
issues,
okay, yeah.
that Congress deals with for decades, frankly. And we get close.
All right, I'm gonna give this another YouTube and Twitch at the same time. Oh, okay. Henrik is double fisting the forecast broadcast. He's watching. He's got the volume on both. Hey, will you like it over there? Like it on YouTube, man. Get us into the algorithm there.
Impact on our
workforce. And so we care a lot about making sure that we've got enough workers in the restaurant industry.
And write a
There's
comment.
certainly a lot
Just
of
say, hey,
places for
cool.
technology to take jobs, but hospitality is still built on people and personal interactions. So we want those people to work in restaurants. And we want, obviously, a robust economy with lots of consumers that are coming in to enjoy those restaurants.
Well, and I just want to go back to the speech that President Trump gave last night, the primetime speech, and he talked a lot about immigrants and immigration. But he said a lot of the immigrants, and forgive me, and I should have the exact quote in front of me, but basically that a lot of the immigrants that are coming in are criminals and so on. What's the restaurant industry's experience with immigrants who come into the United States? And I realize there's legal, there's illegal, but there's a lot of folks that maybe aren't legal that are in the restaurant industry that you might hear that kind of on the side. So I'm just curious about that commentary from the president and the reality of what it really is all about.
We don't think that commentary tells the full story. And I think we want to start with a complete agreement that people that are breaking laws, especially those laws that are hurting Americans, really aren't, as illegal immigrants, certainly not a place for them here. And so creating a safe environment for Americans is really important. But there's a lot of people who are showing up every day, working hard, being reliable, taking care of their families, doing the right thing, mowing their lawn, all of those things that make your neighbor somebody that is friendly and reliable that you want to see. And so this is why it's important to us that we push for more legal pathways to guest worker programs, because those people need to be in our communities contributing. And obviously we need to deal with the people that are breaking the laws. But for those people that want to work hard and show up and contribute to our economy, let's find a place for them to do that.
Beef prices still up 13% so far this year, though they're down from the highs that we saw in August and September of this year. We've spoken to you in the past, and we've talked about inflationary concerns, but it hits restaurants different because the margins are so tight. What are the biggest costs right now for your members?
So beef costs for sure. We're seeing a lot of fluctuation on seafood. One of the things that we're seeing in the data that we're trying to figure out is a lot of data is showing seafood as a protein price going down, but what our members are telling us from our survey work is that they're seeing increased seafood prices. And so there's a lot more we've got to figure out there. And I think this is a place where tariffs or the threat of tariffs is really hurting
All
the
right.
supply chain, especially as
Target are 3,000, not 2,500. Yeah, targets. Yep.
really starts.
So you need 500 more. Okay. Yeah, just don't go backwards. Just take your profit off.
People are concerned, and then anytime you're looking at
Wow, my indicator doesn't have a long here, but I just tried. It is showing a pullback, short-term signal, and chop signal. Yeah, that's why I'm sitting where I am, Sugar Rush. I think that this is going to liquidate before we move higher, but I'm only going to give it another candle, and I'm pulling down for the day. I'm not going to go into MOC like this.
California doesn't,
I'm pulling off the ES now.
for the entire country. Hey, before we let you go, we got to talk about.
And I'm gonna pull off. I'm gonna give it this candle and pull off the NQ.
When our producer Ari said that this is a big issue for you guys, costing your restaurants $13 to $14 million monthly in forced rounding losses. Well, explain what's going on with the penny.
Well, it is certainly interesting, and nobody really had on our bingo card for 2025 that we would be talking about penny shortages. But for some reason that we can't quite figure out, the Fed has stopped circulating pennies. So the Federal Reserve does a really important thing by keeping money and coins circulating around the country so that we've got the right level of those coins and bills in the right areas and regions. And right now, they're not doing that with pennies. And so we're seeing pennage shortages. And so often consumers are coming in and paying cash. In fact, I think people would be surprised to know that 1 in 4 transactions in restaurants is a cash transaction. So people are coming in paying cash, and often they can't get exact change. So that's creating a difficult situation for consumers, but also that difficult situation that you cited in the $13 to $14 million a year in lost revenue for restaurants.
Wow, that's a real number. It's interesting. Yeah. My understanding is they stopped mining them because I think it cost more
But this is different. This is the Federal Reserve in circulation versus the U.S. not producing them new ones.
So they're pulling them out of circulation.
Yeah, there are 300 million pennies that are in circulation right now in the U.S. And so there should be enough pennies rolling around that we can keep using pennies even though they are not minted.
Have they checked the couch cushions? That's
I'll check mine.
Or my husband's
Or
pockets.
the washing machine. That's usually where they end up.
So true.
Pick up those pennies. It matters.
And those single socks. Michelle, thanks so much. Michelle Korsmo, President and CEO of the National Restaurant Association, trade group for the restaurant industries. More when we come back. We're driving to the close. A technical view right here on Bloomberg.
Okay. All right, I'm pulling down. All right, I'm done for the day. I'm pulling down. Be careful, guys. We got 15 minutes till MOC. And we're in the middle of a resistance fair value gap. And we got the VWAP rate below. So I would move, same old thing as I always say, get to break even if you got a good trade going. Don't give it back. Don't run it into MOC against yourself. If you get stopped out before MOC, that's fine. Yeah, go back to the toilet. yeah, head out to the toilet, go rub one out, get yourself a beer, do something. Do something. But we did have a good trading day. I had multiple clear signals. I just wasn't fortunate enough to get picked up on one, and I was chicken on another. And this big short here, I was just on a call for. So it's just whatever, man. When you got a plan A job, your regular job, that comes first. Trading comes second when you got a regular job. That pays the bills. So it's just the way it is, and there'll be another setup, and there'll be another day, All right. So I don't know what it's going to do from here, but I do know if you're in a good trade, I'd tighten up. That's my advice. Not that my advice is ever solicited. Start taking your mouse with you to the bathroom so you don't get short right when you flush. That's right. Yeah, I get it. That's right. Oh shit, that's right. That was horrible, wasn't it? It's like a candle and a half after I got up, it flushed. Yeah. I know, man. That was like the worst. If something like that doesn't give you FOMO, you're not a human being, right? I didn't want to sit here in my own filth. All right, I'm working a lead too, guys. MES. Yeah, Henrik's having a good day. Henrik's hanging out over on YouTube too. He's up 700 today. My friend from Denmark. $700 on micros is a great day. If you make $700 on micros, that is a great trading day. Fucking right, man. Hoping tonight around 9 p.m. the market moves some to get an MNQ trade. Yeah, I know. It hasn't, it seems like overnight there's like one one direction change where the volume is high and then it starts heading in a direction, then the volume goes away and it just kind of grinds that way for, half the night is the way it looks like.
All day long here at Bloomberg, we have got the Dow, the S&P.
I lost 2 times on one RTY, but then made it all back, plus a little on one RTY at 1 p.m. Ballistics. 8 p.m. Eastern is when the Japan market opens, and then 9 China opens. Yep. Asia. China.
And the 10-year on this CPI Thursday, 4.11% with the 2-year.
For a while, and every time we heard China, it was a big ass friggin' red candle. China candle.
West Texas Intermediate crude up 0.3%, 56.09 a barrel, and Bitcoin right now down 1.2%, 84,958 on a Bitcoin. Bottom line here, stocks are advancing as a cooler than expected inflation report lifts hopes that the Federal Reserve will cut rates further. Earnings after the bell, 2 closely watched reports.
Hey, make sure you subscribe over there.
That report, FedEx shares up 1.8%.
Henrik. Make sure you hit the subscribe and the like button, fellas. Subscribe and like. Smash that like button. Or subscribe, whatever. That's so gay. Okay. Thanks, Henrik. I get annoyed when people do that, but I guess you kind of have to.
I look like I drive a minivan.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
All right, everybody, we are just about 18 minutes away from the closing bell on this
All
Thursday.
right.
Getting ready to.
All right, guys, we got 8 minutes till mandatory order close or MOC. We're working the top of this fair value gap. We're working it over. If we close above this, then I really, the long is looking good for a breakout. If this candle can close above it and clear this fair value gap.
Technicals with us, and we've a perfect duo to do that. Ryan Dietrich is back with us, Chief Market Strategist at the Carson Group here in studio. Good to have you here, along with our own Bill Maloney, Bloomberg Chartered Market Technician, joining us here. Also, technically, let me start with you, Ryan. How are we doing?
Well, personally, doing well. Enjoying your city. You got the new.
No. We're talking about the market.
I know, but no, thank you guys. It's always so much fun to get to do this face to face. It was really, we did this last summer. It was super hot, so now it's cold. So, but the market still looks pretty good to us technically. I think the one thing that gets us, and I'm sure you've all talked about this. Everyone complained only 7 stocks going up most of this year. It really wasn't true. We disagreed with that. And now you have a day like yesterday where tech's down 2%, but then you peel back the onion, there were more 52-week highs on the NYSE yesterday than the day before. The number of stocks above their 50-day and 200-day moving average were higher yesterday than the day before. So what's that tell us? Well, there's a lot of stocks that are going up. It's not just about tech. Yes, this tech pullback. Hey, where's tech? It's where it was 3 months ago. One last comment. If I've been here a week ago, we've been talking about, 13 days in a row for technology higher. Now it had that pullback, bouncing a little today, which is nice. I think it's just a pretty healthy market still.
MES will probably go for 68.55. VWAP, ST +1, and settle at VWAP at close.
Total return basis, so keep things rolling.
68.55. Let's take a look.
Yeah, we've been bullish, so we're still in that camp. You think about if you don't.
So Henrik is calling a 68.55 pop, which is basically this fair value gap here. That's right here. So he's saying we touch this fair value gap, and then we head back to the VWAP. So let's see if he's right. Let's watch the ES here. We got 6 minutes till MOC. So he's calling 68.55, and then a runner back to the VWAP.
Which we're probably going to do this year. Only happened 3 times. That next year, called the slingshot effect, that next year's been higher every time, up like 20% on average. No, not falling for 20%. But I'm saying this volatility and this upside we had, we don't think
I would like 60. Uranium wants a little more juice, so let's get uranium a little more juice out of it. Let's take a look.
On air about the S&P 500 going.
Yeah, I got a historic line of resistance at 64. So uranium's looking for 64.
The NVIDIA days, the numbers were just fantastic. Interesting, though, is that Micron has not taken out the highs of the year, so the stock's up.
All right, actually, that 50, I like that 54 number. It's right in the middle of that fair value gap. I like that 54. 64 is very reasonable on high volume to just spike it. To spike 64, that's reasonable, I think, too. You know, before the selling takes over.
Overall, the tape still looks good.
I'll jump in on that, and that's true. You know, we looked at the 10 largest stocks in the S&P 500, the SPY, make up like 41%, like we just said there. But we look at 25 developed markets. That's actually the 3rd smallest out of all of them. So the U.S. is not actually as top-heavy. And I get it. A lot of these countries in Europe have 1 or 2 big companies that make up a lot. So I hear that, but we heard that a year ago. A year ago we were talking about that. So I'm not minimizing it, but it's there.
Maybe not as top-heavy, but still top-heavy.
Potentially, but just last week, I mean, a week ago today, the S&P 500, the New York Stock Exchange advanced decline line made a new all-time high. That usually says the clock is starting as breadth leads price. So I'm with you on that. That's why we're more neutral tech. I mean, we're more neutral tech here. I think, industrials, financials, those cyclicals, healthcare. We're not as warm and fuzzy in healthcare, but I totally see what you're saying.
All right, we want we want a nice, great long thank you from Uranium's Long. So let's see if we can get a thank you from Uranium's Long. All right, we got 3 minutes till MOC.
They're getting cautious up in here. We've had 3 great years.
We're at 49. Looks like we're getting some juice already. It's like we're getting a little juice.
Costco doesn't look good. I mean, Walmart has a higher PE than NVIDIA right now. So there are some parts of the market that are looking very expensive. The biotechs are looking good. You know, defensive names have been acting well. Oil still doesn't look great. But caution is kind of what they're looking for next year.
I am like blown away by what you just said. You said Walmart has a higher PE.
Has a higher forward PE.
Oh, forward PE. Right.
So for 2026, Walmart's trading more expensive than NVIDIA.
Does that, I mean, Ryan, does that mean that NVIDIA's a bargain right now?
Oh boy, put me in the hot seat
I
there.
know.
I mean, I think.
And I know you're a technician, but
yeah, I mean, what have we seen with these high-flying tech stocks? You want to buy things in bull markets on scary pullbacks, right? We saw that in gold last month in November. Had this big move up.
All right, 2 minutes, guys. 2 minutes. 2 minutes till MOC. Let's see if we get a good one or a nothing burger. Yeah, don't go lower. Come on. What are we doing? No.
Bill, I want to ask you, what's your take on Developed International?
No.
They look awesome.
Yeah, I mean, because we're talking about valuations. It's like, well, if you're worried about tech
Don't do it.
in the U.S., that's fine. Go look around the globe. There's not a lot of tech in Europe.
Got about a minute and a half.
Materials, those groups still look good. And to me,
I think this is just going to be the rubber band.
In some of those countries, France, Japan,
I think this is just the rubber band.
Hitting an all-time high. So developed and emerging look
Snap.
great. Finally, kind of after a 10-year bear market, they're starting to turn the corner.
So what's the risk? What's the number one risk you think, Bill, for 2026?
Well, I'm looking at Oracle and I'm looking at Blue Owl.
So
Oracle,
private credit, and you're looking
exactly
at
private credit
swaps.
Oracle's got to hold 179, 180 right here. If it can hold on to here, because that's another busted stock that was trading $350 not too long ago. So that has to hold. Blue Owl has to kind of stabilize and look good, but it's private credit and the data centers. You know,
Blue Owl backing out. They've been a long time.
All right, 1 minute, guys. 1 minute.
The Michigan data center.
Yes,
right, exactly.
Yes.
Just for those not.
But then we got news late that a couple of the they got approval from a couple of the energy companies, regulators. So that's going ahead. So it's going to go.
Ryan, same question to you. Risks. What concerns you? What scares you for next year?
The Fed's going to be dovish, right? We know that. I mean, that's going to be happening. What if they continue to cut? and the economy really starts to get better, Reacceleration is a big theme
You
we
think
have.
no matter who's as Fed chair, they're going to be debit?
It's getting tickle. It's tickled. What's up, Ballistics? All right, here we go. We're on the countdown. We can't have but maybe 30 seconds left.
We could go one cut. We think it's probably more like 3 or 4. Just
MOC inbound, imminent.
So, could they turn into hyperdrive like late 2021?
You're tickling Shrek. Is Shrek feeling it? Oh, here we go. MOC, guys. Let's see the push. Come on. We need Fiona to stick her thumb up Shrek's ass right now or something. Let's go.
We missed the data.
Bill, 10
No.
seconds. What's the buzz you keep hearing about the Fed next year?
Back
Real
to
quick.
the Fed, the 2-year yield is going straight down. It's been going down for years. The 10-year's been going sideways. So until that
No, hold on now. Hold on. Maybe we tap the 20 and go. Tap the 20 and go, maybe. Let's see.
Thanks, guys. This is Bloomberg.
NQ is showing some strength. Come on. All right, we just tapped the 20 EMA. So maybe this will be where people buy in. Let's go, buyers. Come on, let's go, buyers. Don't make uranium cry. Don't make him cry. Come on. Don't make him cry. Don't make a grown man cry around here, please. Yeah. Yeah, you got to rub 2 out now. Oh, man. Come on. Come on. We got 8 minutes till the close. Let's see if we recover. We got a VWAP. All right, let's get the VWAP bounce. Well, I think maybe you got to start looking at your entry points. I've been thinking about it, uranium. Maybe we got to analyze where you enter at. You know what I'm saying? Like, it seems like you get the general direction right, but it seems like you take heat. You know what I'm saying? Shit, I have that problem most of the time too, yeah. Like, I spent a lot of time kind of refining my entry points, and that's why I'm really timid. I'm really timid sometimes on entering because I've been blasted exactly the way you're describing for so long, you know? You know, that's why I'm super, and it hurts me too, but at least if I'm not in, you know, I can get more aggressive on the next one maybe, you know, and plus I've watched so much of this go by. I've seen, like, I'm traumatized by some of the shit I've seen, honestly.
This is Bloomberg Business
Come on, let's go.
with Carol Masser and Tim
We got 7 minutes till the close.
All right, everyone, we are
Let's get some. Let's get some. Get some.
live across Bloomberg platforms. In just a moment, we're going to head over to our TV colleagues, and we will count everybody down.
Hell, I got in early and had to stop, and it wicked down to get me out, only to turn up and run. So my stop, yeah, I know, that happened to me this morning.
You know, we're kind of green across the screen here,
But you can only let it run so far, and then you gotta be like, this is enough. I'll just find another entry, you know?
Okay, how does the day off?
It's not. It's a bad habit to let it run and run and run. 1.5 point on RTY, one contract.
Yeah.
That there's actually the U.S.
What does VWAP
CFTC
SD plus 1 mean? Sugar rush.
In case anyone doesn't know, the only federal holiday.
Henrik, what does that mean?
Until a few hours ago, I don't know. A few minutes ago.
Was Christmas.
Was Christmas, yeah.
Right.
But if you're a federal government employee, you can
fuck, man. Come on. Hold on.
Interesting.
This is
That's
nasty.
coming our way. We tend to live
Oh,
around
the Russell.
holidays and when the market's closed, as do, and they tend to coincide right with the federal holidays.
I'm looking at this executive.
He
order
said
that was
Russell,
signed by
Sugar Rush.
President Trump, December 18th.
Yep.
Thank you to I think
Sugar
Talia
Rush
for
asked you over on
Thank
YouTube.
Talia. The executive order says
Standard
December 24th,
distribution
2025
plus
and
one.
December 26th,
Yeah.
2025.
Don't trade E-mini.
It's falling within the scope of executive order
Hendrick says don't trade E-mini.
82 of February 1971. Insofar as they relate to the pay.
All right, now I want to enter the long, you know? Who wants to do the long now?
2025.
Yeah. So it's not like this is going to be in perpetuity.
M2K.
It's this year.
It's just this year.
Yeah.
But wouldn't it be nice to have a federal holiday, the 24th, the 25th, the 26th, forever?
Seriously?
Yeah.
Of course.
Okay. I'm just throwing it out there.
You guys, are you guys stopped out yet? Are you still holding this? Because we're looking at 10, 12 points now at this point.
You know, we'll see the markets. I don't know what the market.
M2K is $5 a point.
Well, just
A point or a tick?
Right?
I think so.
Like a tick or a point?
But aren't there other gosh, help us out in the control room. Aren't there other government where the government's closed?
But the markets are not?
ES is 13.50 a tick.
I'm not sure.
One whole point move. Okay.
We're interested is because
What is M2K?
when the markets are closed.
Yeah,
Not
no,
point one.
we are, right,
That's
right.
why. That's
And
why you
there's,
have
I can't remember
the
if it's
personal,
like 7 days.
the personal interest in that as well.
Yeah, but it's interesting.
It is interesting too because I remember around Juneteenth last year, the president was complaining about a loss of productivity with too many.
Oh, Russell?
holidays.
Okay, I've never traded the Russell.
Yeah.
Okay.
So that's interesting. That came in the spring last year or summer,
Yeah.
and then now employees are getting through.
Trade MES, micros, ES,
I
yeah.
was just talking from the White House
Yep.
just a few hours ago. So
Yeah, micro E is
some earlier
$1.25 a
reports, I think
tick.
there was
Yep.
some speculation about whether
Small
or not it was
caps.
becoming something that would be so going forward.
The micro Russell
Again,
RTY.
kind of played out, put out,
And a good TV
then
show.
changed again. We're checking to see.
Yeah, he said there are too many non-working holidays back in
Sugar Rush.
Juneteenth. He wrote on Truth Social that there are too many non-working holidays and they are costing the country billions of dollars.
All right, so interesting.
Yeah.
Well, so good for like government workers, right? Yeah, Veterans Day, NYSC is open, but the federal government is closed. Thank you so much, Elizabeth.
Well, that's some
for
good news
that.
if you're a federal employee. I have some bad news for you if you live in New Jersey.
Russell are really hard. My mentor says it's manipulated. It's too manipulated. Interesting.
Path train fares jumped to
I've never played with it. I've never done it. It just moves unpredictably. Is it low? Like, is it kind of low volume there, so they're able to do it?
Round trip? That's $4 one way, or is that a raising ticket prices to $4 by 2029?
The board for Path voted on Thursday to approve the 33% increase over 4 years to boost operations and services on the Path train, which millions of riders use each year. Rides are heavily subsidized by the Port Authority.
Really? It used to be $1. I mean, everything used to be like, no, but oh my God. You know what this does though? Like, there are times I think, oh, should I drive? And then I think about, okay, what does it cost?
Really?
Yep.
Into
not,
work?
Not every day, but occasionally.
Okay.
And it's like, what does
Where
it
are you
cost?
gonna park?
Well, there is a garage.
Yeah, but that
You're right, you have to pay for it. But you know, you just, I don't know. Whoa.
Yeah, sorry, Carol.
$8?
Bad news.
$40, and that's for just part of the way. All right, guys, I'm done. I got to head over to our TV colleagues right now. The closing bell. It starts.
All right, I gotta make a decision here.
The closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S.
All
market
right.
close starts right now.
Oh, sorry guys. We kind of lost this. I don't know how much longer I'd hold on to that. Now we're kind of down to where I was willing to enter earlier. This is where, right here is where I had my entry earlier for the pullback. 2 minutes till the close. So if I'd have left my trades on, I'd be in right now.
We start off talking about a pretty sizable rally.
Yeah, it's total stop out hunt, totally. 100%. I bet we go up now. I bet this is the bottom. But I'm not going to trade. I'm not in anything, nor am I going to get into anything. But
still, a big gain, and that is certainly providing some momentum.
Carol's
Yeah,
horrified right now.
I
because
think
just
so.
shared- I just shared with her.
All roads lead to the VWAP, guys.
This is
All
your
roads
path.
lead to the
The
VWAP.
path train, it's going to rise to $4 per trip by 2029.
That actually is news to me, and that is horrifying.
Carol was freaked out.
I was gobsmacked. Like, that's $8 one day
Just
round
to
trip.
go to work.
Romaine.
That's not even the subway.
Romaine, this doesn't concern you.
Yeah, I don't know what you're talking about.
Romaine doesn't leave the Isle of Man.
Is that like,
Yes.
There's a limo
is that
every
like,
day
is that like that
picks
mythical
them
S
up.
train that runs to Brooklyn or something?
No, it's a real train. It's great. It's clean. It runs on a schedule, but
Well, there you go. And there's your $4. It sounds like some value.
just swim across the river. I don't care.
You and me both. I'll swim with you.
All right, that's it. Ding, 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 ding. We're at the close, guys. We're at the close. Who's ringing the bell today? I always wanted to be at the New York Stock Exchange while they were ringing the bell.
Green across the screen, some optimism coming out of the latest economic data, some optimism coming out of the Micron numbers last night. The Dow Jones Industrial Average higher by about 69
In the
points,
original
0.5%.
building, you know.
The S&P up
Cardinal.
50 points or 8
They're
tenths of
insurance,
1%.
right? Is
The
Cardinal an
Nasdaq,
insurance
that's your
company?
outperformer. The composite up 1.4%. The Nasdaq 100 up 1.5. The Russell 2000 says it wants to participate as well, adding about 16 points or 0.6 of 1%.
All right, back to the S&P 500 I go, and you've got kind of an even split again. Another day, S&P 500, 263 names to the upside, guys, 237 to the downside, Katie, 3 unchanged.
Let's take a look.
All right, guys, that's it. Who's still got their position open? If you're in margin, you gotta close out here pretty soon, or you're gonna get your phone's gonna ring.
Communication services.
Well, not with a prop firm, but you know what I mean. If you got cash,
That is a bright, beautiful green. But then you take a look at what didn't do.
you got cash, and you're not looking good.
This actually was your outperformer yesterday, but that was your biggest loser on a percent basis. Also, consumer staples losing quite a bit today, down about 0.7%. But that just speaks to the risk-on action, Carol.
All right, there's a lot of green there. I had a fair amount of things to choose from, but let's go right to Micron Technology, guys. At its highs, up 17% today, finishing with a gain of just over 10%. A top gainer in the S&P.
We had a few people on our trading forum at the New York Stock Exchange visiting Peter Tushman. Oh, no kidding.
Signaling
That guy's like a celebrity now. He's everywhere.
to charge more for products. We saw that on top line.
Doesn't he go on the Top Step TV show on YouTube's too?
The voracious appetite for AI computing components definitely pushing Micron to the upside. And then we just threw in the stocks there because that too, some outperformance there, up 2.5% in today's session. Speaking of a gainer, Lulu, let's go over there. If that was a top
That dude looks like he's full of life, don't it? I hope like when I'm 85, 90 or whatever he is, he's way up there. I hope I'm full of life like that, getting around, you know?
Activist investor Elliott Investment Management has built a stake of more than $1 billion in Lululemon.
He does a lot of interviews too.
Jane Nielsen, who's viewed as a potential CEO candidate to take over for the CEO, Calvin McDonald, who we know is on his way out. But we know this is a company that has dealt with slowing growth and some other issues, a lot of competition in this space. Its stock is down nearly 50% so far this year, and about 7% of the float is short. And then I want to go to Trump Media and Technology. Check this one out, up almost 42% in today's session. This is kind of added to my list a little bit later on. This as the company came out and said it is getting into nuclear fusion. Who'da thunk? The company said it will merge with TAE Technologies. It's a closely held fusion developer founded back in 1998. It's a transaction valued at more than $6 billion. So, of course, Trump Media behind Truth
Okay, guys, I'll be back in just a minute.
and a bunch of other things. But again, kind of pivoting the business, expanding out into fusion. We talked with our Will Wade and says, fusion, it's a while away.
All right, those are the gainers, some big gainers there. I got a few decliners, including a pretty big one. HP Inc., down 4% today. Hardware stocks took a bit of a hit today, some of them. Bloomberg Intelligence on Wednesday did flag concerns about HPQ's earnings, saying that fiscal 2026 EPS estimates have reset lower, reflecting expectations of PC margin compression from DRAM inflation and tight supply, hence Micron's good day. And these dynamics represent a 30-cent hit to EPS. That's according to the company. Woo Jin Ho wrote that of Bloomberg Intelligence. HP Inc. falling 4% today. Birkenstock also taking a hit, down 11.3%. Its worst day in more than a year. This after the company predicted a slower pace of sales growth in the coming year due to the impact of a weaker U.S. dollar and tariffs as well. Birkenstock expects sales to probably rise by as much as 15% in fiscal 2026 in constant currency terms. That implies annual revenue of as much as 2.35 billion euros. It's slightly below analyst expectations. And finally, Inspire Medical Systems. We talked to the CEO, Tim Herbert, quite frequently on our program. They make a medical device to treat sleep apnea, down 19.5% today. This after 2 regional Medicare contractors removed the new higher paying code that would affect Inspire's product to treat obstructive sleep apnea. JP Morgan calls the removal, quote, a disappointing reversal that represents a significant reduction in reimbursement relative to expectations for next year.
All right, well, speaking of reversals, let's take a look at yields. We did see a big drop in yields around 8:30 a.m. this morning when we got that CPI data as well as the jobless claims numbers. Those competed against each other, and you did see some of the worst of that drop in yields peel back just a bit. The net result of it all there on your screen, only down about 2 basis points on your 2-year yield after being down as much as 6 to 7 basis points. Your 10-year yield going to close out the day down by about 4 basis points.
Yeah, really interesting to see that bid come into the bond market. On the heels of that CPI print, there were a lot of nuances there. We know that it was muddied, if you will, by the government shutdown. I love the headline on the Bloomberg terminal calling it basically a Swiss cheese report. But you take a look at the market reaction. I mean, they're taking those numbers and they're saying that, you know, perhaps the Fed is going to hike a little bit more than maybe we expected in 2026.
Yeah, and kind of interesting. It was just yesterday, right, Romaine? I think you highlighted that, you know, the S&P 500 dipping below that 50-day moving average. Well, our Bill Maloney was just on with us too, and it just went back up above the 50-day moving average. So trying to figure out this trend line is something we'll have to watch into the new year.
Well, I was watching this too because, I mean, if you remember, I mean, what was it, the kind of in mid-November, we also had a retest of some of those key moving averages, and you ended up getting a nice bounce off of it. I think the S&P ended up rallying like 6 to 7% after hitting that line back in mid-November. But it does get to this idea that a lot of what we've seen in this equity market has not been a true sell-off. It's been much more of a rotation, just a rotation out of those some higher weighted names, which of course then drags everything down. But that money has for the most part stayed within the market.
Well, we're starting to get some targets for the S&P 500 for next year. We spoke to Ryan Dietrich of the Carson Group. He was on our show just a few minutes ago. And he's been right for the past 3 years. He's very bullish when it comes to his outlook, but he says after a year, and he's a technicals guy, so after a year like we saw with the so-called Liberation Day and the lows of April and the rise since then, we're poised to see an increase on the S&P next year of 10 to 15%.
Hey guys, I know we're waiting earnings out of FedEx and Nike, but I want to there was an interesting story in the Bloomberg terminal. You guys are on the radio, but for reasons that never were explained to me, also on TV. But this has been like a trend now, and you've seen this actually play out with podcasting. And YouTube has actually really kind of gone all in on this. The idea that what used to be confined to just, you know, your ears has now become video as the main medium. And of course, they have ridden that wave to boost viewership and subscribership as well, though I do think we are getting earnings now out of FedEx.
As much as I would love to go into that a little bit more, FedEx, here is the red headline on the Bloomberg terminal. It sees full-year adjusted EPS $17.80 to $19. Previously, it had seen $17.20 to $19, so bringing up the lower end of that range there. It sees full-year CapEx $4.5 billion. That is in line with its previous guidance and estimates as well. Adjusted operating income for the second quarter they see at $1.61 billion. The estimate had been for $1.36 billion. Really interesting to see that guidance raise here, Tim.
All right, what's the stock doing? Up 3.3% in the after hours, up about 3% in the after hours. Raj Subramanian, FedEx's president and CEO, said the company delivered an outstanding second quarter, successfully executed our growth strategy, and advanced our network transformation while navigating a highly challenging external environment. He continues to say he's proud of the team members worldwide for their commitment to FedEx.
I think it's interesting, too, when you think about the turnaround plan that he took over. Obviously, a lot of it was also about moving into higher value business, meaning higher value deliveries, but also cutting costs. They do talk about that they are sticking by those cost reductions and saying that those cost reductions so far will be permanent in their words, and that savings from that will then, of course, be reinvested back into other parts of the business.
Yeah, they talk about FedEx Freight segment operating results decreased during the quarter due to lower shipments, higher wage rates, and the higher hiring of additional dedicated LTL sales professionals in preparation. It does sound like they still have some challenges, but we did see the stock pop a little bit higher in the aftermarket. All right, folks, that is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, YouTube and TV, all of us. Just saying.
The future is now.
You've heard of TV on the radio, right?
I might need to get another job, though, to pay for my path.
Yeah, that's true.
Katie, what are we going to do?
It's awful.
All right, guys. we could. Hey,
Could
Katie.
move into civilization.
That's all right.
All right, that hurts, you know. Hey, Katie and Romaine continuing there on the close on TV. Tim and I continuing right here on Bloomberg Business Week Daily on Bloomberg Radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Carol Masser. I'm Tim Stenivek. I'm looking at what's going on with the shares of FedEx right now in the after hours. Higher by just about 0.7%. We did see a little push higher.
Yeah, it was up about 1% earlier, but it's now just up. Yeah.
It got up as high as 2.7%.
Oh, it did?
Yeah, 3%.
Yeah.
Looking at shares of the company, because the company second quarter adjusted earnings per share did beat estimates. We just got those numbers. Adjusted earnings per share coming in at $4.82. Estimates were for $4.12. Revenue coming in at $23.5 billion. That beats estimates of $22.8 billion. It's an increase of 6.8% year over year. And adjusted operating income up 17% year over year at $1.61 billion. That beat estimates of $1.36 billion. Those are the second quarter results.
All right, good to know. And we're watching it in the aftermarket. Lee Klaskow is Bloomberg Intelligence Senior Transport Logistics and Shipping Analyst. He joins us from New Jersey. Lee, what do we need to know about these results? What jumps out for you?
Well, obviously a beat is always better than a miss, so I think that's obviously some good news. It looks like the margins came in a lot better than what expectations were, about 80 basis points better than consensus. We're going through the report right now, so we're trying to figure out where that beat was. But overall, it looks like a very good print for the company, especially given the challenging environment, whether it's them grounding the MD-11s or the end of the de minimis exemptions. Looks like they're working through that through their restructuring programs.
That's the global trade policy changes that you're doing.
All right, guys, I'm back. Sorry, I had a quick call I had to make. Eric Heels. What's up, Eric Heels? How'd you do today, man?
So freight that was coming in from other countries that were
You still around?
Less, didn't have to pay duties. The Trump administration ended that loophole that was had pretty much bipartisan support, and what that did is just reduce the amount of traffic that they were shipping via air freight coming into the U.S. And eventually some of that freight's going to work its way into the ground network.
No, I'm just saying hi to Eric Heels.
Definitely a headwind that it looks like they were able to overcome.
No, I'm just saying hi. I'm getting ready to sign off. I had a phone call and a couple other things to do real quick.
Those are grounded after the
Oh, what happened, dude?
Kentucky just a few months ago.
Did you accidentally leave one on?
Has FedEx been able to make up for that?
That's a great question. I mean, what they would have to do is they have to go out into the market and they would have
Oh yeah, that's a classic. That's the best. National Lampoon's Christmas Vacation's the best. The shitter's full. Shitter's full.
But like I mentioned, it looks like they were
Well, I didn't make it. I don't know how it happened, to be honest. I left a limit order on and blew a funded. Oh man, that's a dangerous thing, man. I can't count how many times I've done that, and I went back and like I just wasn't paying attention, or I had too many accounts. You know what I'm saying? Dude, I'm sorry, man. Sorry, dude. Do you think it was a ghost trade? Like you didn't see it when you closed out? Like it wasn't showing? You know what I'm saying? Like in your, a lot of times what I'll do, I always make sure my positions, and this is Ninja Trader, but I'm always make sure my positions are closed. Like if there's nothing in here, there should be no positions. Yeah. Yeah, you always, you got to triple and quadruple check. Stop and sale set, and I think it didn't cancel. Yeah. Yeah, what can happen is if it hits your stop on the liquidation candle during the open, like the first candle, it can bounce your stop. I've had that happen a tons of times. It can bounce your stop.
I want to ask you. I think we always thought, I don't know, it's a conversation we used to have at home a lot. Is
Well,
that
the position doesn't show if it's just a limit. Yeah, that's true. Well, it does. Wait, you like your stop loss? You mean? Do you use NinjaTrader, Eric Keels, or you TradeView? I don't know how TradeView really looks. Yeah, that's what I was saying. It should.
Well, when you're thinking about demand,
Tradeovate. Can you go through your trade logs? You got like trade logs, like executions here. I can go through and see how each contract was executed. It doesn't show limits.
So that B2C, business to consumer traffic.
Oh, it did.
And what UPS and FedEx are
Man, I'm sorry, dude.
do right now is to restructure their network to this new reality.
That's one that'll make you lose sleep, because if it happened once, it can happen again,
Be able to hopefully grow some of their B2B
Yeah.
businesses. They're looking
So it had to have
into,
blown your stop out.
Specialized verticals like healthcare. UPS has really said that they want to grow significantly in that market.
But they've been talking
Yeah, that's why
about
you if you're running a cash account, you got to be really, really careful,
It does take time.
especially if you're doing like minis.
Intensive networks, you can't just turn on a dime. And they're also employing a lot more.
Yeah, I'm sorry, dude.
And those are expensive investments that they have to.
How do you do that, Ballistics? Ballistics says you can show it.
Overall footprint, because they might not need the same amount of facilities that they did when they were doing mostly B2B traffic, and now that they're doing B2C, they can do things differently. And for a FedEx, they operate.
Do you have that set, Air Keels, like he's showing?
Working ground network. The ground network, those trucks that you see, those are independent contractors, but the express network are mostly employees, and now they're working their way into combining those two networks, which is something that the street was always scratching their head on why they never did. At the time, management used to say that it provided value, but I think, like I mentioned earlier, it seems like they're finally leaning into the new realities of their business, and they're cutting the fat that they had in their organization.
All right, super appreciate it. Hey, Lee, thank you so much. Lee Klaskow.
Well, let's make sure you got it set, Air Keels. Maybe at least now it's a tough lesson, man. I tell you what, lessons cost money, man. Lessons in life cost money. And the best lessons always cost the most. I just, sometimes I think back in some of the mistakes I made and the lessons I paid for. I wish they didn't take up so much of my life paying for.
Nike brand digital
But,
sales.
all right, guys. Hey, I got to sign off, guys. I got some stuff I got to do. I got the chart centered for tonight. And just know, guys, that if you like keeping it on through the later hours, yeah, just watch out for it. I know it costs money, man. This is a game where everything costs money.
Yeah,
I know.
To see that, I think that Greater China revenue.
I know.
Again, some weakness.
This is a game of money, Everything you do costs money. It's like there's nothing you can really do that doesn't cost money playing this game.
Second quarter revenue.
But hey, if you guys are watching it through the close about 4:45 or so, I'm gonna shut the stream off for about 2 minutes, then turn it back on. Then that way my AI program can pick up the day show and run clips. But all right, guys, I'm gonna sign off for the night. I appreciate everybody hanging out through their workday with me, and Godspeed, everybody. We'll see you tomorrow at 8 o'clock.
Wall Street. We do check markets all day long here at Bloomberg. Just getting earnings out of Nike. Nike shares, they are now declining after hours, looking at a 2% drop in Nike. It did post a surprise jump in sales in the last quarter. The stock, by the way, has dropped 13% so far this year. It is heading for its fourth consecutive annual decline. We'll have a whole lot more on the Nike story with our Poonam Goyal coming up in just a moment right here on Bloomberg Business Week Daily. Also reporting moments ago, we heard from FedEx. It has raised the low end of its full-year profit and sales outlook, signaling the company's efforts to slash costs and streamline its delivery networks are bearing fruit as demand improves. After hours, shares of FedEx up now by 1.9%. The Dow, the S&P, NASDAQ all advanced today. The S&P 500 index halted a 4-day slide up 53, wrapping up the Thursday session, a CPI Thursday at 67.74, up by about 0.8%. The Dow up 65, up 0.1%. NASDAQ Composite Index up 313 for NASDAQ, a gain of 1.4%. The 10-year at 4.11%, the 2-year 3.45%. Gold down $6 the ounce, 43.31, down 0.2%. West Texas Intermediate crude up 0.2%, 56.08 a barrel. And Bitcoin today down 0.9%, 85,168. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Appreciate it. Nike shares falling, as Charlie just mentioned, after the company announced its latest report. It did have a jump in quarterly revenue, a surprise jump in sales in the latest quarter. It reassured Wall Street that the world's largest sportswear company is moving past a lengthy slump. Let's talk some numbers here, Carol. Revenue in the fiscal second quarter rose 1% to $12.4 billion. That's above the average of analyst estimates. Earnings per share also outpaced expectations.
You know, I wanted
but shares down close to 3% in the after hours.
Yeah, I think maybe people are looking for more. I mean, the stock's been under pressure. I am taking a look at a longer term chart going back to 2021, like in November of 2021. This was $177 stock. And we're at 65 and change. I'm not saying it's just a number and it doesn't necessarily tell you it, but it just is a reminder of kind of where this company was back in 2021 and how much it has come down. It's had some issues. China's certainly been an issue. We've talked about right product mix. You know, we've talked about that with our Poonam Goyal of Bloomberg Intelligence about that. There's a lot more competition in this space. I'm always amazed at the amount of either sneaker choices.
Well, they invented the category when it came to those sneakers.
Totally, and done celebrity stuff,
look what's happened
really well.
now.
Yeah, it's very different. I mean, Chief Executive Officer Elliot Hill said the company is making progress in the areas that they prioritize first and remain confident in the actions that they're taking to drive the long-term growth and profitability of their brands. Again, coming out in commentary after the results. Poonam Goyal is with us. She's Senior Analyst for E-commerce and Athleisure at Bloomberg Intelligence. She joins us from New Jersey. I want to first ask you, before we get into the specific numbers, the CEO said the company's making progress in the areas that they've prioritized, the actions that they're taking to drive the long-term growth and profitability of their brands. Do you agree, Poonam, that they are taking the right steps and it's just going to take time before maybe it shows out better?
I agree 100%.
Okay.
I think they are they are taking the right steps. And I do see that because I see that in the wholesale strength of the business. If you saw the numbers, an 8% increase in wholesale for the quarter was very impressive. We were just looking for a low single-digit gain. So that just shows me that the newness that they're adding is paying off and it is working.
So what are shareholders reacting to right now? As I mentioned, shares falling just moments ago, about 3% in the after hours, down 2.1% right now. What are they reacting to?
I think, there was weakness in the DTC channel more than you would have expected, but I think that's just a function of them clearing so much of that old inventory there, and that's just the backlash that you have from that. The only other thing that I saw that I was a little more concerned about was China. China sales were down 16%. That's a pretty steep decline. The estimates were just for a 9% decline. So I think those are the two negatives, but if I take just a deeper look, apparel was particularly strong, up 4% in the quarter, and footwear sales were flat. So I do think that they're doing what they're supposed to be doing. Once the inventory is right-sized, I think that's when you'll be able to see more sustained growth across all their channels. China remains a story to be told because we're not sure how they're going to fix China just yet.
And their product innovations, it's interesting. Nike is, I think, one of the 50 companies to watch that have been identified by our Bloomberg intelligence team, and I'm sure you weighed in on that. You agree that, they're getting there. I mean, they've got, great endorsers or endorsement right deals that they have out there, and I'm just wondering, is it just, again, it's just going to take a little while? And how much time should investors let them, kind of have to figure this out?
Sure, yeah. Nike is on our focus idea list, so it's a high conviction idea for us. And what I would say is I think you're getting there. I think you're the closest you've been in years to see them actually drive some meaningful traction in the brand. What I'd say is going to help them and what you'll start to see unfold in calendar 2026 is the new launches that they have in running especially. I think they've made a much bigger push in running this year, and you saw that with the success of the Vomero line that they have. It's actually doing pretty well. They're back on the field with runners, so they're trying to reclaim that share through good product and product innovation. And I also think that they're focused on just product. It's all about the product, and I think when they get the right product on people's feet, on people's backs, they will resonate because it is still the largest activewear brand in the world.
Okay, so you mentioned running. What about other sports and how they're doing when it comes to innovation and when it comes to product in those sports? The ones that they're known for, basketball, for example.
Yeah. So the Kobe shoes in basketball have been doing really well for them. So I think that's a nice spot for them. I do think they need a little more work on the Jordan line. I think that's a line that's kind of fallen behind on innovation. So they do need to step up momentum there. But they have the leaders when it comes to basketball. They have the right players on their side. They are doing what they need to do to win the game. And I think if you think about basketball, I don't think anyone does it better than Nike still.
Yeah, you know who also shop? Women. And I think about the collaboration, Poonam, that they're doing with Skims. We've talked with you about this before. What are you hearing about how well that's going? And what do you think, how much more opportunity do they have there?
I think Skims was a pretty nice collaboration that they launched. I think it puts them on the mark with women because women is a category that's pretty evenly split across the platform. There's no clear leader in women's really. So I think Skims, from what I saw in the stores, it was being very well received. I think it's a line that resonates with their customer and also brings in a new customer to Nike because the Kardashian brand clearly has broad appeal. So it really allows a new customer to also come into Nike, probably a younger one too, which is always great.
So do they, we've spoken a lot in recent days about the challenges at Lululemon, given the news just last week about Calvin McDonald being pushed out, and of course what Chip Wilson of Lululemon has said about a new CEO. But in terms of innovation when it comes to athleisure, where does Nike stand in the space right now?
So Nike is still, I would say, among the leaders when it comes to innovation, but just not moving fast enough. And it really depends on, each product line that you're looking at to really dissect where it stands relative to competition. You can argue that Lululemon, has still done a pretty nice job when it comes to its men's franchise, and it's doing well there. But when it comes to women's, they've lost steam. And I think Nike, through its Skims partnership and just the innovation that it's put into its products, is gaining momentum. So it's almost you win some, you lose some, but you kind of have to put product first to really win the game.
All right, top question you think has to be asked on that Nike call?
I think it's about China. I think where is China going and how are they going to fix China? And the other one would be on inventories. When are we going to have a clean house to really see traction in DTC?
All right, so listen, we mentioned that Nike is on the Bloomberg Intelligence list of 50 companies to watch in 2026. It's an alphabetical list. I don't see Lululemon on that list, although Lululemon definitely popping in today's session. It was a top gainer in the NASDAQ 100. Elliott said to build a $1 billion plus stake in Lululemon. What do we need to know about this? Where do you think this is all going?
I think, look, Lululemon, the multiples definitely compressed over the year. And if Lululemon can get product right, and notably in women's, I think they can move forward. They do have great brand equity. They need better execution. So we'll see who comes in 2026. But if they get the right leader, I think Lululemon can make its mark back into, the women's business, which is where it all started.
I asked you, I think I asked you a week ago, like about who the right leader would be. And, I don't want to put you on the spot like that again. But what I do want to ask, if there are any names that are being thrown around in terms of like whispers out there. Have you heard anything?
So you heard on the Newswire today, right? Jane Nielsen, former Ralph Lauren executive. I think she would be a great candidate. She has the expertise to lead a turnaround. She did it at Ralph Lauren. She did it at Coach. I think she would be a candidate that could help Lululemon really turn around and improve execution. Other names, none that I have to share at the moment with you today, but I do think we need a product-led leader to really lead this turnaround.
You think it'll likely be somebody from outside the company?
I would think that is the push.
Okay.
It is always about product, right? But it's gotten to be a much more crowded landscape, Poonam. So it's a bigger hill, I guess, for them to climb, isn't it?
Absolutely a much crowded landscape, but that's why product matters even more, right? These names have brand equity that you're talking about, whether it's Lululemon, whether it's Nike, even if it's their competition, whether it's Alo or Viore, they're now well-recognized brands. But keep in mind that no matter how recognized you are, once the product fails, you do lose momentum with the shopper. So as long as you continue to innovate, it's still got to be product first.
Can I ask you before you go, because I know you guys have been putting out a lot of research, end of the year, you're thinking about what's coming in 2026, just got about a minute or so left. You guys have done a athleisure footwear survey, but I'm just curious, when you think about this space overall, athleisure, what is the company that you think is the one to beat or the one that folks should strive to be?
Oh, that's a tough one. There's a few of them doing the right things, but I would say right now for me, it's still Nike. I really think Nike has deep pockets, which go a long way. And if they have the right execution and the right product vision, they can really put all of those things to work together to continue to lead the way for years to come.
All right. Let's go shopping.
Yeah.
Let's go. I need
I'm
some
ready.
sneakers. I actually do.
Okay.
But I know what I'm going to buy.
Yeah, but are you going to buy ons?
I am.
That's the
I like
challenge
the ones
for
that
Nike.
I've had.
Yeah, that's the challenge for Nike.
Yeah, it's interesting. Hey, Poonam, be well. If we don't get a chance to talk to you before the end of the year, have a happy holiday season, happy New Year.
Okay, so we were talking about what the market is going to do when it comes to those holidays that the president signed via the executive order,
Are we getting
December
more?
24th and December 26th. The New York Stock Exchange commenting, saying that the stock market hours unchanged on December 24th and December 26th. So
sorry, everybody.
Well, I wouldn't say sorry, everybody. I would say sorry to every employee has to work on
Tied to the
days
financial
that
markets?
financial markets are open or closed.
But it'll be interesting to see if other companies do the same thing.
Yeah.
Like, it's not a given. Hey, just a reminder that, of course, was Poonam Goyal, Senior Analyst for E-Commerce and Athleisure at Bloomberg Intelligence, another one of our BI analysts must-reads on the Bloomberg.
Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by the Jewish Communal Fund. New tax laws take effect in 2026, reducing some charitable deductions benefits. Open your JCF Donor Advised Fund now to maximize tax savings. Call 212-752-8277. Two law enforcement sources tell CBS News that an arrest warrant has been issued for a suspect in the Brown University shooting. Developing story. Again, two law enforcement sources are telling CBS that an arrest warrant has been issued for a suspect in the Brown University shooting. Stay with Bloomberg for the latest on this developing story. And the NYSE headline right now on the Bloomberg, the NYSE says stock market hours will be unchanged on December 24th and December 26th. Nike lower after hours right now, selling off after earnings. Nike down 5%. Nike did post better than expected sales in the latest quarter, showing progress in its turnaround efforts, but weakness persisted in China as well as at the Converse brand. Also reporting after the close of trading, FedEx, it did raise the low end of its full-year profit and sales outlook, signaling the company's efforts to slash costs and streamline its delivery networks are bearing fruit as demand improves. The Dow, the S&P, NASDAQ all higher today, with the S&P 500 index climbing 53 points, up by about 0.8%. S&P wrapping up the Thursday session at 6774. The Dow up 65, a gain of 0.1%. NASDAQ up 313, up by 1.4%. 10-year 4.11%, with a 2-year 3.46%. Gold down $7 the ounce, 43.31, down 0.2%. And West Texas Intermediate crude up 0.2, 56.07 a barrel. Bitcoin down 0.8%. Bitcoin at 85,230. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Appreciate it. Well, we talked about this last week, Carol, when we had Surefoot CEO Bob Shea on the show talking custom ski boots.
We did.
Ski resorts, especially the ones out west, are really struggling right now due to a lack of snow.
No snow.
Yeah, so here we are. We're almost in January. Big Sky in Montana, only 15% of the trails are open.
Oh, wow.
Vail, only 18% open. Telluride, 5%. Park City, 4%. This is all according to
unusual for this time of year. You're a skier, so that's unusual for this time of year.
Yeah, this is pretty unusual for this time of year. We'll see what happens. I mean, cold temperatures are helpful, and they've been warm,
You know
unfortunately.
who has snow?
New Jersey?
Some places in the East Coast.
Well, I know a place that always has snow. Let's talk to Joe Hession about it. He's founder and CEO of Snow Partners. He joins us from Big Snow at American Dream in New Jersey. It's indoors, and it has snow 365 days a year because it's indoors. But you guys also operate Mountain Creek Resort, which is outdoors. So first, I just want to get an update from you on Mountain Creek Resort and how that resort is looking right now. What's open, what's not?
Yeah, we're having an amazing start to the season. The whole Northeast is having one of the best seasons in a few years. We have a La Nina type of weather pattern, which typically means cold early. So the whole East Coast is good. Mountain Creek is doing fantastic. We're going to have full connection of all of 4 of our peaks by holiday week, which that's how we measure a great season. So it's early, but it's looking really good, and we're really excited about it.
How many people are showing up? I'm just curious about the kind of demand. We are watching the consumer so closely, and I'm just curious, what are you seeing?
Yeah, that's a great question. We're seeing great visits because of the great snow and the great conditions. And I'll be honest, we talk a lot about what's the economic impact of skiing. Many people, sometimes it's a higher expensive sport. And I'll tell you, in my experience in the industry in 25, 30 years, weather is the biggest indicator. If you have good weather, you have great visits. If you have bad weather, I've lived through the pandemic. I've lived through the Great Recession. And when you have great weather, you have great visits. And we're seeing that on the East Coast overall right now.
That's good. That's good to hear.
So your bottom line saying it's weather related. It has nothing to do with the economy.
Yeah, I spend more time in the fall thinking about, how are the squirrels acting and the farmer's almanac and things like that. I'm more worried about that than the economic situation in the country.
Okay, so Joe, you've got an interesting business because you operate these two resorts, one of them outdoor, one of them indoor. I mean, the one that you're in right now, I've been to this one, and it's a great place with little kids to like introduce them to skiing and to teach them. Talk a little bit about what's going on at the American Dream Mall and just the stability there, because there are a lot of questions about the mall and the financial health of the mall. But are you guys okay, even if the mall as a whole is having a challenge?
Yeah, that's also a great question. We've been here since December 5th, 2019. We were one of the first tenants to work with 555, the people who operate the mall. And we've been successful every year since 2019. We've had constant growth from a revenue side. Our first year of opening, obviously, within 6 months was COVID and the pandemic. So we were a little slow on getting groups up, but now we have great group visitation. I'm very happy with the performance at Big Snow. And this is going into our busiest time of year where we're going to see really great visits. The mall overall, it's funny, back in 2019, I got asked that question all the time. And you might have been the first person to ask me that question in the last 2 years, because as you go through the mall, especially this time of year, it's really, there's a lot going on here, a lot of entertainment, a lot of new tenants have opened up. We're really happy here, and we're really happy about the business we have here as well.
Okay, cool. So where are the people, and that's 365. You're there, you guys are open every day.
Every day. Well, we 364. We close on Thanksgiving Day.
Okay, that's the one day you're not open. How's demand there looking? Because it doesn't matter in terms of snow, because it's all man-made, it's indoor. What does demand look like in terms of, is it cyclical? Is it stronger now than it was? Because that could give us a good barometer of the economy.
Yeah, the most interesting thing about operating a snow dome that's open year-round is everyone thinks that it's going to be busy in the summertime because that's when other resorts are closed. But we're busier in the winter when they could go to other places. So when winter's on people's mind, when snow's in the market, right now we've had snow in Central Park already this year. So that drives tons of visitation, because when it's cold outside, people just think winter, they think skiing, and that's where most of it comes. Springtime is our slowest time of year. Summer, slightly busier than spring, and then fall starts to ramp up with people from all over the country coming to get their first turns on snow.
Hey, Joe, I'm curious, what your cost equation is. We're in an environment where people still talk about everything costing a lot. We were talking with folks, representative of the restaurant industry, how they're dealing with labor and food and lack of immigration, and that is certainly impacting them. What's your cost structure look like right now?
Yeah, I think for us, definitely things when utilities get more expensive here at Big Snow, that's definitely a consideration for us. As far as labor, we've always, since we opened, we strive to be one of the top workplaces. So we've always paid a very competitive hourly wage to our team here. And then for as far as guests and what it costs, at Big Snow specifically, we've tried really hard to take the barriers of why people don't try skiing in the first place. And we tried to take those barriers out of the equation. And those barriers are distance. So we're really close to the population here at Big Snow, but it's also the price of entry. So you can come and have a package for well under $100, and that gets you a less